Session continues to motor higher. Today, we're watching the tariff story, but also, as Evie Hambro is telling us from BlackRock, watch the fundamental demand story around data centres, electrification and all of the rest. And what's next as well? This bellwether of the UK high street lifting its profit forecast again on strong holiday season sales. Will that be all down to their delivery, or is that about the sector? Guy?
We're going to watch that one very carefully. Siemens may be another name that we're going to watch as well into the market open here in Europe, which is now upon us. Tuesday's session is underway. Let's take a look at some numbers and give you an idea of what is happening. We are expecting it to be a little positive, not a lot positive, but a little positive. Certainly not as positive as we've seen out of Asia, but not a bad performance. Again, we're up 1/10 of 1%, 2/10 of 1% for the FTSE 100. A few minors in there. Defence stocks yesterday was the narrative, will be the narrative today. We'll find out in just a second. The CAC 40 inflation coming in line with expectations over in Paris. The IBEX, the outperformer last year, up by 2/10 of 1% so far, but the FTSE 100 appears to be the outperformer. Let's find out why. Tom McKenzie, what's happening in sectors?
On the sector basis right now, basic resources unsurprisingly at the top of the list. Gains of a little over 1%, given, of course, the record pricing coming through from copper, but other commodities as well in focus. You're seeing silver, of course, higher, pretty significantly up more than 2% so far in the session. So basic resources is once again powering ahead, top of the list. Energy following with gains of 0.9%. Retail on the back of the strength coming through from Next. And we have a read across, of course, to other retailers in the UK. Retail as a sector up 0.4%. On the downside, consumer products a little softer by 0.4. You've got 4 sectors so far in negative territory. Tech, interestingly, down 0.1%. We'll see how that adjusts, though, as the other major indexes start to print.
Yeah, it was interesting, the basic resource trade, because, yes, we talked a lot about copper, we talked about gold and silver, and we see some of the silver miners going higher today, some of those names linked to copper, but it was actually a broader surge in metals overnight in the Asia trade, so aluminium, and others also going higher. So we'll continue to focus on that. Also interesting that energy is up by 1%. This time yesterday, we were talking about oil prices being a little bit weaker on the Venezuela story. Then we saw a surge 1.7% higher by the close in the oil price. And so maybe there's a little bit of catch-up, the likes of BP and others trading up by 1.7% this morning.
Novo's up, which is interesting. Talk about price war yesterday in the States. Maybe that's giving that a lift. I want to look into that a little bit more. Some of the banks are doing well. The energy names are up. But on the downside, SAP, the software story, that's interesting.
And we've seen that divergence. And it's something we have a terminal chart showing the divergence between the software names in the US and the chip makers. You're seeing that now reflected in the European session. SAP under pressure. ST Micro gaining 2.6%. So the chip makers performing
Chips go one way, software goes the other way.
Yeah. Is that a theme that continues in 2026? Let's get more and bring in Laura Cooper right now, global investment strategist and head of macro credit at Nuveen. And we've been talking and obsessing about the gains coming through from Asia. What does that tell you? To what extent is that a sustained theme for this year, a reawakening of the animal spirits in the Asian session?
Perhaps that is the case. I think what we're seeing is this AI exuberance that largely dominated 2025 carrying into 2026, and I suspect that's going to continue to be that dominant story looking for the year ahead. But I don't think that's necessarily going to be concentrated in Asia. Yes, there are some components of that that suggest investors want diversification from that concentration risk in U.S. tech. But looking at earnings backdrops, looking at the capital expenditure plans, we really think this is a backdrop where you don't want to bet against the U.S. and in particular that AI trade still leaning into the U.S. large caps, but selectively.
Selectively, still leaning in. So there is a lot of kind of mirroring of the 2025 story when it comes to your view on AI then. How does that differentiate through 2026? How selective do you need to be? And to what extent can the hyperscalers continue to reward in terms of returns?
Well, I think the story last year was this AI enthusiasm, really a catch-all. We saw the technology sector and kind of second-order effects of AI really being beneficiaries. But I think going forward, we're going to see more discrimination when it comes to earnings. How sustainable are those, looking at different pockets? So we think, software, cloud computing, those are going to be the key areas of focus. But I think it all comes down to, tech sector overall in Q3 posted almost 30% year-on-year earnings. We think that momentum can persist, backed by the CapEx. I mean, if we look at U.S. CapEx as a share of overall CapEx, AI is around 38%, whereas if we look at developed markets ex-U.S., it's about 1%. EM is about 16%. That's a significant differentiation. We think that CapEx will translate into meaningful earnings, and that's going to be an underpinning of that AI tech trade, but selectively on those that can prove profitability and the returns on investment from that spending.
Yeah, so that's interesting, Laura. So does that mean the rest of the world has some catch-up to do when it comes to CapEx on AI? Or will possibly this will just be left to the hyperscalers in the United States? Or maybe with the geopolitical tensions in play, maybe not?
Well, I think it's leaning into the strengths of each of the different regions. We certainly saw growth outperform in the U.S., but we're seeing value start to outperform in Europe as well. And I think there is a meaningful case for European equities if you want to bet on some of this growth, this cyclical upturn more globally. We think that Europe is well positioned. We've clearly seen European banks strongly outperform. European banks are cheaper relative to the U.S. And if we think about this backdrop of the fiscal impulse, the rate cuts that we have seen from the ECB, that's starting to meaningfully transmit through the credit impulse, and as well this overall infrastructure and defense spending coming from Germany. All of those factors does suggest this need for diversification, or really more of a barbell, taking on that AI exposure in the U.S. and looking for those regional opportunities elsewhere.
Yeah, it's interesting that since the start of this year, Asia has done really, really well. We started the program talking about this earlier. Then actually in terms of the major regions, then Europe, then the US. And we had a guest on earlier this week who was saying that perhaps US-based investors have not been cognizant enough of the gains that have been made already outside the United States. Sounds like you're leaning more into the US theme, though.
I think because we saw that S&P 500 underperformance really relative to most of the major stock indices last year, it does suggest that there is going to be a bit more of a rotation towards the U.S. and not just that AI trade. I mean, if we look at one of the dominant themes to end 2025, we started to see investors rotate elsewhere. And so we think this is going to be a broadening bull market in 2026. So not as concentrated, I would say, in the AI gains in 2026. And that's going to open up this opportunity set for U.S. investors in the U.S., but as well maintaining that regional global diversification.
Why do I want to buy expensive U.S. stocks when I can buy stocks in Asia that are much cheaper? And yeah, I hear what you're saying about the AI build-out. But the AI build-out's using components from Asia. Like a lot of them come from there into the United States. It's not like they're built in the United States.
Well, and I think the valuation argument is certainly one that's worth monitoring, but we think investors are paying a premium to capture that secular AI theme that's going to pay off in the medium term. Whereas if we look at some of the Asian economies, they have performed well in terms of the tech, but they are more exposed to geopolitical risks, some of those supply chain disruptions. So we think it leans into our story for 2026 around that diversification, but we think there's still a premium that's worth paying up for U.S. large
You said
caps.
medium term. Does AI need to deliver this year? Do I need to start seeing tangible effects, monetizable effects of AI this year for this thing to carry on?
And I do think that's kind of the key risk going forward, right? Investors may have kind of this valuation fatigue. They're continuing to pay these premiums that we may not see those returns. But as I mentioned, looking at the earnings backdrop, I mean, even looking at the S&P 500 overall, including tech, we're expected to see anywhere from 10 to 12% earnings this year. That's continuing on this robust period of these gains. We think that can be sustained, even if we do see that slowing overall in tech. So these companies are showing kind of the signs of those profitability and gains coming through. Maybe we need to see that a bit more materially. But when we think about the AI trade, AI is both the physical layer and as well it's the digital layer. So for investors, it's about barbelling between the two. You want moving on that. One is a fast-moving cycle. It's very earnings-led, sentiment-driven. You want to have that U.S. equity exposure. But I think importantly, investors will increasingly look at that physical layer, the second-order effects, financing the build-out of AI. Those tend to be more long-duration, contracted cash flows, inflation-linked. We think that's probably the greater opportunity set there, while still maintaining that U.S. equity exposure intact.
Do you think we start to see similar credit dynamics in Europe in terms of the fund for the build-out of AI?
I think we are starting to see that overall, but I think that the key focus for us is looking at that infrastructure and defense spending. We think that's going to be a key pillar of growth overall in Europe. So that's going to support even more of the defense companies, the industrials, the banks, and even some of the luxury sectors. I mean, it's not tied to AI, but I think it's just leaning into overall the upswing that we are expecting in overall global growth. I mean, not certainly kind of shooting the lights out in terms of global growth.
But luxury names come back in 2020, despite China?
Yes, at the margin, we are leaning more into that. I mean, we are seeing still a healthy consumer, healthy labor market overall in Europe. We are seeing real incomes continue to rise. And the backdrop where we think, inflation is really at the 2% target, we think that's a meaningful backdrop to have greater exposure to some of those cyclical components in Europe.
Okay, and you think then that if in Germany, if we get the level of spending and the speed of spending that's planned, you think that we might end up with a rate hike in the Eurozone by the end of this year? Is that
It's been a bit of an out of consensus call, admittedly, but we do think against this backdrop where inflation has shown it's settling around that 2%. I mean, in the near term, we could see price pressures dip below that 2% target. But overall, looking at inflation expectations, underlying inflation, we think inflation is relatively contained. And so if we start to see more of this fiscal impulse come through, we think that's going to be meaningful enough to boost growth in Europe to about 1.3% this year. And again, we think that's going to be sufficient to withdraw some of this monetary easing.
I wonder if it depends who leads the ECB, Guy. Maybe she says she's out of consensus, Laura, but maybe Isabel Schnabel's on the same page about the rate hikes.
Rate hikes, yeah. I think she sort of toned it down a little bit, but yeah, there is this kind of overlying. What brings all this enthusiasm to an end? The bubble talk at the end of last year was everywhere. It seems to have calmed down a little bit at the beginning of this year. As we work our way through 2026, do we get to cycle highs in 26? What ends equity enthusiasm? Is it just a mechanical process? Money just keeps getting shoveled into these markets, and therefore markets continue to go higher. What is it that you see on the horizon that will start to slow things down? At some point, we are going to see rate hikes. May start in Australia, may come to the ECB. At some point, the Fed's going to be on that narrative as well. Probably not in 26, maybe 2027. Is this a year that I need to be thinking about transitioning to a new paradigm? It feels like we're coming out of 25 with the same paradigm as we're going into 2026. But how do I think about the year ahead? How kind of early in that process do I need to be? Being early is dangerous, but being late's also dangerous. So how do I kind of finesse this one?
I think it's a really important question because a key trend that we saw in the latter part of last year was investors shifting away from that monetary easing story persisting to one where they were starting to price in rate hikes, whether that was Australia, whether that was Canada, whether clearly Bank of Japan. But that was really the dominant theme in G10. I feel like that's kind of gone under the radar more recently. So I don't think, to your point, that's going to be a meaningful story, certainly in the first half of 2026. I think we can continue to see Fed rate cuts coming through. We have 2 cuts penciled in. We're going to see strong growth come through in the U.S. from tax cuts, from fiscal stimulus. So I think all of those factors suggest that maybe we can continue to grind higher, to your point, to cycle highs. Geopolitical tensions at the margin, I think, are increased in terms of their risks for this year, but we need to see more sustained shock in terms of like an oil price transmission mechanism. But maybe perhaps looking at fiscal deficits. Investors clearly don't have that on their radar. I mean, that's obviously not a clear risk for us at this juncture, but I think it's going to come back on the radar. And one of our key themes in our investment outlook is that fiscal policy will matter more for markets than monetary policy this year. And I think we're going to see that maybe paradigm shift going forward.
Nice to see you, Laura. Thanks for stopping by to see us at the beginning of 2026. Looks like it's going to be an interesting year. Laura Cooper, Global Investment Strategist and Head of Macro Credit at Nuveen. Take a look at what is happening with Novo Nordisk. So this is today. Okay, so it's up by 4.5% today. It was up by, I think, circa 5% yesterday. On a two-day basis, and I just made sure I was checking this, we're up by 9.6, nearly 10% on Novo Nordisk in 2 sessions. It's launched its obesity pill in the United States. There's also a pricing factor around that as well. The market seems to be absolutely loving this. Obviously, a tough time back end of 2025, obviously with the whole M&A story, but it seems to have surged into 2026, as I say, up by nearly 9.6%. Everything else is red, and it's interesting to see some of the defence names turning over a little bit. ASML also turning over a little bit. It's had a cracking few days, but it's showing some signs of weakness this morning as well. Let's start with those chip stocks and go over to Chloe Melly.
Good morning, Guy. Indeed, we are seeing some positive movements, some green across the screen here for chip makers, and that it follows a kind of broader AI enthusiasm. But we also had a microchip over in the US boosting its forecast. And for names in Europe that are really exposed to that auto and industrial end markets, we're thinking particularly of Infineon and ST Micro. That is some positive read across, and therefore we are seeing those 2 stocks in particular move about 2% this morning. Moving on to InPost, which is a Polish logistics firm. It said that it had received an indicative proposal for the potential acquisition of all the shares in that firm. And so we are seeing a really impressive move this morning for that company, and we are up almost 18% at the open. Moving on to Adidas, and there we are seeing some weakness. Adidas was double downgraded by Bank of America, analysts saying that the company will see lower growth going forward, and that investor interest in that sector was waning. And we are seeing quite a lot of weakness in those shares this morning. We're down about 5.7% for Adidas. And finally, Ocado was placed on positive catalyst watch by JP Morgan analysts, saying that fundamentals were improving for the company. It would see more operational stability after quite a lot of setbacks, including the biggest US customer Kroger pulling some of those sites, closing some of those sites operated by Ocado. But it seems that now the company might be back on track, and we are up 6.4% this morning.
Thanks, Chloe. Equities reporter Chloe Melly. And sticking with the retail theme, Next shares are moving higher this morning. More on what's fueling the optimism behind that retailer, giving us an early take of how things have gone for UK retail, perhaps, over the holiday period. More on that next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything. Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
The
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jemana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Tuesday morning, good morning, 18 minutes past the hour. This is what the markets look like, let's call it 19 minutes past the hour. Actually fading a little bit, not quite maybe so positive as they first looked first thing this morning, as we see some of the continental markets beginning to drift off a little bit. The London market's having a slightly better day. There's some interesting stock stories out there that are definitely worth focusing on. Novo Nordisk is one of those, Adidas is another one of those. The chip story is beginning to fade a little bit, which is interesting after some really positive performances that we've seen so far this year. But a more muted session maybe beginning to emerge here in Europe.
Yes, indeed. And one thing that's not been muted, though, has been the performance of the Next share price. UK Retailer Next has raised its profit forecast for a fifth time this financial year after sales rose more than expected over Christmas. Let us speak now to Bloomberg's global business reporter Jennifer Creary, who's got details here. Now, Next seem to be masters of this kind of under-promise and over-deliver and raise their expectations. So let's talk about what this result means. Tell us about the results and how this sector has fared over Christmas.
Exactly. So this is very characteristic of Next to consistently upgrade its pre-tax profit guidance. So now it's expecting pre-tax profit of almost 1.2 billion, and it's worth noting that a lot of this growth is coming from overseas, so less so in the UK. So overseas sales up 39% over the Christmas period, UK sales up 6%. So that's really giving investors confidence that the company is on the right track, but perhaps more of a muted picture for the UK retail scene. Consumption still down. Next also warning that that sales and profits are expected to grow at a slower pace next year. So perhaps, a strong Christmas season for Next, but perhaps not stellar.
Yeah.
So the picture for the UK is not quite so good. 6% doesn't sound quite so positive. And that sounds okay relative to the rest of the sector. Wolfson continues, like Lord Wolfson continues to kind of bang on about his concerns about the UK. Do these numbers kind of justify that? He's doing well internationally, but he's not doing well domestically. So what is the picture in the UK broadly?
Yeah, so CEO Simon Wolfson has said for a while that the UK consumption landscape is going to be pretty muted, and he's blaming that on various factors, rising employment costs, higher national minimum wage, and that's really affecting how much consumers are willing to spend. One other data point that came out overnight was BRC figures, British Retail Consortium figures, that showed that while non-food inflation was down 0.6% in December, for food inflation that was up for the first time since August. It's up 3.3%. So it's going to show that for the high streets, supermarkets are really bearing the brunt of a lot of those cost pressures.
Interest rates, arguably interest rates will start to have a broader impact. So that takes a bit of time. Cuts will come through. Maybe we get another 1 to 2 cuts from the BOE this year. What is the outlook looking like for the UK consumer then at this point?
Yeah, so it's a bit of a mixed bag. So the BRC is warning that in 2026, food inflation will remain quote-unquote sticky. And also, of course, Next saying that consumption is meant to be more muted in 2026. So it's a bit of a mixed picture. So later on this week, we'll have more trading updates. We've got the UK's biggest supermarket
reporting about Next benefiting actually from the cyber attack on M&S. So we'll get the M&S update later this week alongside Tesco's as well. Jennifer, thank you very much indeed. A touch there in terms of the health of the UK consumer, with Next coming in with a stronger than expected print and an upgrade in terms of the forecasts. Despite the challenges here in the UK economy, Bloomberg's Jennifer Creary breaking the numbers down for us. Let's get back to the tech story, the AI story, of course. NVIDIA CEO Jensen Huang saying that the company's highly anticipated new AI chips are nearing release. Speaking at CES in Las Vegas, Huang said customers will soon be able to try the Rubin semiconductors, which are expected to speed up AI development.
Today, I can tell you that Vera Rubin is in full production. This is a Rubin pod, 1,152 GPUs in 16 racks. Each one of the racks, as you know, has 72 Vera Rubin, or 72 Rubins. Each one of the Rubins is 2 actual GPU dies connected together. So this is it. This is NVIDIA today. You know, we mentioned that we build chips, but as you know, NVIDIA builds entire systems now. And AI is a full stack. We're reinventing AI across everything from chips to infrastructure to models to applications. And our job is to create the entire stack so that all of you could create incredible applications.
NVIDIA CEO Jensen Huang, and of course Guy Johnson's been obsessed by Jensen's new shiny jacket. But as well, it's the full stack that I think is really important from that soundbite that we heard from Jensen Huang, emphasizing that they're not just playing in terms of the chip space, but the networking as well, and that they're starting to see a push beyond the chatbots into enterprise. There's been a lot of push around sovereign AI. Jensen Huang's been leading that. This year, it seems, it's consumer hardware, it's robotics, and it's enterprise and partnerships with companies like Siemens.
It was Anna, not me.
Who was obsessed with the jacket? I was. And now the team's just planted the idea of what costs more, the jacket or the array behind him. I'm sure it's the array behind him, but I don't know where the jacket's from, so who knows?
Yeah, I suspect it's somewhere very expensive. It looks very expensive. The interesting story here is the fact that, yes, the emphasis was on chips, but he's talking about it being a networking company now. He very much kind of sees it as that narrative. But he was also pushing the idea that this is a robotics company too. And that really is where he sees the future now coming. This is what he had to say when it comes to the robotics story, particularly when it comes to autonomous driving and all those kinds of stories that we're working towards.
Mayo does something that's really special. Not only does it take sensor input and activates steering wheel, brakes and acceleration, it also reasons about what action it is about to take. It tells you what action it's going to take, the reasons by which it came about that action, and then, of course, the trajectory. All of these are coupled directly and trained very specifically by a large combination of human-trained and as well as Cosmos-generated data.
Is it going to be good enough, though, to do autonomous driving? Or is it just going to be kind of make all the aids that we get used to now better? Are we actually at the point where this stuff can be trained to deliver real world situations that will allow autonomous driving?
This stuff seems, the things that Jensen is talking about there, the product from NVIDIA seems to not be at the same level of autonomy as we see from other players who are already on the roads. And Jensen's saying his product will be on the roads in the first quarter in the United States. They're kind of catching up, but who knows who wins in the end.
And it is a gradient to the point in terms of where we get to fully autonomous. That's not happening this year. Of course, if you're living in San Francisco, you're very used to getting into Waymo. Waymo comes to London this year. Wave AI, which is based in London, starts this year to roll out as well. So this is a pivotal year in terms of the gradient towards more autonomous vehicles, and NVIDIA wants to play that place.
And later today, Bloomberg's Ed Ludlow will be sitting down with NVIDIA's Jensen Huang, who will appear on stage at CES with the Siemens CEO, Roland Busch. So that conversation will be later. This is Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in dubious to a controlling state. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
This is the opening trade, 30 minutes then into today's session, building on the strong gains that came through for European stocks yesterday, of course, up 0.2% so far across the benchmark. A bit of divergence, though, when it comes to the UK, the performance of the FTSE 100 versus its European counterparts. A little bit of pressure over in France. The CAC Quarante down 0.2%, a little bit of softness in the DAX as well, off by 26 points, of course. The defence names that came through very strongly yesterday, you're not seeing similar gains in that sector today. Next, and the next effect is being felt, the FTSE 100 up 0.5%. Guy.
Let's talk about where we are in terms of the internals. Volume's actually a little bit light, which is interesting, after a strong start yesterday. Reasonably balanced in terms of the up and down. 281 up, 216 down, so a slight bias to the upside, but not really by much. Let's talk about some of the single stocks, though, because this is where life gets really interesting, I think. Novo Nordisk, really strong two-day performance for the Danish company. As you can see, it's up by nearly 5% today. Similar numbers being generated yesterday. It's up by circa 9% over 2 sessions. Launching the pill, weight loss pill in the United States, plus kind of pricing it aggressively. The market seems to really like this, and the stock is absolutely flying on the back of this. Yesterday, we saw actually some of the Swiss names, particularly in the pharma space, down. We're reversing some of that. The banks are also doing relatively well as well. HSBC is emblematic of that. It's up by 1.1% this morning and doing relatively well. Similar story to what we saw last year. The tech story is really interesting here in Europe this morning. SAP is down by 1.6%. ASML is also fading after a strong start. It's beginning to give back some of that sort of early chip ground. So that sort of software chip divergence is beginning to fade a little bit, maybe. And 3 stripes and you're out, apparently. Adidas down by 7.36% this morning. We've got a double downgrade coming through from Bank of America. And Adidas does not like that in terms of the stock performance, as you can see, down by 7.3%, as I say, Anna.
Yeah, absolutely. Weighing on the sector. Let's get an update on some of the other news flow that we need to cover for you this morning. Delcy Rodriguez has been sworn in as acting president of Venezuela after the capture of Nicolas Maduro, flashing warning signs that a new wave of repression has begun. At least 7 journalists and members of the press were detained on Monday. This while in the United States, Nicolas Maduro pleaded not guilty to narco-terrorism charges in a New York court. The French President Emmanuel Macron will host Ukraine's allies in Europe and the United States for talks today in the hope of finalizing a security agreement which could see American boots on the ground after the end of the conflict with Russia. The Ukrainian President Volodymyr Zelensky says the focus of the talks will be on post-war recovery as well as U.S. security guarantees, and that the discussions could last a day or 2. China has imposed export controls on all dual-use items to Japan for military purposes. The country's Commerce Ministry says the move is to safeguard national security. The new ban intensifies a dispute between Asia's two largest economies over remarks Japanese Prime Minister Sanae Takaichi made on Taiwan last year. Tom.
Okay, let's get to the public markets and deal activity as we think about just how much catalyst there will be for this year. Taking a company public is usually the culmination, of course, of years of effort to ready a privately held firm to sell shares for the first time. Stock exchanges are now pulling out the stops to make the first day of trading a day to remember. Let's take a look at what they are up to.
An IPO is often the pinnacle of success for executives. There are speeches, hugs, even tears.
I achieved my dream.
The champagne and confetti and countdown clocks might look like a nice party, but it's serious business too. Listings have been dwindling in recent years in the aftermath of COVID and rate hikes to tackle inflation. Exchanges have been competing for a shrinking slice of that pie, and a good show is part of the marketing.
Part of getting the message out is a way that we effectively live the stories that the companies execute through the medium of an exchange. And yes, of course, it reaches out to companies which may be within an IPO pipeline.
Asia has dominated listings for the last few years, and its listing ceremonies mix tradition with pomp and some fun. In Hong Kong, there are gongs of different sizes.
So there's the standard size gong. We also have a bigger gong or a mega gong. That's for very special and larger companies listing in Hong Kong.
So, little surprise then that when China's CATL sold shares in May, raising a whopping $5.3 billion, no ordinary ceremony would do for the world's biggest maker of EV batteries. The Hong Kong Exchange wheeled out its mega gong. With CATL shares handily beating global benchmarks since the listing, fortune has indeed been kind to the company. As Europe and the US look to rival Asia by claiming more new listings, the pizzazz, showmanship and company mascots show no signs of being canned as trading gets underway.
Well, let's stay on the theme of IPOs and deal-making and bring in Matthew Wiltz, EMEA co-CEO at JP Morgan. Matthew, thank you for joining us. I believe you and the team are on the road round, pre-Davos tour, talking to clients, talking to customers, talking to the team. What is the mood, Matthew, when it comes to deal-making prospects in 2026?
Thank you, Tom, and thanks, Anna and Guy as well for having me this morning. So, clearly, let's say the sentiment is positive, and we see the pipeline that we have both in M&A and in IPO is very robust. We had a very strong year last year outside of the, let's say, 3 months post-tariff announcement. But since the month of August, we see another peak of activity, and we think that 2026 should be a good year for IPO again. There is strong demand from the market. When we listen to clients as well, there is a real willingness to come to the market and benefit from that window. As you said as well, we are in the middle of doing a European tour. So with some of my partners, we are traveling across Europe this week and Middle East next week, trying to be with clients on the early part of this year as well, and make sure that we stay close to them, we listen to them, and we try to help them to navigate into that difficult geopolitical landscape. Markets are doing well, but clearly the geopolitical points are clearly more difficult to anticipate and navigate. But we are bullish, to your question, clearly, on our capacity to deliver more IPO this year.
Well, Matthew, you bring in the geopolitics, so let's go there, though. And of course, the unprecedented events in Venezuela. Has that changed the view, the team's view, the House view? How are you thinking about that in terms of the impact, the economic impact, the risk impact, maybe the impact on deal making as well? Has it adjusted your outlook for 2026 at all?
So this one is difficult to assess right now. That just happened. We see that when we look at the market and the performance of the market yesterday, equities did perform pretty well. We look at the issuance as well, because we expect a strong January as well for issuance. Just yesterday in the US, we issued more than 61 billion of bonds, not JP Morgan only, but the markets as a whole. and credit spread are doing extremely well, even if those volumes are impressive. When we look at the Brent, yesterday was relatively stable. We have a target at $58 for the end of 2026, so decrease from where we are at the moment. But clearly that was pre-Venezuela. We have to reassess. We are looking at that with our research team. We don't expect, based on the market reaction, any significant drop. Now, when we analyze the situation, everything will depend on how strong the US will be into the day-to-day politics in Venezuela. Because if you look at it, Venezuela is one of the biggest producers. So if you take Venezuela plus the US plus part of Guyana as well, that means that if the US are really driving that, they're going to potentially influence 30% of the crude production. So that definitely will have an impact, but it's very early stage and difficult to assess for the moment. But that's something that we monitor every minute now.
Okay, good morning to you, Matthew. So the geopolitical situation very much in flux, under review, as you describe it. Clearly the fiscal impulse here in Europe, thinking about your EMEA geography, the fiscal impulse is certainly an area of focus. And I noticed that you are opening a new digital bank in Germany this year. I wonder what your hopes and dreams are for that fiscal push in Europe and what it can deliver for banks and for JP Morgan.
So I think that, and I'm a European citizen. I've been at JP for 25 years, but I've been always in Europe, and I'm a strong believer in Europe and the fact that we can do more. When we listen to the Draghi report, and we are definitely 100% aligned to what a stronger leader in Europe, Europe can do better. And we live in a world where we have to fight against the US, Asia, part of the Middle East as well. So I think Europe getting together is definitely a must. So, and you could think that it's counterintuitive for a US bank to say that, because you could think that we would benefit from more, let's say, fragmentation in Europe, but this is completely wrong. And Jamie Dimon has been very vocal about it as well. Having a strong Europe, having more cooperation, having stronger leaders, but that means that in Europe, every country needs to accept that they may win in one industry if we have more M&A, and maybe France will have more finance or automaker or healthcare. Maybe Germany will do something else, or Italy or the Netherlands. But we need to make sure that like authorities and companies are allowed to for M&A and cross-border activity. And if we have stronger players in Europe, that's going to be the only way that we're going to be influential, let's say, globally against the big player in the other regions.
And Mathieu, one of the areas where many have been trying to craft some cross-border M&A has been within the banking sector. We heard from a European commissioner recently, Mathieu, who was saying that actually it is US banks that manage to navigate the fragmented banking landscape across Europe better than perhaps the European ones do, because they are partly because they are outsiders. I mean, does that chime with your experience? Do you find, as Americans in Europe, it's relatively easier to navigate that fragmented banking landscape?
I would not say that. I think that when we talk to clients, and I think most of the feedback that we receive from clients is like several of the American banks, and JP Morgan being the first one, we've been consistent and we deliver like very strong support and services. Even during volatile periods, during global financial crisis, during COVID, we were always there, and we never scale back from our positions. And we have that role across all countries in Europe. The issue that we see in Europe for some of the European players is like, it's very hard for them to be strong in every country. Many of them are very strong in their country, but it's very hard to have a presence and to be a leader in every country. And that's why we think that we need more M&A, and we need for Europe to have stronger player and cross-country player. So you could see that in a way that would go against our position and maybe against our market share. But we think that having stronger leader at the end will increase the wallet and will be better for the business overall for Europe. And as JP Morgan, in that current environment, we think that we would be alongside some of the strong European banks, having, let's say, most of the market share and do a good business in that environment. So that's why we are so pushy for more consolidation and more cross-border M&A in Europe as a whole.
Yep. Mathieu, good morning, it's Guy. couple of questions on the credit market. How much of what you guys are going to do this year is going to be data center origination in credit? How different does the market in Europe look compared with the United States or Asia? What is the story here in Europe when it comes to that segment of the market?
So, I mean, clearly it's been a big theme last year, both in Europe and in the US. But AI, data center financing, we've done a lot. There is strong needs as well, also in AI for CapEx expenditure. That's one place that we like. We want to continue to do business. I know that there is some noise about the fact that we could have a bit of a, let's say, boom at some point in the area. That's why we need to be cautious as well. And I think that's the nature of our business, is to be with clients, alongside them, and give them liquidity when they need to do investments, capital expenditure, but also make sure that we choose the right partner. And I think that based on our experience, because we've been in the credit market for more than 200 years, from private to public, we have that experience. And I think that's the benefit as well for clients who work with partners like JP Morgan, is that we can deliver on the whole range of products. If you want to do private and more private transaction with like very different set of investors, we can deliver on that. If you want to do more public transaction, broadly syndicated, we can deliver on that. And we have the experience, and that's why we are trying to demonstrate, because that market is changing with newcomers as well. So we have to fight to protect our market share for sure.
I'm getting the sense here that maybe you think that some people aren't being careful enough in this space. Clearly, these are not JP Morgan clients, of course not. But do you think there are others that maybe aren't being quite as doing their due diligence as well as they should, maybe?
I think it's maybe, I mean, for sure, and we see that every day in the market. We are not trying to hide as well, and I think when we published our results a quarter ago, I think Jamie has been very open as well and transparent about the situation we had with Tricolor in the US. So I'm not trying to hide, and I think issues can happen to everyone. I think that was also a good reminder that for all of us internally, that we need to stay highly focused. We need to double check on everything. I think we live in a market today where there is an excess of liquidity offered to the market overall. So that's why we need sometimes to refuse to do transaction if we think that especially covenants are not there and do not give us enough comfort. There is also a big change, is that more and more co-investors are coming with us or with some of the private credit players. So we were already doing it for us, but having co-investors, that put even more pressure on us to make sure that we do the right due diligence and that we do invest and lend only where we are 100% comfortable.
Okay, scrutinising the covenants. A year, of course, expected to see strong demand for IPOs and M&A. Really appreciate your time. Matthew Wiltz, JP Morgan's co-CEO of EMEA, with a view on the private credit space as well and how that ties into the demand around data centre build-up. Matthew, thank you. Coming up, how much return has Michael Platt's firm, Bluecrest Capital, added since he ditched clients to trade his own money back in 2016? The answer when we come back. This is Bloomberg.
Here is understanding. This digital assets have the ability to change the payment landscape of the world. And we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. Because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back. Now, before the break, we asked how much return has Michael Platt's firm, Bluecrest Capital, added since he ditched clients to trade his own money back in 2016. We can reveal the answer, just a mere 7,858%. That is the gain on the Bloomberg calculations again since 2016. According to sources, the firm gained 73% just last year. A lot of those gains coming in the early months of 2025 when, of course, President Trump's tariff announcements sent markets haywire. Didn't have to deal with redemptions and client pressure, of course, trading his own money. Bluecrest's track record offering a rare glimpse then of how managers can perform when they remove some of those constraints outside capital. Not a bad print over that number of years since 2016 and gains of 73% just last year alone. Guy?
They've got skills. Definitely give them that. That's a big number. That's a very impressive number. I'm not sure how I transition from that to this, but I'm going to do it anyway. The French president this morning, we've seen some pictures already as the Elysee hosting European leaders and US officials for talks today. The hope is that they will finalize a security agreement, which could see American boots on the ground in Ukraine after the end of the conflict with Russia. We're joined now by our global defense editor, Jerry Doyle, to talk about this. The situation is evolving, not just in Ukraine, where we're watching the situation very carefully, but you've now had Venezuela to kind of fold in what Trump has done there and his threats regarding Ukraine. And they all interact and they all have an impact on each other. And I'm wondering how the situation in Venezuela and Greenland is affecting Ukraine.
As with anything that happens with Trump and the U.S. military at the moment, it's impossible to say, I think, definitively what the impact is going to be. But broadly, if the U.S. is considering or discussing or proposing to its European allies putting American troops on the ground or providing intelligence or satellites or other means of sort of protecting Ukrainian sovereignty after there's a peace plan, the actions in Venezuela, which seem to have been done unilaterally, and of course the threats against Greenland to take it by force if necessary from a NATO ally, certainly seem to undermine perhaps the credibility of the U.S. acting in concert with European allies to protect Ukraine when it seems willing to sort of openly propose threatening another NATO member over its own territory.
Yeah, it would seem to perhaps undermine the spirit of cooperation that effort would require. So Jeremy, and how seriously should we take then President Trump's calls for the need to control Greenland. It's something he's returned to. He's appointed somebody to run this from Louisiana and to look at it very seriously, prompting the leadership in Denmark to make some really bold calls about what this will mean for the future of NATO.
Indeed. I mean, the Danish government said outright an attack on Greenland would mean the end of NATO. And indeed, NATO doesn't have any provision baked into it for one member attacking another. It's not something that was ever considered, because the genesis of NATO was, of course, to provide a backstop, a force to counteract the Soviet Union during the depths of the Cold War. Now, the U.S. already has a base in Greenland, Patuxent Space Base. Apologies if I mispronounced the name there. It's a Space Force base, and it's been there in various forms for a long time. What the U.S. wants outside of that is not clear. How far Trump is willing to go to obtain that is also not clear. But clearly, the rhetoric that's happening right now is causing a lot of instability with U.S. allies.
Okay, Jerry Doyle. Yeah, he gave a 20-day. Was it 20 days? Come back to me in 20 days. President Trump said when it comes to the question of Greenland, but reiterated that the U.S. quote needs Greenland, and they had a response from the Danish Prime Minister, of course, yesterday. Jerry Doyle, our global defence editor, with some of the implications of that remarkable posture being taken by, of course, the White House right now. Here's what else to think about then across today. Zelensky then the meeting, as we discussed, with US and European leaders in Paris. That is currently happening. Of course, we know that the Canadian leader is there as well, Mark Carney, along with others, to discuss those security guarantees and trying to nail down the commitments from the US. Later this morning, European and UK final PMIs. At 1 p.m. UK time, we're going to get German CPI. And at 1 p.m. as well, UK. And at the same time, we're going to get the Fed's Barkin's going to be speaking on a week, of course, when we get more detail in terms of the labour market of the US, with job openings on Wednesday, tomorrow, and then non-farm payrolls, of course.
And, of course, a helping of tech with CES in progress. Let's talk about these markets. Valerie Teitel is with us once again to close out this hour of programming. Valerie, we have spoken to guests who say that the conversation around the Fed is not going to be as important as the fiscal narrative this year. I wonder how that sits with you, thinking about the Fed speakers we've got coming up.
Look, I think that could be a very true. If we get unemployment ticking back down to 4.5% on Friday, that could really cement the Fed being on pause until the new Fed chair gets in around May, and we have that June decision. So we could be looking at the first half of this year where essentially monetary policy isn't really in the front seat for markets. It's all about AI. It's all about fiscal spending on a global scale. Germany, Japan, and the U.S. Leading markets instead of the Fed. Now, if we look at what's priced in, we really don't have a lot priced in for January. But if we do get a non-contentious non-farm payroll report on Friday, I think you start to get markets contemplating a Fed really on pause until the summer.
The message from the commodity market is inflation's coming. Is that what we should read into copper this morning?
Well, I mean, we will get the inflation print, the consumer price inflation print next Tuesday. Now, seeing how inflation is going to be feeding into these markets, I think it's really more down to tariff-induced inflation and whether that's behind us rather than commodity-induced inflation. I know you're smirking at me. But I do think that there will be a moment when the market does decide that tariff-induced inflation is done with. That is the risk, I think, here for seeing a decent bond rally, for seeing downgrades to inflation expectations when it comes to 2026 and perhaps opening up the door for more Fed easing. That, to me, is kind of the risk scenario of where we could be headed, not necessarily the base case for markets.
The risk scenario, because the markets may decide that the tariff impact is done when maybe the tariff impact has shored up prices at a certain level, or that they've been stored up and they come through later in the year. Is that?
Look,
that's the risk on the tariff story.
I mean, so what we definitely have had some inflation impact when it comes to tariff already. It's just whether the market is going to decide all at once that perhaps there is no more to come. I think that we've had many economists kind of push out their expectations for when it might come. Those who are worried about inflation say that it still has a few months to come in, but it could be a snap decision in the market all of a sudden when we decide that that's not a risk for 2026.
Valerie, thank you very much. Valerie Teitel, our markets reporter. Lots of tech to come. Bloomberg's Ed Ludlow will sit down with NVIDIA's Jensen Huang. That is later on in programming. Don't miss that. This is Bloomberg.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
A new leader is sworn in Venezuela as Nicolas Maduro and his wife plead not guilty to narco-terrorism charges in New York. The Danish Prime Minister warns that a U.S. attack on Greenland would be the end of NATO, but says Donald Trump's threats should be taken seriously. And the chief executive of NVIDIA says production of its next-gen AI chip is on track, but there's competition in the wings in the form of a new chip unveiled by rival AMD. So there is, as you well know, a lot going on this Tuesday morning. Equities extending the New Year rally. Investors, I guess, rotating into regional stocks, may be drawn by more attractive valuations and stronger growth prospects. But if you look at investors continuing to add stocks, some say it's a bit strange that they're largely unfazed by tensions in Venezuela. You can see the U.S. 10-year yield at 4.1730. Keep an eye, of course, on copper. This goes back to some of the tensions that we're seeing in the south hemisphere of the Americas, 13,266. And this is the opening trade in Europe. So we're 1 hour into that trade. Let's have a look at what the CAC 40 and the FTSE MIB are doing. You can see the CAC down some 0.3% at the Elysee Palace in Paris. Mark Carney, the Prime Minister of Canada, just arriving, and then the FTSE here in the UK gaining some 0.5%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Delcy Rodriguez has been sworn in as acting president of Venezuela after the capture of Nicolas Maduro, flashing warning signs that a new wave of repression has begun. At least 7 journalists and members of the press were detained on Monday. Meanwhile, Nicolas Maduro says he's an innocent man after pleading not guilty to narco-terrorism charges in a New York court. Now, the raid on Caracas over the weekend has put Danish officials on alert, on high alert. The Prime Minister, Mette Frederiksen, warns that the NATO alliance would end if the U.S. were to attack Greenland, and says Donald Trump should be taken seriously.
Firstly, I believe that the US president should be taken seriously when he says that he wants Greenland. But I also want to make it clear that if the United States chooses to attack another NATO country militarily, then everything stops. That is, including our NATO, and thus the security that has been provided since the end of the Second World War.
With us now, Christopher Sabatini, Latin America Senior Fellow at Chatham House, and Hugh Gimber, a Global Market Strategist at JP Morgan Asset Management. Thank you both for joining us. Honestly, what is going on? I mean, it's been like, quite a couple of 3-4 days. And I guess, Chris, the question is, should we have been expecting it? It's not like the Trump administration has ever made any secrets that they wanted national security, assets and strategies.
We've seen this happen over the last 6 months. Donald Trump has steadily built up the U.S. naval presence off the coast of Venezuela using increasingly inflammatory language, but with a very changing narrative. First, it was narco-terrorism. Then it was just removal of Maduro, which it was all about. We knew that. But we knew once that ramp up had started, they didn't achieve the sort of palace coup that he was hoping for, that eventually there would have to be some kinetic action, as they like to say now in the Defense Department, that would remove Maduro. It was successful. And here's the issue, as you're saying about Greenland and other places, I think Trump is going to feel emboldened. This was, by his measure, a very successful mission. Now, whether this will extend into the democratization and the opening of the markets in Venezuela, we'll have to see. There's a long way to go still, especially with the vice president who has a checkered past at best. But for Donald Trump, this was successful. So Greenland, Colombia, Cuba, truth be told, a lot's on the table. I doubt he would invade Greenland, but clearly he's feeling a little bit intoxicated by his victory.
Yeah, and if you actually listen to his word, he seems to say, look, it's next, and, take me seriously. This is what he says, not even the Danish prime minister. Hugh, the market is cool as a cucumber. They're just looking at AI, looking at, what AMD and NVIDIA said, and they don't worry about sovereignty and all of that stuff.
I think that is the right reaction for now. Whenever you're dealing with a geopolitical issue, markets have been taught very clearly over recent years that until you get to the point where there is an economic impact, there should not be a major market reaction. And when we look at Venezuela, we know it's a very resource-rich country. We also know that oil production capacity has been damaged extensively over recent years, and therefore there is no immediate prospect of a big change in oil supply, and therefore there is no immediate prospect of a big change in the global economic outlook, which is strong for 2026. So obviously, geopolitically, this is a very important issue, but for the markets, I think the right reaction so far has been to broadly look through this story.
I mean, if you're Saudi Arabia, if you're China, would you not say, actually, I want to diversify away from U.S. assets because this doesn't feel right?
Well, that's already been happening. That, for me, was one of the big stories of last year, where we were all talking about the build-up in AI, sentiment, and all of the concentration of the U.S. market, where a broadly regionally diversified portfolio was already outperforming in 2025, with the U.S. market lagging. And so I think this probably does add to the incentive for global investors to be looking elsewhere around the world. But that case was already rock solid based on what we see as broadening global growth, broadening by sector, broadening by region, and therefore investors already wanting to embrace a better regionally diversified portfolio.
And Hugh, I want to ask you about AI and, of course, some of your macro views more extensively. But, Chris, when you look at what's happened in the immediate aftermath, right, of that really stark removal of Nicolás Maduro, what happens legally? I mean, there's a number of questions of whether oil companies can just, go in and kind of take over. What are you asking yourself?
Well, quite frankly, there's a lot to do, both in the terms of the regulatory framework that has been developed over the last 20 years of first Hugo Chavez and then Nicolás Maduro, a whole series of basic regulations that require any international investors in the oil industry have to partner with the state oil company PDVSA. We did an analysis in 2021 of the current state of the regulatory legal framework compared to the competitive set of Venezuela's oil-producing countries. The truth is, first of all, there needs to be, some are estimating at minimum $100 billion worth of investment. Others, we estimated about $200 billion worth of investment to get it up to speed. But then you just have this entire tangle of regulatory reforms as well as infrastructural needs, everything from basically upgrading the equipment to upgrading the ports and other things, and even the electricity that services those areas. So there's a lot to be done. This is not a matter of just turning on the spigot and filling up oil barrels and pushing them back out into the market.
Chris, yesterday I went back and actually read the 35 pages, whatever, of the national strategy paper that the White House released in November, and it was very clear, if you read it carefully, that they talk about the southern hemisphere of the Americas as belonging to America, more or less. Do you think Greenland is next, or is that really a step too far? I don't know what's real or not anymore.
Yeah, I think that's true of a lot of people right now, and we do have to separate sort of what is the bluster from what is the reality. In this case, I do think in the case of Greenland, despite some rather immature Twitter posts that have happened, I think this is really a negotiating strategy for Trump. I can't imagine him invading Greenland. I mean, it would be against an ally, but also, quite frankly, it would just be difficult, even more difficult to justify. Greenland's not governed by an illegitimate president as Venezuela was. I think this is sort of going back to Trump's days as a real estate mogul. This is, you make extreme demands and then you bargain down from those. And I think that's where he's going with this. So maybe control of minerals, maybe more expanded U.S. military presence on the island. But it's difficult to conceive, although there are a lot of things that are happening right now that are difficult to believe would have happened, say, 2 years ago. But it's difficult to conceive of American invasion of Greenland.
How do you diversify a portfolio geographically, given all of these unknowns?
Well, I think you focus on where we do have confidence. You look at Europe as a good example here, where consensus expectations are low, growth is already on the up, inflation is in a good place. And you can look at that region, you can look at the stock market there, where investors, I think, are still deeply skeptical, and yet you have none of the geopolitical uncertainty that we're talking about focusing around the US administration. So obviously we can start to think about impacts on Russia, Ukraine, and how the conflict in Venezuela might feed through into knock-on impacts there. But broadly, the markets, I think, have already moved on from that because, again, the economic impact and the commodity disruption that we saw heavily in 2022 is broadly already behind us as well. So we need to separate very carefully between what are geopolitical and, to an extent, humanitarian questions, which are very serious, versus the market impact, which will all come back to economics.
But Hugh, for example, inflation. I mean, the market's largely moved on from inflation because of tariffs-induced, inflationary pressures. Are they right? Because we're also seeing wage growth creep up a little bit in the U.S., so maybe something to keep an eye on.
Yeah, I mean, wage growth sounds like a much less exciting topic, let's be clear, so far this year. But I think it is absolutely essential for 2026, because it's the difference between the Fed being able to look through above target inflation and needing to take it more seriously. We see the moves in copper so far this week and the inflation pressure that could start to build. If the Fed's looking at inflation that's being driven largely by commodities, it can ignore it, because it can say, look at the labour market, think about our dual mandate, and therefore we can deliver the easing that the markets are expecting. When you start to see labour markets tightening up, wages picking up, then the Fed would have to think very differently about some of these moves in commodity markets. So wages, I think, are absolutely critical.
I mean, we're also expecting a new Fed chair. We have a couple of names. It hasn't been announced. We're expecting it now, but the White House is distracted otherwise. Does it make a difference to the market who actually is in charge? Because so far, again, they've looked through that.
I think all of the candidates on the table are fully credible, data-driven candidates that the market would take very seriously. I think it's more about the economic backdrop that they are working within. So the markets, I think quite rightly, have said we now have a Fed which is on pause for the foreseeable future. No need to move too quickly over the first few months of the year. But let's think more seriously about the second half. And we do see interest rates coming down, despite the fact that we have above-trend growth in the US and above-target inflation. Broadly, that's a pretty good environment for stocks, provided that the market can get its head around this notion that the labour market continues to cool. So that I do think is absolutely essential.
Chris, China's very, very crucial to all of this. I mean, do they just stand by and look at the U.S., take a lot of South America without retaliating or doing anything about it?
I think, well, first of all, China will be hurt. It has a pretty large, relatively speaking, loan portfolio for Venezuela, in which most of those loans were being paid back at below market price oil. It's going to lose that advantage if, indeed, Donald Trump and Marco Rubio decide to basically try to squeeze the Delcy Rodriguez government into being more compliant to U.S. interests. So that's the first thing. I think China's going to stand down, though. This isn't a fight they want to pick, quite frankly. There's the other issue, though, for markets that's going to be important in the case of Venezuela, is renegotiating the $160 billion worth of Venezuela's defaulted debt. Right. And you've got a lot of hedge funds and financial services sector officials queuing up to try to renegotiate that. And the truth is Delcy Rodriguez in this front has been a known quantity. She's been the go-to person for a number of the hedge funds and the bondholders, as well as the oil companies. But there's a lot also there that has to happen to change it. You need an IMF sort of study of the books. They need to open up their data and prove their data. But at a certain point, it's quite possible we could see a debt renegotiation, which really could have a huge upside for a number of bondholders, because it was priced at about 5 cents on the dollar. It's already gone up by about 20%.
Yeah, and we're hearing rumors that a lot of the big banks are already circling around. We're trying to figure out what opportunities are. AI. Is it going to save us all in 2026 again?
I mean, I think the OpenAI IPO is the big event of the year. I think that's undeniable at this stage, that we're all waiting for this big test of market sentiment. So far, so good. We've seen a good start to the year in Asian stocks. Sentiment in places like Korea still very positive. And you have now talk of, actually, is OpenAI going to start to make the jump back towards the Gemini progress that we saw with Google last year? This competition is healthy. This is good news because companies are fighting against each other to win the race, and that is driving progress. So I still think the story is intact for this year. The valuation is obviously the key question, and that's where that more diversified approach we think is really important, not overlooking some of the Asian markets, China included in that, at the expense of this sole focus that we've had on the US over recent years.
If there is some kind, I mean, 2025 was quite strange because you had, talk about bubbles and you had a little bit of a pullback, but then AI stocks actually managed to still win. Are we going to see the same dynamic in 2026, or could you see a washout of the smaller companies with the bigger companies coming in, still financially strong, and buy them up?
Look, I think you have to be broadly hedging your bets here. We think private equity is likely to hold some of the biggest winners in AI over the coming years. It will not only be the US mega caps that win this race. I think there are key questions around the progress that we're going to see, not just from Chinese names, but other parts of the Asian tech universe. And then we also start to think about some of the more ingrained focus on the sectors that could be the big beneficiaries. So look at banks as a prime example here, where they've had a good run over recent years, but still I think are at the very early stages of being able to demonstrate the revenue and margin improvements that we're likely to see off the embracing of this new technology. So broadly, I think it's about spreading where you want to take your risk in portfolios, and that's true whether it's public versus private, that's true regionally and across sectors, while all still having a relatively positive view on this AI trade continuing.
It's a bit like the U.S. administration mindset right now. Diversify.
Diversify. Play every possible card you have and hope for the best.
Thank you both for joining us. Christopher Sabatini, Latin America, a senior fellow at Chatham House, and Hugh Gimber, global market strategist at JP Morgan Asset Management. Coming up, Bulgaria joins the euro area after almost 2 decades of integration. But the big moment is spoiled by, of course, this political upheaval. So we'll talk about Europe, what it can do next. That's, of course, coming up shortly, and this is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Now, the conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacroix here in London. Now, the chief executive of NVIDIA says production of the company's highly anticipated new artificial intelligence chips is on track and demand is strong. Speaking at CES in Las Vegas, Jensen Huang said customers will soon be able to try the Rubin semiconductors, which are expected to speed up AI development.
This is the Vera CPU. It's got 88 CPU cores, and the CPU cores are designed to be multi-threaded. But the multi-threaded nature of Vera was designed so that each one of the 176 threads could get its full performance. So it's essentially as if there's 176 cores, but only 88 physical cores. So these cores were designed in using a technology called spatial multi-threading. But the I/O performance is incredible.
Well, let's bring in opening trade anchor Tom McKenzie. Tom, first of all, he just has a great look, but NVIDIA very bullish, still very bullish, announcing new AI tools.
Yeah, it's hard not to be distracted by the new upgraded jacket, it seems, from Jensen Huang. Yes, look, I think a couple of key things that came out from this speech and really setting the agenda. And let's not forget, this is a more than $4 trillion market cap company, by far the largest. And so all eyes on this speech in terms of setting the mood music, really, for AI and the demand picture into 2026. I think a couple of key things. Number one, he pulled forward the details around the Vera Rubin. You got some specificity from that soundbite there. Normally, you don't get these details in terms of the new chipsets until about spring, but he's pulled them forward. He says that's because there's just so much demand. He wanted to give his customers and clients a view in terms of how that is progressing. They're in production. They've got hold of them now. They've been produced, of course, in foundries like TSMC, and they will be ready to be shipped to customers in the second half of this year. So that's really significant. Another significant piece, I think, is this real laser-like focus now on embodied AI and how NVIDIA plays into that. So we're talking robotics, we're talking autonomous vehicles. That seems to be being set up for a really big theme and a big trend in 2026, and clearly NVIDIA has their eyes on that. They're also the full stack. He talks about the full stack, so they're not just the chips, they're also the servicing, the networking, and the software that goes on top of that. And so building out those prospects as well. And interestingly, talking about China, saying that the H200, which is the chip that the Trump administration says they may allow into the Chinese market, he says, we've got the licenses in place, we're seeing a lot of demand in China if and when those licenses get approved. That could be, they've talked previously about that potentially being a $50 billion market that they're not currently accounting for in their earnings.
Tom, so AMD also unveiled a new chip. Can it actually dent NVIDIA's dominance?
Yeah, so Lisa Su, the CEO, you're rightly saying that she got up and gave a keynote speech as well. They are seen as the main competitor to NVIDIA. Now, their market share is far, far smaller, but they continue to progress. And again, Lisa Su saying that there is such strong demand there. And I'll just take a quote from her. The rate and pace of AI innovation has been incredible. We are just getting started. She was joined on stage by OpenAI's co-founder, Greg Brockman. He talked about the need for compute from OpenAI. They have a partnership with AMD. And she also released a new chip for the corporate data center use as well. So she talked about that and also gave a preview of their upcoming chips that will be for AI data centers in 2027 and AI chips for laptops and computers as well on the edge, so-called edge computing. So certainly AMD continue to develop and innovate and try to carve out more market share. There's more competition coming up from the likes of Alphabet and Google with their TPU chips. And so that is a question mark in terms of how AMD positions itself. But clearly, Lisa Su and the team think they have the products needed to continue to carve out at least some market share from NVIDIA.
Tom, thank you so much. Tom McKenzie there with the very latest on AMD and on NVIDIA. Now, the ECB president, Christine Lagarde, has hailed Bulgaria's membership of the euro area as a testament to Europe's ability to defy international headwinds. The country became the 21st to adopt the euro on January 1st, but the big moment was tarnished by political turmoil, with the government collapsing just weeks before. Well, joining us now is Maria Simenova, head of the Sofia office at the European Council on Foreign Relations. Maria, thank you for joining us. First of all, what is Bulgaria joining? What will they get from joining the euro?
Bulgaria became the 21st member of the Eurozone, and this is a recognition of consistent efforts towards this direction since Bulgaria's intention to join the European Union in the beginning of the century. There is a lot to gain. Bulgaria is becoming part of the decision-making process of the European Central Bank. There will be more credibility in the Bulgarian economy, with the hope that this will lead to higher investments. The Bulgarian economy has been on a positive trend, but definitely it needs sustainability through more investments.
So, Maria, what happens next? I mean, this is a very difficult moment for the EU at all. Will Bulgaria help the EU in any way, shape, or form, or is the government just too unstable?
Well, as you started telling, in December, we witnessed one of the biggest protests in Bulgaria since the 90s. Those protests were provoked not because of the Eurozone accession, but just the contrary, because citizens want Bulgaria to develop as a European country with European future and to abolish any signs of erosion of rule of law and political meddling into the judiciary. So this has been the main goal of the citizens to, with the economic development, to finally finish this circle of or I should say half reforms in the judiciary system. So this is basically a conversation of what follows after Bulgaria benefited fully from its EU membership, because last year, exactly again on 1st of January, Bulgaria became full-fledged member of the Schengen area. And now with the Eurozone accession, the European integration cycle is completed. But what is now a priority for the Bulgarian citizens, many of them young people, many of them returning to Bulgaria from abroad, is that the institutions are resilient and the image of Bulgaria as a corrupt country is abolished.
But Maria, I mean, it looks like yet another election, the 8th since 2021, right, is coming. So what kind of warning is this for Europe? And if the result is actually, could it change its pro-EU orientation if the political crisis stays for too long?
Well, indeed, I don't, speaking from the ground, we voted 7 times in only 4 years. Now this will be the 8th election since 2020. And citizens don't seem to see this as a factor for political instability. It is just the contrary. It's time to abolish any models that bring corruption into political governance. And inevitably, when there is corruption in the governing system, there is a risk of geopolitical shifts. And this is exactly what could have happened with the previous Bulgarian government and the signs that were coming. For example, not supporting a decision in the European Union to use the Russian frozen assets, which came as a surprise. So when there is corruption, there's always a risk to bring in the country malign influence, and in the Bulgarian case, this is the Russian influence, which has been.
But Maria, are you worried that as the euro area incentive is gone, Bulgaria actually abandons fiscal discipline, low debt levels, which for the moment are amongst the lowest in the EU?
Actually, by fulfilling the Maastricht criteria, this was a recognition for a consistent conservative fiscal policy. And the protests, the main trigger for the protests in December was indeed the national state budget, which offered a shift from this policy, meaning higher taxes, social security, unprecedented increase in the salaries in the public sector. So this budget that the citizens protested in their thousands was basically a shift from this very consistent fiscal policy. But the reaction of the people showed that it will require accountability by the politicians, not to change or to make to bring turbulences in this fiscal policy of Bulgaria that brought it into the Eurozone in such a defining moment for Europe.
Yeah. Maria, thank you so much. Maria Simonova there, head of the Sofia office at the European Council on Foreign Relations. Now, coming up, we'll talk to James Arnold, co-head of Strategic Insights and advisory at UBS about the FTSE 100's bull run. How much further can the market actually go? We'll also talk about the Chancellor and, of course, some of the budget measures put in place. This is Bloomberg.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersecci. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacque here in London, and these are your top stories. A new leader is sworn in Venezuela as Nicolas Maduro and his wife plead not guilty to narco-terrorism charges in New York. The Danish Prime Minister warns that a U.S. attack on Greenland would be the end of NATO, but says Donald Trump's threats should be taken seriously. And the chief executive of NVIDIA says production of its next-gen AI chip is on track, but there's competition in the wings in the form of a new chip unveiled by rival AMD. Now, French inflation has actually slowed to a 7-month low on falling energy costs. German CPI out at 1 p.m. UK time. Data for the euro area is due tomorrow. Now, for more on all of this, we're joined by Bloomberg's Jana Randau in Frankfurt. Jana, Happy New Year. So good to speak to you. What do you make of the figures released in France?
Yeah, weaker than what we would like to see for the Eurozone, but also not much of a surprise. France has been below 2% inflation for quite some time now, and it's steady there. Most of it is due to energy, to weak manufacturing. Services are still running above 2%. So overall, not much of a surprise.
We're also expecting, of course, Germany, but also euro area inflation. What does that all mean for the ECB going forward?
Yeah, Germany is maybe the slightly more interesting story today because we do see in the annual data the states published earlier this morning that inflation slowed down quite sharply. But if you look at the monthly change, then that was quite a bit stronger than expected. So a bit of a mixed bag, and that tells you that inflation is more or less on track on track to a target where the ECB wants it to go. But it's not a black and white story. So there are things that are happening under the hood. The ECB flagged stronger than expected wage growth, for example, in its last press conference in 2025. So overall, everything that we've seen so far this year in terms of data speaks for steady hand policy, interest rates on hold, looking at what the economy does, what inflation trends do, and then decide where to go. But I don't expect any changes for quite some time.
Jana, thank you so much. Jana Randau there in Frankfurt. Now, a 5-year bull run has propelled the FTSE 100 up by more than 50%. After passing the 10,000 mark, the index has reached a market cap of $3.9 trillion. Now, while that's about the size of the UK economy, it also remains well short of the market cap of a single U.S. tech giant, and that's NVIDIA. Well, joining us now is James Arnold, co-head of Strategic Insights and Advisory at UBS. Thank you so much for joining us. Where do you see the UK fitting in right now?
It is really funny when you use that introduction. So 3 years ago, we wrote a piece arguing that the UK wasn't moribund. And if you cast your mind back, the UK was critiqued to be a failing market, it had no liquidity, it didn't value companies properly, and was destined to sort of die a death. And actually now, as you say, now we're 50% up in a very short period of time. So how things change. So what did we argue 3 years ago? We argued two things. So firstly, we argued the market actually functions really well, right? So the market functions, there's enough liquidity for companies to do what they wanted to do. There's not as much liquidity as there is in other markets, but there was enough. Second, we argued that the market valued fundamentals. So it valued return on capital and it valued growth. And then thirdly, we argued that actually one of the really big issues for the UK market had gone all the way back to the Brexit vote. And there's no doubt if post that vote, and for the 5, 6, 7 years post that, if you were to allocate $1 of capital into a country around the world, the UK moved itself a little bit down that list because of the events post that. So in that piece 3 years ago, we said
James,
those things are normalised.
I guess, 3 years ago feels like a very long time away because we had a new government, because there's a number of budgets that actually may have changed something.
Yeah.
But what I hear from chief executives is that a lot of them, if they could leave the UK for just the capital pool reason, would maybe leave, the UK to go elsewhere. Do you find that, or is there what's the problem here?
So I think that is a question that I think any board needs to ask itself on a regular basis. So you then say, well, what are the potential reasons for wanting to leave the UK? And I think one of the ones you hear quite frequently is a higher valuation. The work that we've done argues that actually there has always been, over history, a difference in valuation between the US market and the UK. But when you dig into why that is, it's because it has a higher return on capital and it grows faster. Right. So at the individual company level, unless you can transform your returns by transforming geography and listing, it seems unlikely that you're going to materially change your valuation.
Are the UK markets undervalued?
Again, I think at an aggregate level, it's really hard to answer that. I mean, you look at the sectors that are driving, the big sectors within the UK, yield curves remain steep, which is very helpful for banks. There's obviously plenty of macro activity that helps the miners and at the moment as well. So big chunks of the UK market, I feel very well supported, but I'm not clever enough to tell you whether the market's cheap or not.
When you look at IPO outlook, what's in store for the UK? Will it be able to attract new IPOs, or do they want to go elsewhere?
Yeah, and again, a great question. I mean, and that journey over 3 years has gone from nothing to, and there's been plenty of people in the ECM world that can tell you the exact names, but there's no doubt there is more activity planned in the UK. I think the UK has opened up again to IPOs. The question really is, if you're a genuinely global company, what is the right home for your listing? The UK feels like it is very much back at that top tier in terms of being able to argue that the UK should be the case.
I mean, what are global businesses mostly worried about? Are they, affected by geopolitics? Do they think about AI, or do they think of the capital pool available and actually where they should be listing?
So on that last point, I think capital has never been more global. One of the things we spend our time talking to CEOs and CFOs about is, where does your next investor come from? And previously, that was a very domestic conversation. If you're a UK company, the likelihood your next investor would be a UK institution. And now that's absolutely not the case. So we talk to companies about internationalizing their equity stories, opening the pools of capital. Are they worried about any of those specific factors? I mean, geopolitics, lots of column inches, lots of value added, I'm not so sure. I think people tend to be very bottom up. They're aware, but they focus on their businesses. I think AI 25 was a story of straightforward winners and losers without too much thought necessarily behind lots of that. And I think one of the things that really fascinates into 26 is you'll start to see that picture be painted. You'll start to see the colors and the lines emerge of what actually it means. I think there's already some very good case studies of away from the AI technology side into real companies, where real companies are using the technology very well.
But how are companies using AI? Actually, if it works well, should it just not have an impact on your revenue instead of, saying, look, we have AI, look at the shiny new thing, it'll make us better?
3 questions. 1, do you have a process in which AI can impact that process?
Yeah.
2, once you've done that, does that automation of that process create extra revenue growth, as you say, or perhaps it creates a cost saving? And then 3, and by far the most interesting, but nobody ever talks about, is once you created that incremental economic profit, where does it sit? Does it go to the technology providers, which the current market caps would suggest? Does it stay with you as a company? Does it perhaps get passed on to your customer? And I think that's why 26 to me is such an interesting year for AI. We're going to get away from these big generalisms and start to get into the nitty-gritty for companies as to how durable incremental economic rent is.
But James, does it really depend on the chief executive on how AI is integrated in your company, or does it largely depend on actually where you sit on the sector you operate in?
Obviously, both are relevant. If you've got an entirely non-technology business or non-person business, you can't really use AI as much versus others where you can. So I think the sector matters a lot. There's no doubt that you see certain leaders we've met around the world that are really pushing that agenda through the organization, and I think that undoubtedly helps people adopt the technology.
When you look at corporate M&A, are we going to see more of it?
Well, we saw a record year in 25. So there's a series of mega deals in the US. Has led that to be a sort of bumpy year. So I think when we start at 26 with our conversations with CEOs, we see markets with record returns on capital. So profitability is really good. We've seen a record year for M&A. We see an IPO pipeline that's opening. And we recently wrote a paper on spin-offs, which have become a popular topic again as well. So when you think about a CEO, CFO's toolkit for 26, as much of it is open to them as has been for a very long period of time.
I guess the concern is that the U.S. at the moment has a mind of its own because of deregulation, because of animal spirits, just because it's different to what we're seeing in the UK and Europe. Do you see it translating into our markets here?
Yeah, I read far too many 2026 outlooks from people over Christmas, and I think that there are two very distinct drivers. So the US, you're right, is a very tech-centric, tech capex narrative into 26. The European Union, the EU more broadly, is a fiscal, it is a consumer and industrialization one. So there are different drivers to it. So I think the EU story can stand by itself.
Okay, James, thanks so much. James Arnold, co-head of Strategic Insights and Advisory at UBS. Now, new car sales in the UK have surpassed 2 million for the first time since the pandemic, buoyed in part by automakers offering more discounts on EVs. The Society of Motor Manufacturers and Traders says registrations rose 3.5% last year, with sales of fully electric models climbing around a quarter. Now, EVs now account for about 23% of the market, but that's short of the government's mandate for 28% of sales. And the British Retail Consortium says UK food inflation rose for the first time since August last month, nudging shoppers to seek value items during the key Christmas trading period. While food prices rose 3.3% from a year earlier in December, up from 3% the previous month. Well, that drove an uptick in overall shop price inflation to 0.7% year on year, as non-food prices continued to drop. And Italy plans to back the Mercosur free trade agreement with the South American bloc of countries in a vote that will likely be the final major hurdle for the European Union to clinch the accord, which has been in the works for 25 years. Well, Bloomberg understands that Italy is expected to reverse course and support the deal when EU ambassadors vote on the measure on January 9th. Now, that would allow the EU to sign the treaty with the Mercosur countries on January 12th. Now, Next has raised its profit forecast for a fifth time this financial year after sales at the British retailer rose more than expected over Christmas. Now, for more on all of this, we're joined by our global business reporter, Jennifer Curry. Jennifer, thanks so much for joining us, and Happy New Year. Next results this morning, pretty upbeat. What do they tell us about how retail did over the Christmas period?
Yeah, I mean, this is so characteristic of Next, isn't it, to under-promise and over-deliver. So it raises pre-tax profits guidance for the fifth time this fiscal year. It's now expecting pre-tax profit of almost 1.2 billion. I think it's worth noting that a lot of that growth is coming from overseas. We saw that in previous quarters as well. So international sales are up almost 39%, UK sales up 6%. So a weaker UK consumer, Next is often seen as sort of first out the gate with UK retail, and any trouble for Next is seen as a bad indicator for the rest of the UK high street. So I think one point I think really illustrates this well is that Next said that it had a lot more stock than it expected going to sales during this period. But its clearance rate was very good. So essentially it was able to sell a lot of that excess inventory at the first discounted price. And what that tells us is that the UK consumer is really looking for that deal. A lot of those consumers waiting until after the Christmas period, during Boxing Day and afterwards, to get that kind of discounted price. So we're looking at consumers really looking for a deal now.
Right. So what does it tell us broadly about the UK consumption story?
Yes, so it's still a bit weak, right? So CEO Simon Wolfson said that next year is expecting sales and profit in the UK to be soft. He also said that during the last results as well, and he's blaming a lot of that on higher costs that are facing the UK consumer. slower growth and the UK consumer really trying to swallow in a lot of those costs. So what that tells us is that, it's going to be a bit of a slow start to I think 2026, and we're just going to have to see how the other kind of how next peers fare. Yeah.
So is the worst behind us, or is it just too soon to call?
Yeah, so something that the BRC said was that that food inflation will remain sticky in 2026. So what that tells us is that for a lot of supermarkets, they're bearing a lot of the brunt of a lot of those cost pressures. And so we're going to see some difficulty going into 2026. And we've got some results coming out later this week. So we've got Tesco, the UK's biggest supermarket, also giving a trading update, as well as Marks & Spencer, arguably next biggest competitor. So we're just going to have to wait and see how those retailers fare to get a better sense of what's happening with the UK retail landscape.
Jennifer, thanks so much. A terrific roundup there of what we're seeing in retail. Jennifer Creary, our global business reporter. Now, coming up, how stock exchanges are pulling out of all the stops to attract IPOs. We'll delve into the pipeline for 2026. That's next, and this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheets.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment. 3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
The conversations that matter, the insights you need. This is A Pulse, and I'm Francine Lacqua here in London. Now, global stock exchanges have been pulling out all of the stops to attract IPOs amid fierce competition for the dwindling number of listings. Recent IPOs have been celebrated with everything from champagne and confetti to dancers and even lasers. Tom McKenzie has been looking at some of the entertaining ways in which IPOs have been celebrated.
An IPO is often the pinnacle of success for executives. There are speeches, hugs, even tears.
I achieved my dream.
The champagne and confetti and countdown clocks might look like a nice party, but it's serious business too. Listings have been dwindling in recent years in the aftermath of COVID and rate hikes to tackle inflation. Exchanges have been competing for a shrinking slice of that pie, and a good show is part of the marketing.
Part of getting the message out is a way that we effectively live the stories that the companies execute through the medium of an exchange. And yes, of course, it reaches out to companies which may be within an IPO pipeline.
Asia has dominated listings for the last few years, and its listing ceremonies mix tradition with pomp and some fun. In Hong Kong, there are gongs of different sizes.
So there's the standard size gong. We also have a bigger gong or a mega gong. That's for very special and larger companies listing in Hong Kong.
So, little surprise then that when China's CATL sold shares in May, raising a whopping $5.3 billion, no ordinary ceremony would do for the world's biggest maker of EV batteries. The Hong Kong Exchange wheeled out its mega gong. With CATL shares handily beating global benchmarks since the listing, fortune has indeed been kind to the company. As Europe and the US look to rival Asia by claiming more new listings, the pizzazz, showmanship and company mascots show no signs of being canned as trading gets underway.
Fun package there with Tom McKenzie reporting. Now, let's get more on what 2026 holds in terms of IPOs. Charles Capel, Bloomberg's European Equity Capital Markets Editor, who joins us now. I mean, the real question is, how would we celebrate if we were to IPO? And of course, it has to be Formula One style, right? With the champagne bottles?
Absolutely. Champagne. And then I have a soft spot for a mascot as well. I really enjoyed the dancing tuna cans. And then Magnum, the Magnum ice cream company, were giving out free ice cream. So I would have ice cream at mine.
We're having it all at our IPO. This is, Charles and Francine, 2026. Okay, 2025 was a year of two halves for IPOs, right? Few to begin with, and then a pickup towards the end. What was driving that?
Yeah, well, look, IPOs are really fragile, delicate things. In order for issuers and bankers and their advisors to go ahead, they really need to feel comfortable that the market conditions are right. And at the start of last year, we had a big shock, which was, of course, the US tariffs. And that put a lot of people off coming to the market. And then towards the second half of the year, when things started to calm down a little bit more, there was a bit of pent-up demand, as well as your usual amount of IPOs. And so then you had sort of a very second half heavy. And that was particularly true in the US and Canada. The only exception to that was Hong Kong, which just kept trucking throughout the entire year. It was a crazy year for IPOs for them.
I mean, was that because it came from a lower base, or was it just what they were kind of offering and doing?
Yeah, Hong Kong came back with this, with a real resurgence, and they had a very low base, and then they just started building up a lot of momentum there. One particular highlight was CATL, the EV battery maker, and then when you get those big companies coming, it starts to filter through in confidence to the rest of the market. It encourages more companies through, and their pipeline, looking ahead, everything that they're saying, is also very strong.
Charles, looking ahead, what's the outlook for 2026?
It's pretty good. Bankers, especially ECM bankers, they're quite optimistic. The macroeconomic conditions seem relatively stable. Interest rates look like they're going to come down alongside inflation. There are a couple of concerns, of course. One would be any AI bubble and that bursting. And then US midterms is also more uncertainty. So we may see a lot of people coming relatively early to try and get these relatively calm markets, macroeconomic conditions prevailing and making sure it doesn't filter through to equity markets. But hopefully it's looking pretty good.
The largest candidates in Europe.
Yes.
They'd be completely dwarfed, right, by an OpenAI or something like that in the US.
Yeah, exactly. So you have these like mega caps in the US. You have your SpaceX, your OpenAI. They're looking at an IPO maybe this year, maybe next. But then you do have some substantial candidates coming through in Europe, and there's always a bit of an adjustment factor that you need in terms of market cap. But you have two really big defense companies, CSG and KNDS. They're crucial for arming the war in Ukraine and also for these European defense spending commitments. They're really important companies, and they are going to have multi-billion euro market caps. They're looking at IPOs this year, and they could herald a wave of more IPOs to come.
So what about some of the other biggest candidates?
Yeah, well, as you said, so SpaceX...
it's huge.
Yeah.
Is SpaceX, is it bigger than OpenAI if it goes through, or do we know yet?
I don't think we would know just yet. I've seen sort of $1 trillion market caps thrown around sort of for both of them. SpaceX was recently valued at $800 million. These are IPOs that they would suck so much attention from the market. Fund managers would all be looking at them. Everyone would be trying to get in on them. And you kind of wonder how much dry powder would be left to put into all of the other IPOs. So it would be, you'd have to be a brave company to go up against them.
Charles, what about the UK? I mean, we had a good conversation, with someone from UBS, and he was more bullish than maybe some others in the UK right now.
Yeah.
I mean, can it attract the good IPOs, the big IPOs?
There are a couple of big IPOs coming down the line for the UK. There's Visma. That that is a private equity-backed software company. Navoy Mining is also reportedly looking at a list. Those would be significant IPOs, multi-billion pound IPOs. They would potentially introduce a little bit more confidence into the market, but that also needs to filter down into the smaller and the mid caps. What the UK has done is a huge amount of regulatory reform. They've changed a lot of the details around the listing rules, which they say makes the exchange more competitive. Now, the question is, can you then attract the capital? When companies come, like, will there be fund managers to buy into them? Will they want to? And the flip side of that is that you need the companies that fund managers want to buy into. And if all of the excitement is happening in the US with SpaceX and OpenAI and these big AI names, you know, that may suck some of the attention.
Charles, thank you so much. Charles Capel, Bloomberg's European Equity Capital Markets editor. Now, the French president is hosting Ukraine's allies in Europe and the U.S. for talks today in the hope of finalizing a security agreement which could see American boots on the ground after the end of the conflict with Russia. We're now joined by Greg Sullivan, Bloomberg's Russia economy and government editor. Greg, good morning, first of all, but how have Trump's actions in Venezuela and threats on Greenland changed the Ukraine talks in Paris and the conversation around the role that the U.S. and Europe will play in post-war Kyiv?
Well, it's certainly an issue that will be on a lot of European leaders' minds as they head into these talks. But really what it does is underscore a worry or even a reality that was already there. And that is that Europe wants to be engaged, wants to be at the table, and is concerned that the U.S., and specifically the Trump administration, does not think they need to be. They don't think in previous rounds of negotiations, they've largely been held between the U.S. and Russia, leaving Europe on the sidelines. Europe obviously sees Ukraine as part of its security infrastructure and believes it needs to be part of those talks. Obviously, the Trump administration didn't consult Europe before the actions in Venezuela. So there's really that underscoring that worry that Europe will be left out. Furthermore, it adds urgency. European leaders are concerned that the Trump administration might become more focused on the Western Hemisphere, on Maduro, Venezuela, Cuba. And also, it stands to make the talks more difficult, given that Trump has made these threats against Greenland, obviously a territory of Denmark, part of both NATO and Europe. So that will make the talks more difficult. And European leaders going into these talks are going to seek to try and keep the U.S. focused, engaged on Ukraine, and not just distracted with the Western Hemisphere. So obviously it's something that's going to be on a lot of leaders' minds, and it really is sort of adding a new layer of complexity to these talks.
Yeah, I mean, it sounds like a bit of a nightmare. What will the Paris talks actually achieve today?
So what a lot of leaders are looking for going in is to actually finalize some of these security agreements. Obviously, earlier we heard that President Volodymyr Zelensky of Ukraine and President Donald Trump of the United States, they said that they had reached an agreement on the U.S.-Ukraine security guarantees framework, but now they need to finalize that with Europe. Obviously, there hasn't been much that we've seen on paper. We do know that U.S. troops could potentially be on the ground, though mostly what we've heard is talk about intelligence sharing, help monitoring any potential ceasefire down the road. So they really want to finalize the security guarantee framework. But I would caution that even if they do finalize it, it's not clear that Russian President Vladimir Putin will accept it. NATO troops in Ukraine has long been a red line for him, but that is very central to what Ukraine needs to seek peace. They want these security agreements because they want to make sure Russia doesn't reinstigate hostilities. And the other thing that I would caution is that there's another major hurdle that not much progress has been made on, and that's territory. So even if they do wrap up some sort of security agreement consensus, the territory issue still remains.
So interesting, Greg. Thank you so much. I mean, one of the other questions is actually how would Vladimir Putin be looking at this? So we'll have plenty more on that. Maybe with a bit of envy because of what Trump did in Venezuela. Greg Sullivan there with the very latest on these coalition talks. Now, later on, we'll be speaking with the NVIDIA chief executive, Jensen Huang, at CES in Las Vegas. Catch that conversation 6:15 p.m. London time. Up next, a Bloomberg Brief, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on Filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Good morning, this is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A new leader. Venezuela swears in Delcy Rodriguez as acting president as her predecessor, Nicolas Maduro, pleads not guilty in U.S. court. An AI showdown in Vegas. NVIDIA says its Rubin data center processors are in production. More from CES coming up. And stocks extending the New Year's rally. Copper continues its climb above $13,000 a ton. So let's take a look at these markets. We are mixed on futures right now, although we had an update for both the S&P 500 and the NASDAQ yesterday. The NASDAQ up about 0.75% for the NASDAQ 100. And you can see that tech optimism continuing overnight in the Asia session with the MSCI Asia Pacific Index up another 1.2%. Now, I do want to point out the PBOC just out with lines as well, saying that it's going to restore market confidence and do a lot to continue to prove that its markets are trustworthy and investable. So we'll be looking into those headlines in just a few minutes as well. Let's take a look at the U.S. bond universe, because obviously we're all waiting on that jobs data Friday, but we do get a raft of data in between. You're seeing the 2-year yield hold steady around 3.45, the 10-year yield just up very slightly, and the 30-year yield as well up almost 2 basis points. So that steepening trend continues. And I just want to point to copper as well, because we're seeing the base metals rally. Iron ore is the only sort of one that's been left out of the party. It's not rallying. There's a bit of a glut out there. But copper was above $13,000 an ounce again, or a ton, I should say, again today. And we've seen that a couple of times now over the holiday period and yesterday as well. Now let's get to some individual movers. We'll go across to London and Valerie Titel. Valerie.
Good morning, Bonnie. Let's start with Vistra. This has to do with the AI race. Vistra, being one of the largest electricity generators in the U.S., has acquired 10 new additional natural gas-powered power plants for $4 billion. Bonnie, this is seen as mostly a way to catch up on this AI race. These natural gas power plants are an answer, at least, to these data-hungry data centers that want energy around the clock. Let's stick with the AI theme and move over to Microchip. This is one of the major analog chip makers, counts TI as one of its main competitors. Had a decent boost when it comes to third quarter sales, and the CEO cited a strong bookings demand for the December quarter. We're seeing Microchip Technology up 4% in pre-market. Lastly, want to head to Germany. Adidas is getting a double downgrade from Bank of America, essentially downgrading many sportswear brands, Vonnie, citing the 20-year casualization trend largely coming to an end. Adidas shares down over 6% in Germany.
Oh, that's sad. I don't want that trend to end. Valerie, thank you so much. Valerie Titel there in London. And we have a great lineup for you this morning. In just moments, we're going to be speaking with the opportunities in oil, particularly in Venezuela, potentially with Ben Luckock, Global Head of Oil at Trafigura, and, as you can see, JP Morgan's Sitara Sundar joins us later this hour on the risks around AI. So, Delcy Rodriguez has been sworn in as acting president in Venezuela. For now, she has the support of both the Chavismo strongholds in her government, as well as President Trump. For more, Bloomberg's Patricia Garup joins us now from Santiago, Chile. So, Patricia, she's been sworn in, she's promised peace. How does this government look any different from the government that was there last week?
Yeah, hi, Vonnie. So not much. This is, again, the same regime with a different leader. She was, as you said, sworn in yesterday by the National Assembly, which is packed with regime loyalists. So the ceremony was important. It cements her control, her political control at the highest level. Strikingly, even Maduro's own son declared his support for her yesterday. So it was a big moment for her, and today's another day.
It does seem that there is not much opposition to her, but from the outside it's very hard to tell. What are we hearing about any other potential factions that might try to, move an opposition government into power, or, move their own people into power if it's at all possible?
Well, it's interesting. Last night, I think a lot of people were on edge because there were sort of these apparently what were unauthorized drone flights around the presidential palace. There were some gunfire. So people last night, Venezuela watchers, were seeing that and wondering if maybe that was indeed some action to challenge Delcy Rodriguez. It turned out to be a false alarm, apparently. So she is going to have to be very mindful because, yes, there are sort of hardline factions that remain loyal to Hugo Chavez, who was the late president who launched sort of this socialist era in Venezuela more than a quarter century ago.
And just briefly, Patricia, President Trump has told NBC that he may reimburse oil investments in Venezuela. Is that likely to entice people to want to go in? Is that enough?
Well, we can't know yet. Some oil executives are going to be meeting with President Trump this week at the White House. So I think we'll have more details. But yes, he suggested that to entice oil companies to go back into Venezuela and revive that country's oil industry, the government of the United States would subsidize their efforts. Now, also adding that the industry would be up and running, he said, in less than 18 months, which is quite different from the estimates which say it will take many years and many tens of billions of dollars to do so.
Yeah, very ambitious targets there. Patricia, thank you so much for bringing us up to speed. Patricia Garup there in Santiago. Joining us now is Ben Luckock. He's Global Head of Oil at Trafigura. Ben, can I start there? OPEC has in the past given you special licenses to trade Venezuelan oil. Are you looking to get into Venezuela in any capacity now that Maduro is out of power, at least for now?
Well, I mean, I think it's the topic that everybody's discussing in the oil industry. We've come back from holiday. We've been back 24 hours in the office. And I can tell you that the office was dominated by Venezuela Chad. I think everybody's looking about what opportunities there may be in Venezuela. We have a history of working all over the world, anywhere that oil is produced and anywhere where we follow the sort of sanctions regimes and so on. So we'll be discussing it with the U.S. government. I think we can probably be of assistance. It's very clear the U.S. government wants the oil to continue to flow. They don't want civil unrest in Venezuela, so they're going to want products, gasoline, diesel, this kind of thing to enter the country. And I would say that we are well placed to assist if that's in fact what's required.
Have you had any discussions so far with the administration about any of this, and what kind of opportunities would you be particularly looking at?
I mean, we've had ongoing discussions with this administration and other governments about the world about what's required. I think it's very clear what the Venezuelans want and what the Americans want at the moment seems to be equally aligned. They both want the oil to flow. They both want a stable oil market. And I think you'll find the policy of the US and probably other governments will be aligned to that goal of stability in the oil market, stability of Venezuelan flows, and stability within that country. And the country still has requirements for finished grade products to keep its population moving. And I think the policies of both governments will be aligned.
You've had ongoing discussions, you say, with this government and with many governments. Do you get the sense that sanctions will be lifted anytime soon?
Well, I get the sense that they're going to have a policy that does exactly what I said, which will allow the oil to flow. I don't think they want a bottleneck of Venezuelan oil. I don't think they want an armada of ships floating there and waiting to load and so on. It just creates deep inefficiencies. Now that I guess their main goal of Mr. Maduro leaving the country has been achieved, I think they'll get back to the normalcy of keeping the energy markets efficient, keeping it flowing. And I would imagine very, very quickly their policies would reflect that.
What would your asks be at Trafigura, Ben? What would you need to see before you would, allow your services to be used?
I mean, I guess the first and foremost is the safety and security of our people, safety and security who are on our vessels. We have an enormous fleet of oil vessels that are pretty useful in these kind of situations. So that's the first priority for us. And then it's the rules and regulations, right? You mentioned OFAC, there's sanctions and so on. So we've got to make sure there's a proper legal framework that we can operate within. There will be funds that have to be moved, exactly how that works. But the US government is well versed in all of these things. But it'll be a proper legal framework and the safety and security of our people and a high level of transparency of what's going to happen.
Would you be fine with a Delcy Rodriguez government that looks exactly the same like a Maduro government? And would you need reimbursement from the US?
Well, look, we're not here to dictate what governments are around the world and who's in charge. We don't have anything to do with politics, really. And with regards to the US reimbursing, I guess there's two parts to what they're talking about. They're talking about the immediate issue, which is keeping energy flowing both into Venezuela and out of Venezuela. That's a big logistics issue and obviously got some legal issues around it that will need solving. The second part that I know you referenced, Mr. Trump mentioning that he may be interested in reimbursing, this is more the upstream sector. This is going to take years to play out. And there will be some sort of arrangement made, I assume, mostly with the majors, probably American majors, the Chevrons who participates there at the moment, Exxons, et cetera, et cetera. And that will be a second problem, which will take months and months and months of negotiation to work out exactly how that framework works and how it's funded. But the reality is, Venezuela, for the entirety of my career, has been a very large oil producer. In 1998, it was well in excess of 3 million barrels. These days, it's closer to 1 million barrels. They're clearly going to try and increase production. Increasing production will take tens of billions of dollars and many, many years. There will have to be a framework how the people who invest that money get reimbursed. Now, the normal course of events is you'll be reimbursed through some offtake of the oil and some sort of profit share arrangement. If the American government wishes to assist in that process, then that will probably make it more likely to happen.
How many additional barrels could Venezuela supply, say, this year? And then when would we get back to that 2 to 3 million barrel mark?
I mean, this year, very few. I mean, you don't just click your fingers and change this, and nobody's very clear exactly what shape some of the infrastructure is in, although we do know it's been degraded. I don't think much will change at all this year. What you've really done for the prompt market is take out the likelihood that there's going to be a real problem in Venezuela where they produce substantially less this year because they're in some sort of open conflict or something with the US. And I think that's a little bit off the table now. So I think you've got a certainty around, well, some level of certainty around stability going forward for this year, but don't expect extra barrels to come quickly. You are talking a multi-year process, billions of dollars, but the targets can be significant. Can they get back to their 3 million barrels a day? That will take years, 10, 15, hundreds of billions of dollars to get there. And I think, that remains to be seen. Do I think there's likely to be, a resurgence in interest from the majors to go back to Venezuela and really produce, assuming that the stability remains? Absolutely. This is a country that has enormous oil reserves, the biggest in the world. And yes, in the grand scheme of oil production, it's actually pretty easy to produce. You've just got to get the right people on the ground, the right technology, the right equipment, and money.
Would you be at all interested in investing in refining or other kinds of assets in Venezuela at Trafigura, Ben?
I mean, look, we're open to opportunities. We're traditionally not an upstream producer. We're really a big logistics company. I think that where we can immediately help is with the logistic chains that we have all over the planet and our know-how about how to move hydrocarbons around the world. Would we be interested in supporting people who wish to go into the upstream market, assuming that all of the legal infrastructure around that are there? I mean, why not? We'll look at it, but I think there's a lot has to transpire before we really understand how the upstream segment in Venezuela is going to play out over the next couple of years.
Ben, how do you think there'll be a wider impact beyond Venezuela? So I'm thinking Ukraine, Russia, even Iran. How does this change the negotiations and the picture for potential oil supply down the road?
Yeah, I mean, that's what the market's been dealing with really for the last couple of years. I mean, we went through a year last year where we had an open conflict between Israel and Iran, and flat price really didn't even go that much higher. Even that was meant to be the big event that would force prices higher, and nothing really ever happened. And when that conflict came to an end, the market came tumbling back off. We're in an oversupplied market is the reality at the moment. Most of the market understands that there's plenty of oil around. Whilst I said the balances don't really change in Venezuela in the next 12 months, at least you've taken for now off the table that you've got a big disruption. So I guess it means probably lower oil prices, both in the prompt and in the medium term. I think Russia, Ukraine, with a bit of luck, 2026 is the year that this war can finally come to an end. You would imagine at that point there'll be some arrangement made where Russian energy at some point will return into the fold, and that's just more supply into a market that already has plenty. The wild card the market is worried about at the moment, or the bullish wild card, I would say, is Iran. Lots of talk about what's the current situation. Are the Americans going to act again? But frankly speaking, there's plenty of oil in the world at the moment, and absent a huge problem, I don't foresee significantly higher prices, almost regardless of what events happen with Iran, with Ukraine, and with the Venezuela that looks to be a bit more stable at the moment.
Yeah, Trafigura, you've coined the phrase super glut for what you think the oil market is in this year. Can I ask you about Tether? Because I know that you're involved as well in Tether and other assets like that, in particular a stable coin that some of these regimes use. What's your outlook for Tether and how it's going to be used this year?
I mean, look, alternative payment systems are certainly very interesting. I mean, we deal with an enormous amount of US dollars every day, but we are aware that the world is changing and moving forward, and people do want to peg their currencies to different things. Gold has certainly had a big move up in the last, 12 months, hasn't it, as people and central banks have been buying gold. Again, we will live within the regulations of the international markets. I think if there's ways that you can have payment systems that are, let's call it more modern, more forward-looking, fine. We'll work with it. I know we've looked at a number of these things over time, but the reality is the commodities market operates largely on US dollars. The traditional banking system, that hasn't changed for many, many years. So any change is likely to be slow in commodities. It's large amounts of money all over the planet, and it's really very rule-bound. I mean, this is not a cowboy industry. It's very well regulated. So look, I suspect it changes slowly over time, but I don't think it's going to be a dramatic change in 2026 to what we do every day.
Ben, can't wait to get an update from you very soon, and good luck with all the negotiations and everything to come. That's Ben Luckock of Trafigura. This is Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
This is the Vera CPU. It's got 88 CPU cores, and the CPU cores are designed to be multi-threaded. But the multi-threaded nature of Vera was designed so that each one of the 176 threads could get its full performance. So it's essentially as if there's 176 cores, but only 88 physical cores. So these cores were designed in using a technology called spatial multi-threading. But the I/O performance is incredible.
NVIDIA CEO Jensen Huang showing off the company's latest accelerator at CES in Las Vegas. Joining us now for highlights, Bloomberg Tech Europe anchor Tom McKenzie. Certainly sounded great, Tom, but what was he actually saying? What does this do for the world?
Yeah, and setting the tone, really, in terms of how to think about some of the key trends through 2026. Of course, the spotlight very much on Jensen Huang yesterday, ahead of the official start of CES in Las Vegas later today. A couple of things really stood out. One was the fact that this is a Jensen Huang who is announcing details around that latest chipset that you saw there, the soundbite, ahead of normal schedule. They're normally going to be announcing these in around the springtime at their own event, but he pulled that forward, and he said that's simply because they're seeing so much demand in terms of the use, the complexity around the new AI use cases and the demand coming through from customers, that he felt compelled to give these details and give an update, and said they're very much on track for this latest chipset, the Vera Rubin, that is currently in production, he said, and will be shipped to customers in the second half of this year. I think another key piece of the commentary, at least the press conference from Jensen Huang, was around that demand story, just saying, look, we are seeing no let-up in demand. That, in fact, was echoed by the CEO of AMD, Lisa Su, a competitor, of course, to NVIDIA, who also said they're seeing incredibly strong demand just in the opening stages of where this story goes. And he also had interesting takes on the China piece, and maybe we can get some more details on that. But this, again, was a Jensen Huang setting out not just the demand story, but also how the story evolves in terms of AI, a focus on robotics, a focus on embedded AI, and coming out with new solutions, new software when it comes to autonomous vehicles. So there was a lot, but I think it was the pre-announcement around some of the details of the Rubin and some of that additional software and services coming to robotics, the industrial use cases, and autonomous vehicles.
Well, certainly NVIDIA is higher in the pre-market. Now, interestingly, he also talked about the H200 chip, and we know there's been so much controversy about this. We're not even sure that the US can, export it to China. That decision's still not fully been made, right, Tom? But what did he say?
Yeah, that's right. What was interesting on this, I think, is that he said they're seeing strong demand from their customers in China for H200s. They have to have those licenses approved. He says they're working through that process. The licensing applications for those H200 shipments are in with the US government. And of course, to your point, the Trump administration has suggested that potentially they could sign off on those shipments. That could open up a market that NVIDIA has previously suggested could be worth as much as $50 billion US.
Yeah, fascinating. Tom, thank you so much. That's Tom McKenzie. And don't miss our special coverage live from CES, starting at 11 a.m. Eastern. Do tune in Friday as well for the next episode of Bloomberg Tech Europe, featuring Will I Am. That's at 3:30 a.m. New York time, 8:30 a.m. in London. Coming up, President Trump has hinted oil executives to get ready weeks before the Maduro ouster. That and a look at what else is making headlines in your front page news next. This is Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Time now for your front page news. First up, on the Wall Street Journal, President Trump's vague but tantalizing message to oil executives weeks before the Maduro ouster. Get ready. According to sources, he didn't provide the executives with specific details of the strikes on Caracas, nor did he seek their advice on a plan to have U.S. energy companies revitalize Venezuela's dilapidated oil fields. Next up, on the New York Times, President Trump's top aide, Stephen Miller, asserting that Greenland rightfully belongs to the United States. In a CNN interview, Miller said that, quote, nobody's going to fight the United States militarily over the future of Greenland. Meanwhile, the Danish Prime Minister said that if Trump were to attack, that would mean the end of the NATO alliance. And the Washington Post is leading with the Trump administration overhauling the list of routine shots recommended for all babies and children. Medical associations and public health experts have condemned the revisions to the vaccine schedule. Coming up, we're going to speak with JP Morgan's Satara Sundar next. This is Bloomberg.
What some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, you know, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content and never the two shall meet, but there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. Stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A new leader, Venezuela swears in Delcy Rodriguez as acting president, as her predecessor, Nicolas Maduro, pleads not guilty in U.S. court. An AI showdown in Vegas. NVIDIA says its Rubin data center processors are in production. More from CES coming up. And stocks extending their New Year's rally. Copper continuing its climb above $13,000 a ton. So let's take a look at how we're faring now. So we have a mixed picture futures-wise, but that's coming off a great session. The S&P closing up 6.6% yesterday. The Nasdaq 100 was up nearly 0.8%. As you can see, overnight in Asia, we had another very strong session. I'm not sure you could call this one catch-up. Certainly was impacted by some of the NVIDIA comments out of CES overnight, also headlines out of the PBOC. They're going to prop up market, at least trustworthiness, let's put it that way. Let's take a look at the bond universe, because we might see some movement this week off the back of jobs report Friday. Not too much movement today, though. We're seeing yields pretty much stable at the front end, up about a basis point at the 10-year. And 2 basis points at the long end. And let's take a look at that copper price, because it does continue to rise. We're well above now $13,000 a ton and continuing to climb. All right, let's get to some individual movers now for some stocks to watch. Here's Valerie Titel. Valerie.
Good morning, Ivani. Let's start with the energy space with Vistra Corporations announcing they spent $4 billion acquiring 10 new gas-powered power plants in order to catch up with the AI race. We're seeing Vistra Corporations up 4.3% in pre-market trade. Now, natural gas power is seen as an answer to those data-hungry data centers that want energy around the clock. Well, sticking with the AI theme, I want to talk about Core Scientific. It received an upgrade from BTIG, and we're seeing shares headed higher in the pre-market by 4.6%. Vonnie, Core Scientific was one of the biggest listed Bitcoin miners and is now becoming a key player in the AI digital infrastructure space, building out those AI data centers. So a key player, again, with this AI story lifting stocks across the spectrum this morning. Lastly, I want to end on pharma. Novo Nordisk, just 2 weeks after receiving regulatory approval for its weight loss pill, will begin selling it across the U.S. in 70,000 pharmacies. Novo Nordisk was one of the key gainers in the European session, and as the ADRs are headed higher by just shy of 5% off the back of this excitement about the potential volumes and margins that Novo Nordisk could gain.
Yeah, launch day. I'm sure there'll be plenty of happy clients out there as well. Valerie, thank you so much. Valerie Titel there in London. Well, the bull run is not over, but drivers are evolving. That's according to JP Morgan's Sitara Sundar. She writes this: broader earnings participation and secular growth drivers suggest there is still fuel in the tank. We're also increasingly more constructive on core private equity after 3 years of underperformance. Pleased to say Sitara joins us now. She's head of alternative investment strategy at JP Morgan Private Bank. So, evolving drivers, but yes, the bull run will continue. What are some of these evolving drivers? Dig a little bit deeper for us.
Yeah, definitely. First, thank you so much for having me, and Happy New Year. I think when we look at 2026 versus 2025, there are a couple of things that are similar. We think that artificial intelligence, even where we are in the cycle right now, is going to continue to bolster not just technology, through semiconductors, but the CapEx cycle is still going to continue. So that's also going to support some of the AI infrastructure plays when you think about industrials and utilities. Now, what's different this year is this idea that we're finally going to see this long-awaited broadening of earnings growth into sectors outside of just those that are influenced by artificial intelligence alone. So when we think about that, when you look at 2026, we expect double-digit earnings growth for 7 out of the 11 gig sectors. And when you think about the sectors that we're positive on, financials is starting to come back into the forefront, not just on the benefits that you would get from a steepening yield curve, but also the increase in capital market activity. Healthcare, after being in the doldrums for multiple years, we're starting to see a revival in M&A activity, drug innovation, especially as patent cliffs start to become more and more of an issue over the next few years. But then separately, truly, when I think about the beneficiaries of a broadening in earnings growth, that's not just a public market story. That is truly a private market story as well. And when you think about the median buyout manager, at least within the United States, that has had a tough time versus the S&P 500 and the Russell 1000 growth, and even some of the smaller cap indices over the past few years, given this AI-fueled rally within the hyperscalers that exist primarily within public markets, that broadening earnings growth story should set up well for core private equity managers this year.
Definitely want to talk more about private equity in a moment, but I do want to ask you, every time we had a sort of a CapEx announcement, the market wasn't quite sure how to take it last year. So, you know, is that going to happen again this year if you get more CapEx announcements, or do we need to see the spending, you know, happen and then for there to be a positive impact on the bottom line?
The ROI needs to be there this year. I think that your point is a very good one in the sense that we're moving towards a part in the cycle. We're now 3 years into the cycle. We're moving towards a period of time where we need to see, and markets need to see, and investors need to see that the capital that's being put to work is actually impacting profitability. But interestingly, I mean, research is a little bit mixed on this, but there are some studies that show that those who are AI-forward companies have actually been growing revenues at about 1.7 times those that are not incorporating artificial intelligence into their ecosystems. So we're already starting to see the impacts in real time. But yes, I do agree that the return on investment and profitability is going to be critical, not just for justifying the CapEx expenditure and dissuading people from viewing that AI is a bubble, which we do not believe, but also to see an increase in adoption rates for enterprises.
Now, you talked about core private equity.
Yes.
I mean, does the great time start now, or are we going to build up to it? And why should the tide be turning for core private equity?
Yeah, I think there's two different fundamental drivers, and I tend to bifurcate it. One is what we're seeing in capital market activity, and we're starting to see IPO volumes and windows start to open up, and we expect this year to be a strong year from not just IPO activity, but M&A activity as well. Part of that is due to the sentiment starting to improve within markets, but the other part of that is resilient economic growth and easing financial conditions. Historically, easing financial conditions has been positively correlated with increase in deal making. And then two, it's the underlying fundamental drivers at the end of the day. Core private equity, in a similar way to how we underwrite companies on the public side, it's a earnings growth story. And I think what surprises people, and sometimes even surprises me, is that if you look at the median private company, it's actually grown earnings at 11.5% over the past decade, and we expect that to continue and accelerate this year.
Will there be themes within that, though? So core private equity that's been involved in, say, the energy transition, or you know, the AI energy or the data center universe, will they have better luck this year than some of the others?
Yeah, I think that when we think about opportunities moving forward, there's 3 buckets. The first is when we just mentioned artificial intelligence, the idea that we're moving from the infrastructure and starting to broaden into the application layer. 95% of software companies are within private markets. If you want to get access to the application layer, which could be a $6 trillion opportunity by 2030, that only exists in private markets. So that'll be a strong bolster and support for earnings growth moving forward. But separately, when you think about healthcare innovation, 70% of drug innovation actually happens through M&A. Big pharma companies kind of buying these like small and mid-cap type of biotech companies, and that drug innovation primarily happens within private markets. And then finally, the security theme that you mentioned, when you think about energy transition, supply chain security, and defense technology, there's a lot of innovation that we're seeing within venture capital and growth within that space.
How careful do private equity markets have to be, though? Because just as public markets are built on trust, you know, there's a lot of trust that's needed in private equity too, and if that goes away, then we could have a problem, right? So you don't want to go to somebody with a deal when, you know, the market is not ready for it.
So I think there's a couple of ways that I would think about that. One, in a similar way to how we think about public markets and the idea that active management is critical in a public market environment that is becoming increasingly concentrated. Similarly, from a manager selection perspective, what we're seeing within private equity is that the industry itself is not stagnating, but it is stratifying. And what I mean by that is we're in a changing macroeconomic environment, especially post-GFC. When you looked at private equity managers post-GFC to kind of call it pre-2022, about 50% of the returns were due to multiple expansion and leverage. That formula is going to change moving forward because we're in a period of time where rates are going to be higher, inflation is going to be higher, and while economic growth is going to be strong, it'll probably be closer to potential. So that operational know-how, those that can actually leverage artificial intelligence to increase profitability within those underlying companies, that operational improvement to improve underlying earnings growth is going to be critical for private equity managers moving forward.
Sitara, thank you so much. An optimistic view to kick off the year. That is Sitara Sundar of JP Morgan Private Bank. Now to other top stories trending on the terminal this morning. China is imposing export controls on dual-use items to Japan, those with the capacity to be used for military purposes. The Commerce Ministry says the move is to safeguard its national security interests. In a separate statement, China again criticized the Japanese Prime Minister's recent comments over Taiwan. Michael Platt's private trading firm Bluecrest Capital Management gained 73% last year, according to Bloomberg sources. Bluecrest's returns since 2016 are estimated to be more than 7,800% based on compounding returns and assuming no capital is taken out of the firm each year. And the Trump administration's attempt to slash billions in NIH research overhead costs rejected by a federal appeals court on Monday. That's driving European life science stocks higher, helping to boost the stock 600 healthcare index. Coming up, Venezuela regroups. Delcy Rodriguez is sworn in as acting president as Maduro has his day in U.S. court. That's next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1-1.
is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Venezuela has sworn in Delcy Rodriguez as the acting president. This after Nicolas Maduro faced the courts in New York City. Let's bring in Mika Solner of Bloomberg Government in Washington for more. Mika, so we have an acting president now in Venezuela. How secure is Delcy Rodriguez in that role, and how stable is Venezuela going to continue to be?
Yeah, I think right now all eyes are on her in terms of how she is actually going to coordinate with the U.S. when it comes to what Trump is adamant on saying is going to be a complete takeover of Venezuela. He has mentioned that she seems to be gracious and willing in some ways, but she's given out mixed statements in terms of how she feels about Maduro's capture. I mean, at one point she called it barbaric, and then she softened her tone. So we're really going to have to see what her posturing is going to be here when it comes to her leadership and how strong she wants to go against or work with the U.S.
And she'll have to satisfy many factions in Venezuela herself. Now, President Trump has asked Marco Rubio to lead the Venezuela overhaul after the Maduro arrest. What do we know about what Rubio wants to accomplish in Venezuela?
Yeah, I think that there is a lot of questions, and we're going to find out more answers today. President Trump is going to brief House Republicans, but Marco Rubio obviously has his plate full, and he's been kind of a go-to person when it comes to Trump's foreign affairs agenda. But this was really actually one of Rubio's top priorities was Venezuela and kind of leading the ground game when it comes to those strikes and coordinating, in that aspect. So this is really obviously a top issue for him. So, we'll see what he does here.
And then Trump floated the idea to NBC, in fact, that he might reimburse Venezuela oil investments. So that would, I guess, incentivize some of the big oil companies to perhaps go in. Do we have any more details about what those incentives might be?
Little detail yet, but I think that's, again, something that's going to come up today.
Talk to us about Ukraine. European and U.S. officials are in Paris at the moment. In fact, Zelensky has just arrived in Paris, and we know now that that meeting is going to include Jared Kushner and Steve Witkoff. What are we hoping that might achieve this meeting?
Yeah, I think the meeting today is largely going to be surrounded, focused on Ukraine security protocols. I mean, that's been a top issue here, and the administration has been really pushing to quickly try and reach a deal between Russia and Ukraine, and they've been trying to advocate for both sides. Obviously, there's been some criticism that the administration is playing too much into Russia, so I think this is going to be a really, really, really critical talk here.
Mika, thank you. Mika Solner of Bloomberg Government. Turning to tech, the CES show kicking off in Las Vegas.
This is the Vera CPU. It's got 88 CPU cores, and the CPU cores are designed to be multi-threaded. But the multi-threaded nature of Vera was designed so that each one of the 176 threads could get its full performance. So it's essentially as if there's 176 cores, but only 88 physical cores. So these cores were designed in using a technology called spatial multi-threading. But the I/O performance is incredible.
NVIDIA's chip announcement following others from the big players. Joining us now is Bloomberg's Neil Campling. Neil, what did we hear that we weren't expecting to hear out of at least the first day of CES keynote speeches?
Yeah, I think one of the really key things today is that what we've heard so far is now we're getting practical AI agents in products rather than just pure AI concepts. So there's been a lot of focus, obviously, on hyperscalers and data centers. And what I think we've had so far at CES is we're actually now seeing devices and products that are integrating these AI solutions. And we heard actually, first of all, from Samsung at the start of CES, who basically talked about Gemini with 400 million smartphones using AI Gemini and expecting to get to 800 million by the end of this year. That is proper adoption curves as we see it for technology, which is key, I think, to taking now the concept of AI into the adoption layer that will help to justify the investment curve and the ROI for these big tech companies.
Yeah, beginning to see the shift there. We also saw AMD unveiling a new chip, and this specifically for corporate data centers. Tell us about this chip and whether it's revolutionary or not.
Yeah, absolutely. So obviously for AMD, often described and seen as the closest competitor to NVIDIA. And as you're having the upcoming call with the CEO, and I think that you're here, and we heard last night that AMD believe they are just getting started in terms of the AI there, and we're seeing performance metrics that really back up the technology innovation curve. And so what you'll see probably down the line from here is as the adoption takes off, you'll see the pricing of those AI chips come down, because actually what we need to remember is tech should be deflationary for mass adoption, which is a positive for the tech adoption curve. And AMD clearly are on track in terms of their tech curve to improve with the new AI chips that were announced overnight.
Another thing that was interesting was Intel showing off computers. Are we all going to be getting back to our Intel computers again? Obviously, it's going to be central to Intel's comeback, Neil.
Yeah, absolutely. So the new platform here, which is the 18A technology for Intel for the new notebooks, laptops, it's the first products on this new platform. As they've said, it's key to really their comeback. What needs to be seen from here is whether users adopt those new laptops, but at least we are now seeing those first products coming out on the market. Now that's key because in the last 5 years or so, Intel have often missed the innovation curve and missed the launch dates for their products. So at least we're getting some positive news from them in terms of the timing of these releases for these new platform and the new chipsets.
And that was only evening one. Lots more to look forward to out of CES. Neil Campling, thank you so much for all of that context. Coming up, we're going to get you set up for your trading day with inflation data and, of course, Fed speak ahead. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Bonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up to the minute news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
Growth hasn't been that bad. What's been bad is the employment growth. Why is 26 going to be different?
The balance of power in the jobs market, I think, has shifted towards employers.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
What really is going to matter is the inflation data and the jobs data we get in January.
There's a lot of strength despite some of the weakness that we see in the unemployment rate.
The December jobs report, Friday on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now let's take a look at what's ahead today, your Tuesday session. So we kick things off with Richmond Fed President Tom Barkin, who's speaking at 8 a.m. Eastern, the first Fed speak of the year. And then we get services and composite PMI. That's at 9:45 Eastern, continuing the raft of economic data, which will obviously culminate in the jobs report Friday. And do tune into our special coverage live from CES starting at 11 a.m. Eastern. Now we have interviews with tech giants from Lisa Su to NVIDIA's Jensen Huang, Qualcomm's Cristiano Amon, and many, many more. Now let's take a look at some pre-market movers. Vista, it's agreed to pay roughly $4 billion for 10 natural gas-fired power plants in the U.S. Northeast and Texas. It's obviously deepening its AI bet, and that's lifting the stock as we see this burst of AI enthusiasm kicking off the new year. Microchip Technology up another 4.25%. It's lifted its sales forecast and beat estimates. And of course, earnings season in general starts again just in a couple of weeks' time. Zeta Global also higher by 11% here. This on reports of a strategic collaboration with OpenAI to power conversational intelligence and agentic applications. Is it any wonder we're seeing this burst of AI enthusiasm send these stocks higher? Let's take a look at the macro picture, though, because after an update yesterday for the major indices, 0.6% for the S&P 500, 0.8% for the Nasdaq 100. We're seeing a mixed picture today, so very small moves for the major indices. But do take a look at the MSCI Asia Pacific Index. It was up 1.2% for a second day of gains. And we also have headlines out of the PBOC in the last hour saying that they're going to use the RRR and other monetary policy tools very flexibly this year and going to shore up confidence in China's markets. Let's take a look at bonds. We're seeing just a basis point or two higher towards the longer end of the curve. And then look at copper. It's continuing its run higher, front-loading in the United States in case there are more tariffs later in the year. It's above 13,100 a ton now. That's it for Bloomberg Brief. Surveillance continues the conversation.
Here is understanding. These digital assets have the ability to change the payment landscape of the world. and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. Because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We come into the new year prepared for some volatility.
Maybe it's time to rebalance a bit.
We're already seeing some rotation.
What the market doesn't understand is the president's willingness to take risk.
If we get more macro risk like this, it's going to be hard to keep risk price where it is.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday within 1% of record highs. Global equity markets shaking off heightened geopolitical risk as Samsung and TSMC are powering a big rally in Asian stocks. The Nvidia boss is talking up demand for a new generation of chips. Vera Rubin is in full production.
Well, the whole band is back together. Welcome back, John. You know, honestly, to me, was there a signal with the alligator skin suit coming out to the stage? It wasn't just the regular leather jacket. It was the alligator jacket that we got from Jensen Huang. To understand what Vera Rubin was requires some sort of astrophysics in terms of 88 cores and exactly what it does. But the fact that it will be unleashed at the end of 2026 really highlights how much they're expediting their schedule to try to continue with the dominance over the field.
I won't bother trying to explain the technical details. I'll just point to the price action. The stock is higher in the pre-market by 0.6%, but the fireworks are elsewhere. They're in Asia. Look at Taiwan Semi. Look at Samsung Electronics since the start of the year. The Kospi, another all-time high.
Yeah, this feeling that really the innovation is coming from there with consumer products in particular. And Samsung, interestingly, using Google's Gemini in particular with some of its artificial intelligence. The sort of wars are establishing who is going to be the potential winner and what the next node of artificial intelligence in the way we consume it really will look like.
It really is a tech story that's insulating the equity market worldwide from the story we talked about all weekend, which is the heightened geopolitical risk and the mess that's emerging over in Venezuela.
That's right, and we do see right now Venezuela is in this period of transition. Yesterday, Maduro's former VP is now running the country, Delcy Rodriguez, and you're hearing that from the business community and basically from the administration, they view this as someone who is pragmatic that they can work with. Interesting comments yesterday from the president that matter to the business community has to do with the oil sector. He thinks it can take less than 18 months. Now, I haven't spoken to anyone in this industry who thinks it could be that quickly to get Venezuela out to the productions they had in the 90s of north of 3 million barrels a day.
If you break it, you own it. They own it now. It was already broken. There's a lot of fixing to do in that country.
Well, and there's a real lack of understanding of what exactly it will take. There was a 2-hour briefing yesterday with members from the House and Senate in Capitol Hill. We don't have a clear sense of the answers to that. So now the question is, how closely is the United States working with the vice president, now the president, Delcy Rodriguez, and what's the ultimate goal? What does it mean to run a country when you don't have troops on the ground?
Well, speaking of goals, let's talk about the agenda, and not the agenda down in Venezuela, the agenda down in Washington, D.C., the goals of this Republican Party going into the midterms as we shift towards affordability.
Absolutely. Today at 10 a.m., the president will be having this retreat. He'll be greeting House Republicans. And you'd think today was going to be about what you just discussed, affordability, going into a huge election year, midterm elections this November. But first, there's a lot of questions, Republicans, whether they're saying it out in the open or behind the scenes, about what is taking place in Venezuela. They do want to know whether or not this president is serious about potentially at some point putting boots on the ground.
If you are just tuning in, welcome to the program. The price action pretty muted so far this morning. Equities going nowhere on the S&P 500. It's slightly negative. We're down about 0.03%. Coming up this hour, we'll catch up with Julian Emmanuel of Evercore RSI as stocks look for a third day of gains. Sonal Desai of Franklin Templeton Fixed Income on the risk of stagflation, and Frankly of HSBC as NVIDIA rolls out its next generation of AI chips. We begin this hour with stocks within 1% of all-time highs. Julian Emmanuel of Evercore setting a 77.50 price target for the S&P by year-end, expecting more of everything that drove 25, more AI, more stimulus, more earnings growth, more volatility. Julian joins us now for more. Julian, good morning.
Good morning.
Good to see you, sir. Welcome to the program. Everything that worked last year is going to keep on working. The temptation to choose something new, find that new thing. Why aren't you embracing it?
So the issue here is, and again, this concept of concentration risk. If you go back to the beginning of this century, when the top 10 stocks were 25% of the weight in the S&P 500, there was a thought that could not be exceeded. We're now at 40%. And frankly, again, if you think about concentration risk, you look at a market like Korea, where in the Kospi, you've got two stocks that account for 45%. So the point is, the math doesn't work for these stocks not to market perform or outperform. But the truth is that the capital market cycle has yet to fully play out, and the beneficiary of a robust capital market cycle, time and time again, are the stocks that led you into the cycle.
So for anyone that comes on a program later on this morning saying, dive into what's happening in Asia, what's developing in South Korea, you're saying take a step back, resist?
No, we're basically what we're saying is that, you know, there should be a discomfort around the fact that the market is really clustering in this theme, but that discomfort, as we saw earlier at the end of last year, with the discomfort around the one marquee name that has taken on a great deal of debt to finance CapEx, the majority of these companies have, you know, very, very robust cash flow. And so therefore, you're going to have this sort of virtuous cycle of earnings continue to be driven by these names.
Is the bet right now just to bet on the biggest tech companies in both regions, both the U.S. and China, betting that they can consolidate their dominance going forward, regardless of whether the U.S. or China wins?
It does come down to that to a great degree, and you know, we get asked all the time, again, should we rotate to other sectors? We think there'll be plenty of opportunity to do it opportunistically. There's going to be a continued skirmish around healthcare towards the end of this month, obviously. In fact, with the one big beautiful bill, tax benefits starting to kick in later this quarter, we think there's an opportunity for consumers, you know, beaten down consumer names to rally. But you step away, and the bull market has been led by these names and these themes, and we think it just has further to run.
There might be some people who read what's going on in the news and then look at markets and say that everybody's just going, la, 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 la. We're not going to listen to anything that could potentially be game-changing. Is it just bet on what you know, and that when you don't know so much, you just ignore it?
Well, I think, again, part of the rationale around AI is you're still betting on something that you don't fully know, okay? And for us, what we think is going to happen in 2026 is you're going to go from the inflection year, 2025 for AI adoption, to the year where it accelerates when corporate, you know, global corporates realize that if they don't find ways to drive revenues and cut costs through using AI, they will be at a competitive disadvantage.
When Lisa says things going on in the news, she means Venezuela. And you actually write in your note that you think, if anything, Venezuela increases the chances of an AI bubble. Why is that?
So think about a confluence of events. First of all, we found out a week and a half ago that the economy's last reading was actually stronger than expected. Thinking about the stimulus that's ahead, it sets up more economic upside in the U.S. In fact, our team just took its 2026 forecast up to 2.5%. From a Fed perspective, we actually think there won't be 2 cuts. There'll be 3, possibly more.
How do you have both? Growing economy, fiscal stimulus, potentially higher inflation, and then you're saying 3 Federal Reserve cuts?
Because you have a political backdrop where the impetus is to keep the consumer moving forward as we get to the midterm elections. Now, on Venezuela, basically the issue here is long-term, it's likely a moderating influence for oil prices. And if you think about oil prices staying, flat for longer, that's bullish for long-dated bonds.
Let's park Venezuela just for a moment. Your view on the Federal Reserve becoming increasingly politicized. In the last 24 hours, we've had a series of guests come on the program and talked about the unintended consequences of pushing for lower interest rates at the Federal Reserve, galvanizing the other members of the committee to push back against the push for lower interest rates. Why are you taking the other side of that?
Essentially because a couple things is that for the most part, even though the economy is strong, there's still this dichotomy between what the labor market actually looks like. Obviously, a lot of that has to do with immigration policy, et cetera. But the fact of the matter is that politically and sort of psychologically, to see monthly job gains closer to 0 than closer to 100,000 going forward will be something that, given the fact, and we also think that the tariff flow-through has reasonably fully flowed through. And so, a moderate jobs environment and a lower inflation trajectory just continue to drive the ability to cut rates.
Let's finish by pushing that through the equity market, consumer discretionary. Does it turn things around?
We do think so. And again, our sector preferences, consumer discretionary, communication services, infotech, the subtext is all of them have large exposure to AI, but in this algorithmic trading world, what's good for the consumer is going to flow through and be good for AI names and, boost that sector.
Gillian, we hope you're right. You're going to be sticking with us. Gillian Manuel there of Evercore. I would say controversial call on this Federal Reserve. A lot of conflict there, some tension on the committee already about the push for lower interest rates, and some on the committee, I imagine, who feel like they need to defend the independence of the institution.
You've seen right now inflation run above 2% for more than 5 years. You have an increasing number of Fed members who have come out and said, we are increasingly concerned about price stability and the tax that this is on particularly lower income Americans. Definitely a question around that, and definitely a question about how sanguine the reaction would be in markets if this was a truly politicized Fed that would push front-end rates lower, even at the expense of long-term inflation.
Eddie Ardeni made the point yesterday that actually Trump's pressure on potentially whoever's going to be the next Federal Reserve chair is actually going to make the other committee members galvanize to speak out against that Fed chair, which in the end potentially will make a more independent Federal Reserve.
And we still don't know who that next Fed chair is actually going to be because we're still waiting. This morning, at least, bond yields are higher by, let's call it 2 basis points, the 10-year at 4.1868. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Let's cross over to Yahara Arnott for more. Hey, Yahara.
Good morning, John. Delcy Rodriguez is officially the acting president of Venezuela. Speaking after being sworn in, Rodriguez telling the National Assembly she did so with pain because of the suffering caused by, quote, illegitimate military aggression. Rodriguez vowing to guarantee the peace, economic, and social tranquility of the people of Venezuela. Meanwhile, President Donald Trump says he wants U.S. oil companies to play a key role in rebuilding Venezuela. The president saying oil majors could be up and running in the country in less than 18 months, and the U.S. government could subsidize their efforts. Sources telling us here at Bloomberg that Energy Secretary Chris Wright plans to speak with oil executives in Miami this week. And NVIDIA CEO Jensen Huang announcing new AI models and tools designed to speed up the development of autonomous vehicles. The company is aiming to create vehicles that can think their way out of unexpected situations, such as a traffic light outage. Tune in to Bloomberg Tech at 1 p.m. Eastern for interviews with the CEOs of NVIDIA and Siemens. That's your Bloomberg Brief. John?
Yahara, thank you. Looking forward to that. Catching up with Ed Ludlow a little bit later this morning. Up next on the program, taking control of Venezuela.
What the president said is true. The United States of America is running Venezuela. We live in a world, in the real world, that is governed by strength, that is governed by force, that is governed by power.
A conversation up next with Bloomberg's Laura Davidson, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Within 0.5% of all-time highs on the S&P 500, just about unchanged so far this morning. On the Nasdaq, positive by, let's call it 0.1%. A lot of bullishness out there. We remain aggressively risk-on. That came from Max Kettner of HSBC. Here's one from Mike Wilson of Morgan Stanley, Brammer. The surprise for 26 could be that we see multiple expansion for the median stock, in addition to strong earnings.
People are betting on fiscal stimulus, they're betting also on monetary stimulus, and they're betting on the AI explosion continuing. A question of how much you can ignore the macro and continue to bet on these micro stories with the overlay of the promise of government support.
So much of this conversation is insulating this equity market from this. Under surveillance this morning, taking control of Venezuela.
What the president said is true. The United States of America is running Venezuela. We set the terms and conditions. We have a complete embargo on all of their oil and their ability to do commerce. So for them to do commerce, they need our permission. For them to be able to run an economy, they need our permission. So the United States is in charge.
So here's the latest this morning. President Donald Trump insisting the U.S. is not at war with Venezuela as the country swears in a new government. Trump telling NBC News the U.S. may subsidize oil companies' efforts to rebuild Venezuela's infrastructure in a project that could take 18 months. Bloomberg's Laura Davidson joins us now from Washington with more. Laura, I don't think it's hyperbole for me to ask you who's next, because listening to Stephen Miller in his conversation with CNN, there's a real sense that there might be another nation in the mind of the president.
Yes, this plan really, in terms of what happens next with Venezuela, is really in the minds of the president and his top White House officials, and doesn't really seem to have buy-in yet from both the Venezuelan people, Delcy Rodriguez in Venezuela, as well as the oil companies, which Trump keeps talking about as being a key part of this plan. That U.S. companies, Exxon, Chevron, ConocoPhillips, will go into the country, invest billions of dollars to get the country's infrastructure rebuilt, which has really fallen into disrepair in several years. But we've really not heard much at all from the oil companies. They have not, said that they are on board with this plan. We've heard that Chris Wright, the energy secretary, says he's going to talk with them this week. But it seems like the administration moved far faster than any other party in this whole operation.
There is a lot of rot and corruption in that country, Laura. That doesn't change with Maduro's exit. How different is the new boss to the old boss?
That really remains to be seen. Delcy Rodriguez has been a longtime acolyte of Maduro. She has been very loyal to him throughout the years, though she is much more of a technocrat than an ideologue. So it's possible, and we've started to see signs of that, and really in just the past 24, 36 hours, that she is willing to work with the U.S. administration. She put out, sort of a proposal for a cooperative arrangement here, and it's possible that we could see a partnership going forward, but this is all very tenuous at the moment.
Laura Davison down in Washington, D.C. Laura, thank you. Anne-Marie, we've talked a little bit about this. The absence of resistance over the weekend does not mean that you might not see that resistance in the weeks and months to come.
No, and even last night, there actually was a lot of gunfire outside the palace yesterday, and there was concerns and rumors on the ground of this potential coup. But when it comes to Delcy Rodriguez, to Laura's point, this is someone who over the weekend was very defiant, calling what happened barbaric, and then quickly put out an olive branch. And for the oil sector, they think this is someone potentially they could work with. She has been the country's energy minister. She has showed up to OPEC meetings. She knows this industry, and clearly this administration thinks, at the minimum, this is someone that's pragmatic. It's what Robert said yesterday when it comes to regime change, not big R, little r.
Well, let's focus on the energy infrastructure and the energy sector. That's a pretty aggressive timeline, 18 months, based on what we've heard elsewhere.
Yeah, it's a pretty aggressive timeline and a pretty aggressive pledge that potentially the U.S. government could back some of these oil companies and give them the money to do some of these projects. A lot of questions still swirling. Also a question about how on board oil companies are with this. Unclear how much they've talked with them. Chevron saying that they had no advance knowledge of this whatsoever. So a lot of questions still remaining, including U.S. companies that still are owed billions of dollars for the assets that were taken back to when the entire industry was nationalized a couple of decades ago.
Maybe they weren't given explicit knowledge of what was going to happen, but the Wall Street Journal does say that Trump basically said to them, something is coming, and you have seen the buildup. And on page 15 of their national security document, it said exactly what they want to do in this hemisphere. But to your point, the oil companies that potentially may not want to go in, the ExxonMobil, ConocoPhillips, got absolutely burned, and they have not got their money back from when they were kicked out of the country. So they need to know that the U.S. government is going to be behind them if they decide to take this venture.
The key here is crude. WTI at 58.49, Brent crude at 61.99. We've got Julian Emanuel of Evercore still with us. Julian, you talked about the importance of $60 crude. Just flesh that out for us. Why is it so important to the stock market?
Well, it's the stability of the price. And look, I think one of the things that Trump has been very happy that he's been able to deliver going back to this first year is that visibly, in terms of the affordability crisis, there is not an affordability crisis at the pump anymore. Gas prices have continued to fall, and what we've seen is that has a tendency to bleed through to other areas. It has not yet, and it may not. I mean, if you think about what happened in the commodity markets yesterday, the surge in copper was anticipatory for this build-out that we're going to have in Venezuela. But the fact is that the consumer, among the prices that the consumer anchors on, the energy price is extremely important. And in that respect, sort of knowing that you're below $3 a gallon is very psychologically beneficial.
Is it consistent to have low oil prices and an outperforming energy sector?
It's a rough go to think about that in the long term. But again, and I think we've seen this over the entirety of this rally, there's a massive dispersion, the lowest correlations of really in many years among stocks. And I think when you look at the energy sector, you're going to see winners and losers based on where this is all going.
Do you see a reason to invest more in Latin America as a result of the Don Roe doctrine that we keep hearing about?
Interesting question. Frankly, the reason that we think that the rest of the world, Latin America included, is more interesting is because we think you saw a very significant top in the dollar a year ago. And all else equal, again, over the long haul, what we started to see was portfolio rebalancing away from the U.S., dribs and drabs, slowly, and frankly, that's not going to accelerate given the fact that our view that the AI theme has further to run. But over the long term, if you believe, as we do, that you've made a significant top in the dollar, you want to diversify to the rest of the world.
The oil majors are jumping on this news, not so much crude energy. Before the weekend, as opposed to after the weekend, would you have a different view on potentially wanting to invest in the U.S. majors?
Again, if you look at 2025, one of the themes has been the Trump administration sort of influencing the selection of winners and losers on various themes, obviously steel, rare earths, et cetera. Clearly, there's an element of this happening now. We don't know what it looks like, but we do know that Donald Trump is a businessman, and the endorsement of Rodriguez, given her experience in the oil patch, really tells you that that's where the emphasis is going to be.
It does potentially help put a lid on oil prices, but when you think about AI, there's one issue of affordability that Americans are dealing with, and that's electricity prices. How are you thinking about that this year, given it is a midterm election year?
Well, it is no question that that is the push-pull. It's been the push-pull the entire year, but again, all else equal, the president has shown an ability to influence events that moderate oil prices, and at some point, that's likely to flow through to the rest of it. But again, the intent is because of the recognition of the importance of AI as a theme, both for the U.S. and on the U.S. corporate level.
Can we finish with a sentiment check? Year-end price target, 77.50. Been busy speaking to clients. When you talk to them, are they more excited about what can go right this year or more worried about what can go wrong?
I would say it's in balance, to be perfectly frank. What bothers us is that this is the first time in my memory, going back to when I was on the buy side, that there was no strategist on the street that had a price target below where the index level is. Thank you, Bloomberg, for compiling that information. And what we found that over the course of last year, when sentiment got tipped too far in one direction, you had pullbacks. And here we are at VIX 14. So to assume that it's clear sailing, for weeks on end is probably a faulty assumption.
Stifel's Barry Bannister, the low at 7K on the S&P year end.
No one's expecting any kind of significant decline. I do wonder, though, what the gains mean in the context of metals, in the context of potentially the dollar losing value. Is this a different kind of rally when it comes to the inflation that you're seeing in real assets versus the financialization of the system?
Julian, good to see you.
Good to see you.
What is it, January 6th? We can still do Happy New Year?
And we can do congratulations, John.
Larry David, I think it's only the first 3 days.
Oh, for gosh sakes. I think you could do it until February.
The first full week back.
Super Bowl.
7 days.
Super Bowl.
Super Bowl's the cutoff.
Yeah. That's ridiculous.
I think Valentine's Day. Happy Valentine's Day. Happy New Year.
That is ridiculous. Gillian, thank you. Up next on the program, we'll catch up with Sonal Desai of Franklin Templeton Fixed Income from New York City. You're watching Bloomberg TV.
in case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
Two-day winning streak on the S&P 500 this morning, just about unchanged so far. Yesterday on the Nasdaq, snapping a 5-day slide on the Nasdaq 100, adding just a little bit of weight to the rally, up by 0.06%. The bigger moves are actually over in Asia, so check it out. The Kospi in South Korea in 3 sessions up by more than 7%. Another all-time high in today's session, up by 1.5%. Global equities doing nicely. MSCI Asia Pacific absolutely flying to start the year.
Yeah, led by big tech, because ultimately the consumer-facing technology coming out of Asia really has been driving the boat. Korea is interesting also because Korea and China have recently tried to mend ties, so people looking at some geopolitical risk potentially waning there, but really a focus on the rest of the world, given the fact that so many people think that the dollar really is going to weaken this year.
People love to throw mud at the S&P 500 and concentration risk. The Kospi, Samsung Electronics.
A lot of mud to be thrown around.
There's another company in there too.
Yeah, exactly. Just
maybe
one.
2 companies worth talking about at the moment over there.
Look,
I mean, I'm not throwing too much mud, you know what I mean?
Yeah,
but
the mud is warranted. I mean, ultimately, we're talking about Samsung and some of their Android phones and potentially getting ahead with respect to Google and Gemini, et cetera. You're right. It's concentration risk all around.
Futures this morning doing okay. We're just about unchanged on the S&P 500. Turn to the bond market. 2-year, 10-year, 30-year bond yields this morning high, yesterday lower. ISM manufacturing coming in a bit softer than expected. Through the week, you're getting a ton of economic data to start the year, looking back to the month of December and a preview of what's to come. Looking ahead to the payrolls report really on Friday. We're building up to that big moment Friday morning.
And it potentially is the first cleaner read since the government shutdown. Yesterday's ISM manufacturing was interesting because it came out weaker than expected, in contraction, yet again, a 14-month low. And yet it wasn't bad enough to be bad news for equities. It was just bad enough to keep the Fed in action, which really is going to be the key goal for so much of this economic data, at least according to bond and stock traders.
More data coming up a little bit later this morning as we count you down to the opening bell. About 3 hours away. Let's get you some morning movers and cross over to Danny for more. Hey, Danny.
Hey, John. I'm going to stick with the tech theme because we are in the middle of CES in Las Vegas, and we're getting some announcements. One of them being that NVIDIA is on track with its new Rubin chips. NVIDIA not really moving this morning, but CoreWeave is, because they have announced that their next data centers in 2026 are going to be integrating Rubin technology. They're going to be one of the first cloud providers to do so. So those shares being bid up by more than 1.5% this morning in the pre-market. We also got an announcement from Intel, new laptops coming from Intel with new processors. That's on track too. The company over there saying that it's going to help with AI integration into laptops. It's really a first test to how much Louboutin is able to do with all these investments coming into Intel. Those shares up just under 1%. Finally, wrapping things up with some earnings in the tech sector. Microchips, a semiconductor company rallying 4% in the pre-market, pre-announced earnings yesterday and upgraded its sales outlook. Also with the theme of AMD's Lisa Su saying that demand is there. Citi saying it's a positive first read and it's an early read, so more good news might be to come, John.
Danny, thank you. We'll take that. Thanks for the update. More from Danny in the next hour. On our radar this morning, the president Donald Trump telling NBC News active Venezuelan leader Delcy Rodriguez has been cooperating with officials. President Trump clarifying there was no contact with Rodriguez prior to the capture of Maduro. Elsewhere, U.S. and European officials meeting in Paris to try and finalize security guarantees for Ukraine. Sources telling us here at Bloomberg that negotiators are working to integrate a U.S. proposal that could put American boots on the ground after the war. And finally, the president also expecting to address House Republicans at their annual GOP member retreat later on this morning. Republicans set to discuss their 26th agenda ahead of the upcoming midterm elections later this year.
So a lot of people are expecting Venezuela to dominate the conversations. I'm actually more interested in some of the other things, the fiscal agenda that could potentially come to the fore with respect to healthcare and some of the other initiatives, especially given some of the bills that could come to the floor this week. A real question here, especially from a market perspective, how much fiscal and monetary will backstop this market. We might get a real clue after this meeting.
This was supposed to be all about affordability into the midterm election. This is what Trump's top pollster have already told the speaker and other House members. This is what you need to focus on. But now the elephant in the room is going to be completely overshadowed by Venezuela, because the president has been talking about, since he first ran in 2016, that he will not nation build. And how do you do that? And what is the extent of U.S. military and economic aid to Venezuela when you said you will not nation build? But at the same time, the president is saying he's running the country and he's not afraid of potentially putting boots on the ground. And that's got a lot of Republicans up in arms ahead of the midterm.
Who are the notable Republicans? Where you see the cracks in the party in Washington?
Well, at the moment, the ones that are the most vocal right now are definitely coming from the Senate. But I think today, after this closed-door meeting and this retreat, you're potentially going to hear more from House Republicans. The speaker yesterday kept defending and saying, we're not running the country, there are no boots on the ground. And it is very different than what the president is willing to say out in the open to the press.
You say closed door. Doesn't this thing leak in real time?
Yes.
Doesn't it usually leak in real time?
I think the president's remarks potentially could be if they open that up. But the real conversations are going to be,
aren't they like texting Jake Sherman in real time? We often see that, don't we?
Yeah, sometimes.
Yeah. I want to understand how this is reading through to the constituency, right? Like, this is one thing that we haven't seen, and there has been a real unity so far among Republican Congress members out loud. Have the polls ratified that, considering exactly what you just said, which is this wasn't exactly on the MAGA agenda?
Only 1/3 of Americans expressed support for this in the most recent poll from Reuters Ipsos that was done right after this. I think a lot of Republicans are taking this twofold, and we spoke about this. You can think the operation in itself was stunning, bold, brilliant. Delta Force, the American military might, is incredible. At the same time, a lot of Republicans are questioning, what does this signal? What's the day 2 plan? And what is the timeline for all of this really to evolve?
Look out for that very leaky closed-door meeting a little bit later on. Elsewhere, investors looking for a fresh slate of economic data to kick off the new year. Sonal Desire Franklin Templeton Fixed Income writing, I maintain a constructive outlook for U.S. growth. There is a lot of uncertainty, however. I see the balance skewed towards inflation risk, especially in the first part of 26. And I'll join just now for more. Sonal, good morning. It's good to see you.
Good morning. Nice to see you.
It's very nice to see you. Happy New Year. Let's talk about that source of inflation risk. What's the most prominent source of inflation risk for you and the team?
The fiscal impulse. So you were just talking about what we hope to see. But the reality is, this week, we already know the big, beautiful bill is going to hand out a lot of goodies across the board, whether we're talking about the consumer, whether we're talking about industry. All of these factors lead to inflation, and we haven't actually, something which comes on and then moves off the front page is the $2,000 rebate check. Remember that in the first 3 months of the Biden administration, we helicopter dropped $1,400 checks, and I've always maintained that was one of the principal sources of the inflation burst we saw, that massive fiscal splurge. If we get that splurge in H1, it results in consumer demand. And I know that there is a lot of concern and angst about the labor market. The labor market is a different labor market. I don't think you can read 30K jobs the same way you could read 30K jobs 2 years ago. That's supposed to be balance right now. So if you're above 30, the economy is kind of treading water.
Do you see companies potentially passing on more of these higher costs if the consumer is able to do it because they have more money in their pocket?
Yeah. I do actually. They're passing on the higher cost, but also genuine higher demand. The one thing which continues to flow through is the American consumers' desire to consume. And I'm very interested to know what the end of this Christmas season will look like. But looking at what we're hearing in real time, it looks like it's going to be a strong one.
Putting these two stories together in Washington, D.C. right now, the president is clearly putting a lid on oil prices going up when it looks what's happening in Venezuela. At the same time, they're going to potentially get more fiscal impulse ahead of the midterm election. Does the oil depression of a price help the potential stagflationary fears you have?
So it's not stagflation. I'm expecting growth of 2.75 to 3%, driven by that consumer demand, driven by the fact that we're getting private sector investment in this country between last year and this year. It's around $1 trillion. That's more than it's about as much Germany is going to do over 10 years. So when you stop and put that into perspective, you've got a lot of tailwinds coming in for growth this year. So it's not really stagflation that I'm talking about. I'm just saying that I don't expect major advances on inflation. Now, can oil be the game changer? I don't think so. And I don't think in the near term. I think Venezuelan oil, that's a 2-3 year out story because yeah, there's a sentiment-driven, yes, there's going to be a lot more supply, but how much actual supply are you going to see in the near term? So
we talk about inflation as though it were a monolith, and inflation can be expressed through the market in many different ways. It can be a higher long end of the yield curve. You could see, for example, the dollar weaken substantially. You could see metals prices go up significantly. Which node do you think will transmit through markets most directly?
I think a little bit of all. So you're going to see a further steepening of the yield curve in my book because I think the Fed should not have cut up to 350, and if they actually go further than 350, I think it would be a substantial mistake, and we're going to see a significantly steeper yield curve. Because if we stop to think, the Fed has cut 175 basis points and 10-year yields are higher than they were before they started cutting, which means underlying the market's apparent sanguineness about everything that's going on, clearly there is some concern on the fiscal and the inflation. And in terms of the dollar, I'd say the dollar is a little bit mixed in terms of the G3. I think we're pretty close to fair value against the euro, actually. And I think we're massively overvalued
against the yen. Can I jump in? Because you'll acknowledge the bulk of that move was in 24, not 25.
Yeah, absolutely.
In 25, they cut interest rates and bond yields on a 10-year maturity actually fell. They didn't rise. What's changed for 25 in the cutting cycle of last year compared to what we saw in 24?
Because I think this is the year you actually get, if you get the fiscal impulse that I'm talking about, those tax rebate checks, so the consumption demand, the tailwinds are stronger. I think in addition, on the non-AI hyperscaling front, we actually haven't seen that much investment last year, and I think we probably will this year. So I think there are lots of tailwinds to growth this year that we didn't actually have last year, and you had everything related to the tariff-related uncertainty, which really skewed one half of the year. So I think when Tariff Liberation Day was first announced, everyone was sure that meant a recession in the US. I didn't, but having just said.
Congratulations.
But it was, so I think we just start from a different spot.
So a steeper yield curve in and of itself isn't necessarily negative for the market. It can be actually really positive when it comes to financials. The absolute level of yields does matter.
Yes.
What's the stopping out point for 10-year yields where suddenly risk assets lose their luster?
So I think, I think that fixed income markets have shown an ability to absorb all the way to 475 and above. Equity markets, it's a different question, and I'm not an equity person, so I'll duck that. But I'll just say that, do I see 10-year yields going back to those substantially above 450, close to 475 levels? Actually, I do. If you don't have the wild card, which is something which knocks the economy into a recession, and really, it's just not my baseline. If I look at the tailwinds coming from monetary and fiscal policy right now, it's very hard to argue that we're heading for a weakening of this economy.
Equity guys love to talk about bonds. You bond people can talk about equities. The spread in the last 30 minutes is three cuts. You're basically at zero for this year. And Julian Emmanuel of Evercore, equity guy. is at 3 for this year.
No, and I think that's the difference, because I think equity people do get concerned. Certainly within my own firm, my equity colleagues get very concerned when I say that, honestly, they shouldn't have cut last time, and I'm not sure they're going to cut at all this year.
Let's be really honest. Equity guys talk about bonds, and bond guys talk about equities all the time. They just preface it by saying, we don't cover that, but let me tell you, that is what happens every single time.
I agree. What can I say?
So much good to see you. As always, thanks for dropping by.
Thank you so much.
Sonal Desai there of Franklin Templeton Fixed Income. Let's get you an update on stories worldwide with your Bloomberg brief. Let's check in with Yahara for more. Hey, Yahara.
Hi, John. Denmark's prime minister saying NATO will collapse if the U.S. attacks Greenland. The warning coming as President Donald Trump re-ups his desire to take over the island nation. Stephen Miller, a top aide to the president, telling CNN Greenland rightfully belonged to the U.S. and the Trump administration could seize it if it wanted. Meanwhile, copper is extending its rally above $13,000 as investors bet on a tighter market. Possible U.S. import curbs, rising demand, and production constraints are fueling bullish calls on the industrial metal. U.S. inventories of copper also surging with 44 straight days of net inflows in COMEX-tracked warehouses. And in sports, Scotland is preparing for its first appearance in the World Cup since 1998. The country's first minister proposing a national bank holiday on Monday, June 15th, the day after it plays its opening game against Haiti in Boston. That's your Bloomberg Brief. John?
Yahara, thank you. I'm not responsible for putting that story in the newsroom. Maybe Yahara is.
I just want to understand the context.
We should be on holiday for the whole World Cup.
I think that
I agree. And I, at minimum, think we should take the show on the road, because I don't want to miss that many games.
First course of business for Mehman Dalmi, apparently, is to make the tickets more affordable. However, there are no games.
Some of them are like $90,000.
There are no games in New York City. They're in New Jersey.
Yeah, well, maybe make soccer affordable again.
My goodness. Up next on the program, NVIDIA's New Frontier.
The amount of computation necessary for AI is skyrocketing. Vera Rubin is in full production. We're announcing Alpamayo, the world's first thinking, reasoning, autonomous vehicle AI.
At this point, I can't keep up, so frankly, he's going to help us. He joins us from HSBC in just a moment. From New York, this is Bloomberg.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
The trading day
is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment. 3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Some people wake up and choose violence. Drew Mattis writes in from MetLife, who would pay to watch Scotland versus Haiti?
Wow.
That is
Shots fired.
absolutely
All right,
brutal.
so let's hear your response.
I would happily pay.
Internet, do your thing.
The Scottish fans will make that quite an atmosphere.
How much would you pay?
Also, I would go to any World Cup game. They're going to be amazing.
Not going to answer that, Bramo. Futures look like this on the S&P 500. Positive by, or rather negative by, close to 0.1%. We're up on the NASDAQ. The NASDAQ yesterday snapping a 5-day slide this morning, high by 0.06%. Really muted price action so far. Let's talk about big tech. Under surveillance this morning, NVIDIA's new frontier.
The amount of computation necessary for AI is skyrocketing. The demand for NVIDIA GPUs is skyrocketing. Enormous amounts of investments coming into this industry, which explains why we're so busy. Today, we're announcing Alpamayo, the world's first thinking, reasoning, autonomous vehicle AI. I can tell you that Vera Rubin is in full production.
So here's the latest this morning. NVIDIA announcing a new line of products, including its next generation of chips. Its top-of-the-line Vera Rubin processor on track to debut later this year. Frank Lee of HSBC has a buy rating and $320 price target on the stock. Frank joins us now for more. Frank, welcome to the program. AI is skyrocketing. Demand for GPUs is skyrocketing too. Frank, put some numbers on skyrocketing. What does that look like through this year?
I think, look, NVIDIA is going to see a really strong year. We've highlighted it a couple of months ago that, based on what the allocation they've given at TSMC, they're going to see over 100% type of capacity growth. But I think a lot of this was already widely expected. So, I don't think there was as much of a surprise from the CES. I think probably the most interesting part was the Alpamayo in terms of autonomous driving, because this is the first time we've heard Jensen really talking about this. So I think that's one of the exciting things we've seen from the CES show.
When's that actually going to be meaningful for the top and bottom line, Frank?
So that's a great question, Jonathan, because I think that is one of the problems of why I think that it's an exciting new direction for NVIDIA. But as far as timing, in terms of the TAM, when earnings are going to come through, I think it's still largely further out. So I think there's not a very good idea of when this contribution is going to come in.
Frank, do you have a good understanding of what exactly the Rubin chip is? I ask this because I was trying to understand the 88 different strands, and then you have 140 different avenues. I mean, do you have a sense of why this is such a significant upgrade from the previous iterations?
Yeah, I mean, I think the computing power continues to go up, but more importantly, I think the other thing that NVIDIA talked about on this for the CES was the introduction of more networking chips and storage. So ultimately, they're talking about trying to bring down the cost of the solution, bring down a number of GPUs that you need in order to do the training. So in a way, to make everything a lot more efficient. So I think that's one of the positives behind this. But again, they've introduced this platform as early as CES last year. So while there's a lot of excitement about the ramp up, this has been coming for quite some time now.
Which is the reason why maybe you aren't seeing that much of a reaction in the pricing. We've heard some pretty significant things announced overnight. Really, it seems like, as John was pointing out, Samsung and some of the Korean memory chips, as well as the smartphone that Samsung is coming out with, those are actually generating the most excitement. What is actually the most interesting that you've seen so far coming out of the confab in Vegas?
Yeah, so I think you bring up an interesting point about Samsung. I think one of the reasons Samsung has done so well is that the strength in the memory recovery has been much stronger than expected in the last couple of months. So you look at names like Micron, they've moved up quite aggressively. They've outperformed a lot in the last month or two. And, you know, the price hikes that we see for memory specifically will continue to go up in the first half of this year. I mean, ultimately, how much further it goes up, no one really knows for sure. But the momentum clearly is a lot stronger behind memory at the moment, which is why I think there's more excitement around there.
Frank, when it comes to China, we heard from the NVIDIA CFO yesterday saying that there is strong demand for the H200s in China. Do you foresee Beijing allowing companies to buy those chips?
Yeah, that's a great question, Maria, because I think one of the disappointments was that August last year, when the H20 got approved to go into China, the demand was fairly lukewarm from the China government and the China market in general. It does seem like we are seeing some positive demand for H200 this time around. It's a better chip, and I think this is one of the things that's been highlighted by Jensen as well. And we do think there is some upside potential now. So this is one of the few, I think one of the recent positive news from NVIDIA from coming out of China, at least, is that the H200 does seem to get a much better response than the H20 was a couple of months ago.
Does it even matter because they're talking about the Rubin right now and how powerful that's going to be?
Yeah, I mean, that's been one of our bull cases that, you know, we don't really need the China business to come in. You know, our numbers for the most part, which are largely seeing very strong growth, doesn't really incorporate the China business really coming back. So we don't think they really need it. So we think this is an optionality if China comes in. But the majority of the growth, as you pointed out, is still coming from Rubin going into this year.
Frank, it seems like everyone's talking about the whole tech story as completely isolated from Venezuela and not involved with the geopolitics in any way. And yet around this table, we were talking before the segment about how there is a real geopolitical tilt to this. What happens if China invades Taiwan or prevents shipments or does war exercises? What does that do to the entirety of the ecosystem that's being talked about at CES and beyond?
I don't think it's a scenario anybody can envision, because if anything does happen along those lines, then we've got a lot bigger problems in the world instead of NVIDIA chips. So I think that's not really a baseline scenario I think people are looking at right now. So I think it's too big of a question to really even fathom if anything like that does happen.
Frank, of the risk factors on your radar right now, what is the most prominent one for the year ahead?
I think right now, what has been a fair, I think, feedback, especially on the AI trade in the last few months, has been two things, right? The first is, you know, does Google become a lot more competitive with their TPUs and you know, their whole AI strategy? And the second thing is, you know, some questions around OpenAI's funding. You know, I think we do see that there's still some potential gaps there. So I think those two are probably going to be the bigger question this year in regards to AI.
Frank, good to see you. Thank you, buddy. Frank Lee there of HSBC. Thank you, sir, on NVIDIA at CES. Don't miss the AMD CEO, Lisa Su, right here on Bloomberg TV, 11 a.m. Eastern Time, speaking with Bloomberg's Ed Ludlow on Bloomberg Technology. Later on, the NVIDIA CEO, Jensen Huang, at 1:15 p.m. Eastern Time. Bramo, I think we're all right there with you, even if Frank Lee's not. I have to say, Venezuela was not on my CES bingo card in Las Vegas.
I don't think it was on anyone's bingo card for this weekend, which is the reason why it took so many people by surprise. Frank's response was really interesting. It's such a significant risk on so many different fronts that we can't even imagine it. So let's just put that aside and continue betting on what we can bet on, which raises a question. How big of a potential risk scenario is any kind of even war games to this entire trade?
The U.S. stock market is percolated on this AI bubble and this trend, right? Maybe not a bubble, but this AI trend. Okay, 60% of the world's semiconductors comes from Taiwan. 90% of the advanced chips come from Taiwan. So yeah, it'll be bad for NVIDIA, but it'll be bad for everyone's 401k. And that is just speaking about the financial impact, not, of course, the geopolitical and human impact.
So bad it's difficult to consider. Up next on the program, we'll catch up with Emily Rowland of John Hancock, Ed Mills of Raymond James, the former White House senior advisor, Amos Hochstein, and Matt Hornbach of Morgan Stanley. The second hour of Bloomberg Surveillance just around the corner.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We come into the new year prepared for some volatility.
Maybe it's time to rebalance a bit.
We're already seeing some rotation.
What the market doesn't understand is the president's willingness to take risk.
If we get more macro risk like this, it's going to be hard to keep risk price where it is.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P 500 following a two-day rally, pulling back not even 0.1% on the Nasdaq 100 following a five-day slide, which we snapped yesterday. We had just a little bit of weight to the rally, up 0.1%. Snoozy morning gets more interesting through the week ahead as the week grows older. Tons of economic data. PMIs later on this morning following a weak ISM manufacturing yesterday. ADP and JOLTS data, that comes tomorrow. Jobless claims on Thursday. Then the big one, the headline event, payrolls Friday, just around the corner.
Watch the unemployment rate. At a certain point, if you do see the unemployment rate tick higher, how much does that put the Fed squarely back in the game in terms of cutting rates more aggressively? And this is the big debate for markets right now. How much accommodation will there be on the monetary side and on the fiscal side? And if you get a monetary apparatus that really is cutting rates aggressively, that can give extra fuel to an equity rally that's looking past any kind of weakness that might come through in that unemployment rate.
Maybe you can look past the headline payrolls figure and speak to excuses elsewhere and say 50K is the new normal, 30K, 25 even. I don't even know, but perhaps you can dismiss that. It gets harder to dismiss the climb in unemployment through 4.5%, and really you need to see that settle down, not just for the economy, but I think also for the politics down in Washington.
Oh, absolutely. Aditya yesterday was talking about 4.5% for him means the Fed's going to cut. We're going to be speaking to Andrew Allenhorst. He says he is expecting a 4.7 unemployment rate. If you still have inflation above your target, and already the polls are talking about affordability is our biggest concern, and then people start losing their jobs, this becomes a terrible cocktail ahead of the midterm election.
That's what's going to give the Doves on the committee over at the Federal Reserve a credible case to cut interest rates, even with the president making a political case to cut interest rates.
If they cut rates, though, because they have to, because of true weakness, will still be construed as a positive thing. Morgan Stanley came out with a note saying that one of the big risks is that you do get some sort of jobless expansion that ends up with bad news being bad news. The Fed is cutting for the wrong reason, which is people don't have the jobs to give them the incomes to go out and keep spending. It goes to the question of, can you get a broadening out in the equity rally, or is it going to be concentrated in the AI trend without the rest of the economy participating? Look, there's still so many questions that we haven't gotten clean data for months. So all of a sudden, can people look at this data and say, okay, now it's clean, we're getting a true read, or are people going to still have the same questions?
65K is the estimate in our survey. That's going to change ahead of Friday as more estimates come in. The range is pretty wide. 155 is the high, the low is 23K. Coming up this hour, we'll catch up with Emily Rodent of John Hancock as energy fuels a record rally. Former White House senior advisor Amos Hochstein on new leadership in Venezuela. And we'll catch up with Matt Hornback of Morgan Stanley, predicting some inflation payback. We begin this hour with stocks holding near all-time highs. Emily Rodent of John Hancock writing, at the end of the day, markets are still being driven from momentum. Emily joins us now for more. Emily, good morning and Happy New Year. Let's talk about what is in the driving seat right now and why you're looking to the international equity story.
Yeah, it's all about momentum, John, and welcome back and Happy New Year. I'm only going to say that this week. I'm going by the John Farrow Happy New Year rules here. But this has been an environment where we still see technicals and momentum in the driver's seat. You almost have to remove the macro from your brain right now coming into the new year. Some of the data you mentioned around ISM yesterday, one of the most notable elements of that report to us was in new orders. A very small portion of industries reported positive new orders, most of them reporting weakness there. That is a key leading indicator. We're still watching, some of this macro weakness. The business surveys are telling you things aren't great, but meanwhile, the markets are saying, get ready. We're going to see a massive cyclical expansion. The economy is going to accelerate meaningfully this year. So there's a major disconnect right now between macro and markets.
How do you think the story reconciles?
Yeah, I mean, we've got to watch what happens from a fundamental standpoint. If companies can continue to show that they're managing some of these macro risks, that they can maintain margins, that they can deal with some of the pressures around tariffs, and we can continue to see that earnings growth come in, that's going to be the key tell. But analysts, John, are penciling in 15% earnings growth for S&P 500 companies in 2026. We think that looks awfully lofty here heading into the year. So really, that's what we're going to be watching as we kind of come into Q4 earnings season here in the next couple of weeks.
Well, Emily, on average, it might end up being true just because it's led by a cohort of about 10 different names that are leading the AI trend, not necessarily hinged to the broader economy. At what point do you think that that is going to be what ends up continuing to win with the rest of the 493, whatever other cliche you want to put out there, lags behind?
So we are still overweight technology companies. We are looking for quality in this market. This is companies with great return on equity, the ability to really produce outsized earnings growth at a reasonable price. So think about value, quality value at a reasonable price. Tech score is high on that, but we're also looking for areas like industrials to outperform in 2026. That is our favorite value sector, our favorite cyclical sector into the year. We're mixing that in with some comm services, which is sort of tech light. And then you've got some healthcare in there as well to give that more defensive posture. So we do think that there should be some broadening out in terms of earnings trends into the year, but we are not ready to bet against tech. It still has the best earnings across every companies across the globe right now. And I would say on that front, what you're seeing now is just this massive rotation continuing into Europe. You look at European stocks, they were up about 35% last year on 3% earnings growth. So the momentum is there right now. You think about momentum sort of stalling in the United States. The poster child for momentum right now is overseas. So we want to be mindful of that as well.
And you lean in, how much do you lean into that based on some of the geopolitical backdrop as well? This question about what the United States' latest move in Venezuela would do to its international standing or potentially diversification away from the nation.
Yeah, we don't look at the situation in Venezuela as being, a massive impact on markets. But Julian Emanuel pointed this out earlier. It's been about the weaker dollar. The dollar weakened meaningfully, of course, last year. It's a little bit weaker, to start 2026. And that is just a massive liquidity release valve. It helps non-US equities. It helps riskier assets outperform. And the weaker dollars was hugely accretive to the earnings of non-US equities last year. If it continues into this year, that is another reason to continue to hold on to some of those non-US assets. Again, we would do it in a higher quality way. Our managers are finding opportunities in areas like industrials. They're finding opportunities in areas like healthcare. So we would think about being very active in that space.
Do you think that trend is going to continue, the weakness of the US dollar?
Well, Anne-Marie, it's really to us been more of a sentiment trade. Like we get our textbooks out, we look at all the normal things that can help you understand currency differentials. And usually when the US economy is doing stronger, check. When we're seeing a better labor market, check. Better earnings growth in the United States, check. Those things would all tell you that there should be a flood of dollars onto our shore, in addition to the fact that interest rate differentials would point to a stronger dollar as well. Again, you've got to remove that sort of macro, those historical textbooks from your brain here, and think about sort of this sell everything America trade that's really permeated markets, and it's included currencies. So, the momentum certainly is there. I don't think that we'll see another sort of 10%-ish decline in the dollar into this year. That one's tough for us to see. But again, the momentum is with the weaker dollar. So we want to think about having elements in the portfolio to help position for that continuation.
Emily, do you think the Fed needs to continue cutting interest rates to support that view?
We do. John, there's something that the market's just not picking up on that we've been talking about for a while, which is the disinflation that's coming from the shelter component of housing. It's 35% of CPI. The BLS measures are very, very lagged. Things like Zillow and Apartment List are telling us that home prices and rental prices are just about flat for the year, while the BLS is telling us that they're up 4%. If you plug those numbers in terms of that real-time data, you're actually getting closer to the Fed's target, if not through it. So the weakness that we're seeing in the labor market, everybody's brushing past these 2 months of negative payroll reports. That's pretty significant. It doesn't happen outside of recessions. The biggest risk, I think, though, to the Fed cutting is if we do see commodity prices rally here. If these geopolitical risks extend to things like oil and copper rallying, that is a risk to the view and also a risk to the sort of bullish case for equities into this year.
Yeah, I was going to say, what about copper, right? What about some of these other metals? I do wonder, just getting your view on the geopolitics of the situation and how you include that in some of your thesis. It strikes me that a lot of markets are saying, well, you don't understand the parameters of something, you just ignore it and focus on the small aspects that you do understand. Is that kind of how you're approaching the entire situation and the potential what-ifs that people are coming out there with when it comes to Greenland, when it comes to Taiwan, when it comes to other areas around the world?
Yeah, Lisa, we tend to not use geopolitics as an input to making investment decisions. It tends to be short-lived and investors tend to move past it. And you're clearly seeing that in markets right now, sort of brushing this off. Obviously, we're seeing the impact in precious metals, oil, et cetera. But really not much. Again, it's a momentum-driven market right now. That is the pervading theme right now. It's like trade first, ask questions later. And that's really what we're watching. It's a tricky environment for those of us that are looking at macro factors and we're looking at earnings, but that's really what's been in the driver's seat right now, and markets largely looking past geopolitical issues.
Emily, appreciate the framing and Happy New Year. It's good to see you, as always. Thank you. Emily Ronan there of John Hancock on the latest in this equity market.
Yeah, it seems like everyone's looking past it. I like this quote from Morgan Stanley, the team over there. They said, macro concerns still matter, but micro will become a larger driver of asset returns in the cyclical recovery. How much is because you just can't know with macro? What edge are you going to have trying to get into the minds of a truth posting?
We were talking about this at the start of the week. Even if you'd predicted some of the events that took place last year with absolute accuracy, getting the price action in response to it correct by the end of the year, tremendously difficult.
This has been a humility building exercise, and you have a lot of humility currently out there. There's just a question, though, of whether AI can win all, and that seems to be what everyone's throwing their same hat into. So let's see if it can come to fruition.
That really has been the lesson since the pandemic.
100%.
Stay humble. Equity futures on the S&P 500 just about unchanged, with an update on stories worldwide with your Bloomberg brief. Let's check in with Yahara Arnott for more. Hey, Yahara.
Hi, John. China is imposing new controls on Japan for exports with any military use. It's the latest move in an ongoing spat between Asia's top two economies. China's Ministry of Commerce cited comments from Japan's Prime Minister regarding Taiwan. Trade officials in Japan declined to comment. Meanwhile, the Corporation for Public Broadcasting is officially shutting down after months of government funding cuts. The agency, which helps fund NPR, PBS, and multiple public television and radio stations, voted to dissolve itself following nearly 60 years of service. According to a statement, it plans to distribute all remaining funds. And Amazon is unveiling a new line of artwork-style TVs. The Ember art line is designed to resemble a piece of framed art and will come in 10 different colors. It will be available starting this spring in 55 and 65-inch sizes. The line starts at $898 for the smaller version. That's your Bloomberg Brief. John?
Is that without the box? Can you find out, Yahara? Is that without the box? Because Samsung did this, right?
Yeah.
But you have to get this box as well. And then you have to cut out a piece of the wall to put the box in to fit the TV flat to it.
I don't know any details about this, but I do know that this is going to be the future of your wall art. You could flip it in and out, and it will be sort of coming up with content. And then do you license the content that goes in it? And do you have to pay a subscription fee for the artwork on your wall?
Isn't Samsung already doing this?
Or royalties? I assume that this is not new. This is just sort of trying to compete.
Get some more clarity in the commercial break, hopefully. Important issue. Up next on the program, new year, new agenda.
I am bringing those high prices down and bringing them down very fast. I will announce some of the most aggressive housing reform plans in American history. I'm also taking on the gigantic health insurance companies.
A conversation up next with Ed Mills of Raymond James, live from New York City this morning. Good morning.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Futures unchanged so far this morning, just about unchanged on the S&P 500. Similar story on the Nasdaq, plenty developing down in Washington, D.C. Under surveillance this morning, new year, new agenda.
We're bringing our economy back from the brink of ruin. I am bringing those high prices down and bringing them down very fast. You will see this in the new year. I will announce some of the most aggressive housing reform plans in American history. I'm also taking on the gigantic health insurance companies. that have gotten rich on billions of dollars of money that should go directly to the people.
So here's the latest this morning. President Trump meeting with House Republicans today to talk through their election year agenda. Joining us now to discuss is Bloomberg's Laura Davison. Laura, some suspicion that maybe the events over the weekend might hijack this meeting. What's top of this agenda?
So the president wants to keep this meeting focused on the midterms and affordability and some of these cost of living issues that House Republicans are hoping to run on in the midterms. But of course, the big story today is Venezuela. And it's hard to believe that Trump will go into a room with all the House Republicans and not address this, or that he won't get questions on it. But this really sort of presents the predicament that Republicans are in going into the midterms, of that Republicans have some ambitious plans, whether it be on healthcare or housing, that they want to address these issues, but don't really have sort of the concrete details worked out amongst themselves. Whereas, the president is really focused on foreign policy issues, and Democrats, seeing a lot of polling in their favor on when it comes to cost of living, inflation, affordability, have the upper hand, at least going into this year.
Election cycles are short, Laura, and that's often why we make some messy decisions in democracies. We make short-term decisions. What can they do that will actually lead to results that they'll see in the data by the time we get to the midterms?
The answer is not a whole lot. The biggest hope that Republicans have going into the midterms is the tax bill that they passed last year. Those tax benefits will start to show up for some Americans starting in their tax refunds that they'll see later this spring. But the problem with that bill is that it was largely an extension of tax cuts that were already in place. It included some new things, including no taxes on tips and that expanded SALT deduction. But for a lot of people, they just will see no change versus seeing that they've essentially avoided a bad scenario where tax increases went into effect.
Laura Davison, down at Bloomberg's DC studio in Washington, D.C. Thank you very much, Laura. Ed Mills of Raymond James has this to say. Geopolitical tension will be a key theme for 26. Domestically, the focus is on the upcoming need to fund the government. Ed, we're back to that again. Ed, good morning.
Morning. How are you?
Look, we've heard a lot about affordability. How does that translate into policy in 26?
Well, a lot of it's still with President Trump. He could stop a number of the tariffs that he's implemented. I do think a lot of this is about their fiscal agenda that comes from the tax bill. It was made retroactive to his first day in office, but zero of that has actually hit the economy. We've estimated that that's about $350 billion that is going to hit the economy here within the next couple of months. It is true that this is going to be one of the largest tax refund seasons ever. For someone that gets the full benefit of the SALT deduction, that's an extra $800 a month for those households. So I do think that there is that narrative out there that this was largely an extension, but there was a lot of new stuff, and all of the new stuff expires by the end of President Trump's term. So it is supercharged in the next couple of years. This year is the biggest year. You add what gets added to this year, we're probably at $600 to $700 billion worth of fiscal stimulus that's coming into this economy. That's 2.5% of GDP.
And is that enough, though, to make up for potentially higher healthcare premiums? The fact that there are potentially more higher costs that could be passed through because of tariffs, and then individuals' concerns about a more aggressive foreign policy from this administration?
Probably not. I do think that there was a lot of concern about the consumer in the end of the year last year, but as the consumers do get these higher tax returns, I think some of that concern depreciates. It doesn't go away. On the geopolitical, I think that just goes into the right track, wrong track question for a lot of voters. And generally, if the voter views the country is on the wrong track, they choose the other party. So that's something outside of economics, but more on kind of the vibes and the feel for the voter.
John mentioned how today is going to be all about affordability, but really the cloud overhanging this retreat is Venezuela. Where are House Republicans right now in terms of their discussions with the White House and what they want to see following the capturing of Maduro?
I think they're probably pretty divided. There is the America First group within the House Republicans who have really supported President Trump because he was not an interventionalist internationally. And so what the House is going to be kind of grappling with is, if the Senate passes a resolution that limits the war powers, is there a push to bring that up? Because we do know that Democrats would support that. So Mike Johnson, as the Speaker, really has to bring his caucus together, try to focus them on getting that appropriations bill and say, we have some of the kind of day-to-day business of the government to get to. Let's give the president a little bit of a leeway here, see where this goes. I think that the president is also going to lean in heavily that this was a law enforcement action, not necessarily a military action. It is kind of parsing words, but from a congressional kind of impact here. If it was law enforcement, Congress has less of a role. If it was a military action, Congress has a constitutional role there.
If you put these two ideas together, and I realize that not many people were thinking this way, but I was thinking from the debt markets perspective as I was reading the Venezuela story, and not just about Venezuela bonds, but does this increase the deficit? If the U.S. has a more aggressive foreign policy and is putting troops on the ground, let's say it comes to that, we don't know, that's not what is in the base case in any way, is involved in other altercations, how much is this in the budget or potentially palatable fiscally from Republicans?
Yeah, I think that the kind of Republicans have been plenty fine with increasing the defense budget. If you look at a percentage of GDP, we're actually at a low since World War II on our defense budget. In the reconciliation bill, they added an additional $150 billion to be spent for the defense budget over the next couple of years. I do think this is President Trump kind of reasserting the Monroe Doctrine, kind of focusing more on the Western Hemisphere that has largely been focused on Asia over the last couple of years. So I think that if they needed to or wanted to, a vote to increase defense spending is absolutely in the cards, and I do think that defense spending is probably kind of on the upward trend. President Trump would say there are a lot of resources that could be extracted from these countries, and that there is a dividend that would come from those resources that could pay for itself.
Are there any fiscal hawks left?
No.
Okay, just making sure. I mean, is that even on the agenda?
I'm sure there are, but there's I've always said people are really concerned about the debt and the deficit when they're in the minority. They get into charge and then they care about their kind of policies, and debt and deficit concerns kind of are secondary, and it is other people's debt and deficits that they're concerned about.
We're shocked. Is it too early to talk about 28?
It's never too early.
Let's talk about it.
Yeah.
The influence of Floridian politics on the leadership of this party right now, the fact that this operation was led not out of Washington but out of Mar-a-Lago, how important is all of that?
Well, I think that you also look at the influence of the expat community in Florida, of the Venezuelan community that has long wanted regime change in Venezuela. In Venezuela is the patron of Cuba. And you have Marco Rubio, Secretary of State, who is the son of Cuban immigrants. If he is able to bring about the end of the current regime in Cuba, politically, at least in Florida, that is as close as you get to kind of nirvana. So I do think that we're going to be looking at 2028. J.D. Vance, as vice president, always has to be kind of at the top of the list. But kind of number two, increasingly looks like Marco Rubio, as long as things continue to go well.
But how does J.D. Vance, an individual that definitely is against nation building and interventionists, how does he square this when he goes out and campaigns for 2028?
I think it's depending upon how much this is still front and center. I think one thing that is fascinating to me is we've had these major geopolitical events, and then we go a week or two later, and they seem as if they are kind of distant memory. We have had an incredible amount of geopolitical action over the last 5 years and very little market reaction. Probably the only thing that had a sustained, but it was still relatively limited, was the invasion of Ukraine. So I even go back to 6 years ago. On January 3rd, 2020, we had the assassination of Soleimani that launched that year. I go back to 2020, the assassination of Soleimani was not the kind of story of 2020.
The pandemic kind of buried that pretty quickly.
Yeah, but it is, but how quickly we move on.
I agree with you. Very quickly.
Yes.
TV time, we were told yesterday, right?
Yeah, basically.
Although what's about to take place in Venezuela is not going to take place on TV time, as we were also told.
Absolutely not. I mean, I think the administration would like that, and they're trying to take this pragmatic approach while continuing with Delcy Rodriguez. But tapping these resources, Ed's talking about, is going to take years and billions of dollars.
I'm just laughing about the past couple of years, not this in any way, shape, or form, but just the sensory overload. It's sort of like, it's sort of whack-a-mole. You can only focus on one shiny, bright light at one time, and if they're 50 million, then you just sort of lose focus.
Yeah, desensitized. I think very desensitized. Ed, it's good to see you. Thanks for dropping by. Ed Mills of Raymond James there. Coming up, we'll catch up with the former White House senior advisor, Amos Hochstein, as Venezuela's new leader is sworn in. Plus, Danny has your morning movers. Ava shares higher after announcing a partnership with NVIDIA. Their stock is up 23%.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Counting it down to the opening bell with equity futures shaping up as follows. Just about unchanged on the S&P 500. On the Nasdaq, positive by 0.1% after snapping a 5-day slide in yesterday's session. The fun and games happening over in Asia. Asia Tech is absolutely flying. Taiwan Semi, Samsung year to date. Samsung year to date, I think, is up like 14%. What a run already for 2026, and it is January 6th.
There's a lot of focus right now on the memory capabilities of Samsung, also a real focus in the hardware. And could you see the Android supersede the iPhone? Android is the best-selling smartphone in the world. It might actually end up being the iPhone, but nonetheless, they are getting an edge when it comes to artificial intelligence and actually deploying it. That, I think, people are watching closely.
Big year for big tech in the last 12 months worldwide, for that matter. Big year for bonds as well. Treasuries performed very nicely. 2-year maturity yields lower in line with the Federal Reserve move. 10-year maturity as well. 10-year, the shining light. The US 10-year, the rest of the world, not great, yields higher. The US 10-year down something like 40 basis points last year. This morning, 417.70.
Yeah, and the question that a lot of people have is, can it continue, especially with Fed rate cuts? Do you have this disinflation that Emily Rowland was talking about tied to housing, tied to gasoline prices, or do you start to see a divergence where you see that steepening yield curve, the Sonal Desai view of the world? I will say the 30-year yield's been really notable, and I understand it marches to its own drop.
Bit of leakage there.
But it's been leakage, and it's been really climbing higher despite the rally in the rest of the maturity parts.
Can the Treasury Secretary Scott Bessent keep getting what he wants, which is a 10-year yield closer to 4 than 5?
That's what he's going to try. I know he says he's what? He's America's bond salesman.
Top bond salesman,
That's how he decides his job. That's as long as he stays at that gig. If the president had his way, he'd be moving over to a different portfolio.
We're still waiting to see if he ultimately says yes and goes over to the Federal Reserve.
Yeah, well, if things get messy enough, it might be a good exit strategy.
Possibly, yeah.
True.
Are you saying if there's more Venezuelans, we might get Bessent down at
100%. Absolutely. Things get messy enough. Not my problem.
Also, job security.
Yeah, I mean, a lot of possibilities there.
The whole thing, the speech circuit afterwards as well.
Art?
Oh, it's just like
art at the Federal Reserve.
Not that he needs the money, but like you just mint money after you've been the Fed chair.
Yeah, not that he needs to do that, but
500K speeches.
I think at a certain point, though, it's about something else. It's having a seat at the table. So which seat at the table, and if sometimes you want to exit stage
You're
left.
going to be the most powerful man in finance, whatever room, whatever table you're sitting around. It doesn't matter who's around it with you.
He likes signing the checks.
Do you?
Like his signature on the bill.
Okay. But that's done now, right?
It's true. You've been there, done that. You can move on to the next thing.
Money's in circulation. Okay. Yields up 2 basis points, 417.89 on 10s. As we count you down to the opening bell, let's get you some single names. Some morning movers. Here's Danny with more. Hey, Danny.
Hey, John. Kicking things off with some of the announcements we've heard at CES in Vegas. NVIDIA, a new autonomous driving vehicle is what they're working on, and they're going to be using some of the technology from this company, Ava, which makes LiDAR technology. I just want to point out, yes, it is up nearly 24.5%, but this is is basically a micro-cap company, so all things said, that's not a huge move. Even so, it is moving on that NVIDIA announcement. Also an announcement in tech this morning, Zeta, which is an enterprise marketing company, announced that it would be integrating OpenAI technology to give their clients, so those shares are up nearly 11%. We're back in that world where you make an AI announcement and your shares do well. Finally, a little bit of deal news. Sources telling Bloomberg that OneStream may be entering a take-private with HG. That's the Europe-based private equity fund. Shares have been down 35% year-to-date for this finance software maker, so they are jumping just about 23% in the pre-market, John.
Danny, thank you. Thank you very much. That stock is flying. I was just reminded of that Mnuchin photo. Do you remember that?
Yes, I do, with his wife.
The sign of the money.
Yeah, that was incredible.
Was that with the big?
Yep, with his wife, with the Jack with the gloves. And how about Jack Liu's signature? I'll still never forget that.
Yeah.
Just the zeros. I love that.
What was that about?
He's been asked about that many times.
I've asked him about that.
Honestly, clearly it's not a strong suit. I can relate.
Evidently. On a radar this morning, elsewhere, NVIDIA and AMD highlighting the insatiable demand for AI computing power. Both companies unveiling new chips and software at CES in Las Vegas, saying AI will require a massive increase in global computing capacity within 5 years. Elsewhere, Venezuela's government swearing in Delcy Rodriguez as acting president following the capture of Maduro. Meanwhile, heavily armed security forces are roaming the capital city of Caracas, detaining journalists and stopping drivers to check their phones. And finally, President Donald Trump telling NBC the U.S. may subsidize efforts by oil companies to rebuild Venezuela's energy industry. Sources telling us here at Bloomberg News that Energy Secretary Chris Wright plans to speak with executives about the proposal later this week.
Yeah, and that it will take 18 months to actually accomplish a rebuild, something that, as you pointed out earlier, is a quite ambitious time schedule. This is going to be a real question. What is the conversation like with the oil majors? Oil major stocks have been flying. You saw the biggest two-day pop in the sector going back to April of 2023. It's going to be expensive. What kind of assurances do they need? Unclear still whether they're on board with this, because they haven't really had those discussions yet. The fact that the energy secretary is poised to speak with them gives you a sense of where they are in this process.
I think one thing that the oil companies do want to see is potentially the funds they already were owed decades ago from expropriations under the Hugo Chavez regime. They want to make sure that they are going to be compensated already what was owed to them before they go in and start investing billions of dollars.
And making a multi-decade commitment, you need some serious clarity before you do that. Let's build on this story. The U.S. asserting control over the Latin American country of Venezuela.
We have an oil embargo in Venezuela. For them to do any kind of commerce, they need our permission. We have our massive fleet, our Armada, still present there. This is an active and ongoing U.S. government military operation. And so, of course, we set the terms and conditions.
Joining us now is Amos Hochstein, the managing partner at TWG Global and the former White House senior advisor. Amos, a good friend of this program over the years. Thank you for making time for us this morning. I want to lead on your extensive experience in Washington, D.C., and not just sort of get tempted by the story playing out years ahead. I want to get your thoughts on what took place over the weekend. Were these ideas thrown around in the Biden administration? Were they ever considered? And what was your reaction to what you saw take place?
So first, it's Happy New Year. It's good to be back on the show. No, we did not consider taking a military action and kidnapping Maduro. We also, Venezuela is an annoyance to the United States national security. It's not a threat to us in any way. And I think there's a lot of ways to control it. In fact, I'd led an effort to get Chevron license back in Venezuela in order to get Americans released and to do other things. So we've always had a conversation about Venezuela because of its both its support for terrorism, its support for bad actors, and the fact that it was a oil-producing state.
There was a bounty, though, on Maduro's head under the Biden administration. So what was going to be the timeline and the goal to potentially get rid of him?
Look, Emma, we had very active discussions with the Venezuelans, some direct talks, some through mediators, about moving Maduro out of office. We did not recognize him as the legitimate leader of Venezuela. We did recognize the opposition having won the election. And the idea was that but it wasn't about Maduro, it was about the entire regime was illegitimate. And look, at the end of the day, if you take Maduro out and you stay with Delcy and the rest of the regime, you haven't really done much because he's out. But you haven't, they could have announced he's out, or we're now supporting the opposition, or we're now supporting elections over the next 60, 90 days in order to give the Venezuelan people what they deserve, which is to have their own elected officials. So I think now it's some kind of a puppet regime. We have to see how that will all work out.
Do you think Delcy Rodriguez is someone oil companies could work with?
I mean, look, she's been responsible for the oil file. In addition to being vice president, her brother is obviously a power player by being he runs a lot of Venezuela through his role at the legislature. I think they can work with her. I don't think the issue is can they work with her. They can, at the end of the day, they can work with anyone, almost. The issue is going to be what is the legal structures, what is the clarity. When Donald Trump's gone, are they going to get sued? Do they have legal authorities over whatever it is that they're going to be doing there? And do they want to do it? And Maria, I think you said it earlier, you have Conoco and Exxon that have active legal cases worth billions of dollars against Venezuela in U.S. courts and in international arbitration courts. That has to be resolved. Then you have to negotiate leases. For which fields are we talking about? And then you have to do the surveys. The companies don't even know the condition of these fields, except for Chevron, of course. And then once you've done all of that, then you have to go in and say, okay, do I want to invest? And at sub-$60 oil, how many people really want to crush oil prices further? So this is a story, when it comes to oil, this is a story about 2029, 2030, 2031, as far as bringing any meaningful barrels back. For 2026, you're probably talking a couple of 100,000 barrels a day coming back on the market just to bring them back to where they were a little while ago, from, let's say, 800,000 today to 1 million. And then if you remove sanctions, you can get probably in 2027 or so to, 1.2, 1.3. That's the story over the next couple of years. Anything beyond that volume will have to wait a few years.
Well, the president says, and he's signaling potentially the U.S. government could subsidize the oil companies' involvement. As he says that, does that signal that they will lift sanctions?
Well, I think I don't know. I don't want to predict that. You have to lift some of the sanctions because you have to let the oil out. I don't know what it means for the American taxpayer to pay multi-billion-dollar companies to invest in the infrastructure of a foreign country. I don't know how that's America first. I don't think that seems like America last. But I don't know what it even means and what assurances are there. And remember, they have to operate these companies not just based on Donald Trump being president. They could be facing in 9 months from now or a year from now, from January, a Democratic House of Representatives. They can see changes in elections. They have to have clarity. So what is this money and how long will it last for and what form will it take? And still, what am I doing for this money? So I think what's been absent from this whole conversation, clearly wasn't thought out before the operation, is the Venezuelan oil story itself. There are some barrels that you can get fairly quickly with just repairs of the equipment. For that, you have to lift sanctions. And you can have service companies going in. You can have some in-kind payments. But then what is left for Venezuela? These companies are going to say, I want to get paid back my debts. Yeah. I want to have guarantees that I get the barrels of oil that I produce, so I recover my investment first. The U.S. government's probably going to say these are not subsidies, these are loans, and they have to get paid back or some kind of guarantees because the banks won't want to guarantee this or finance it. Yeah. And then so what, after all of that, and then they owe money and barrels to China, a lot of money and barrels to China. They owe stuff to the Russians. They have debts to the Indians. So where are the barrels going to come to rebuild Venezuela? And if they don't, if everybody get profits except for the Venezuelan people and the economy, and it gets crushed further, now we go into another cycle of a failed state under our control in Latin America with migration and all the other issues that come with it.
Amos, there's a big question about the next 6 months, the next year in Venezuela. There's also a question of what other regions of the world are next. Do you think that what happened in Venezuela with Nicolas Maduro really sets up action in Iran?
Yes. I'll take that back. I think that there is action in Iran was contemplated before and irrespective of Maduro. I think Prime Minister Netanyahu has wanted to do another round of strikes in Iran because the Iranians took the lesson from the June war, where both Israel, with some participation of the United States, attacked their nuclear sites, that as long as we don't do anything on nuclear, the Americans can live with what we're doing. And so they went back to rebuilding air defenses. They went back to rebuilding their missile production facilities, drone manufacturing facilities, and they thought that was okay. The Israelis have come in and asked last week or 10 days ago in Mar-a-Lago, asked President Trump for the green light to be able to go after the Iranians for their missile production. And now that's on the table. And so there are a lot of rumors that they got the green light. I don't know if that's true, but there's definitely preparation both in Israel and in the U.S. military at the moment of looking at designing what it looks like to have another round of strikes. And I think that the medium rate of the protests could become some kind of impetus or cover for these strikes. So I do think that sets it up. That being said, the Maduro capture certainly gives momentum to the argument of strikes in Iran.
It's one to watch. Amos, appreciate your time. As always, sir, thank you. The former White House senior advisor, Amos Hochstein. Let's give you an update on stories worldwide. Let's check back in with Yahara Anand for your Bloomberg brief. Hey, Yahara.
Hi, John. Denmark's prime minister saying NATO will collapse if the U.S. attacks Greenland. The warning coming as President Trump re-ups his desire to take over the island nation. Stephen Miller, a top aide to the president, telling CNN Greenland rightfully belonged to the U.S. and the Trump administration could seize it if it wanted. Meanwhile, AB InBev will reacquire a nearly 50% stake in its U.S. metal container plants from a consortium of institutional investors in a deal estimated to be around $3 billion. The metal container plant operations include 7 facilities across 6 states. Bloomberg Intelligence says the move to secure key packaging assets in the U.S. is likely as a result of aluminum tariffs. And shares of Philippine fast food chain Jollibee surging, the company planning to spin off its international business and list on a U.S. stock exchange. The company owns several brands, including stores that specialize in sweet-style spaghetti and crispy fried chicken. That's your Bloomberg brief. John?
Italians everywhere.
Oh, hold on a second. You think that's Italian?
No, I'm saying they're all just shaking their heads.
Yeah, exactly. I was about to say that,
like, you're saying, like,
yes, Italian culture taking over.
No, not at all.
Sweet-style spaghetti?
Not at all.
Is that something that you really...
Food crime. Food crime. Yahara, thank you. Up next, inflationary pressure.
Inflation continues to be an issue because you have fiscal stimulus, you have the effect of Fed easing, and you have the AI capital spending all going on at the same time that high-income households keep spending.
That conversation up next with Matt Hornback of Morgan Stanley, live from New York. This is Bloomberg.
The key issue right now for us in the diamond space is the declared divestment of Anglo from GBS. And as you know, Anglo holds 85% stake in GBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in GBS to a controlling stake. We have We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Stocks are positive, just about up by not even 0.1% on the S&P 500. Positive now by 0.2 on the Nasdaq. Under surveillance this morning, inflationary pressure.
The inflation pressures that we had experienced have substantially diminished. They have not diminished enough to restore the Fed's 2% target. And I do think that were it not for the inflation concerns, the 10-year would be below 4 right now. Inflation continues to be an issue because you have fiscal stimulus, you have the effect of Fed easing, and you have the AI capital spending all going on at the same time that high-income households keep spending.
So here's the latest this morning. Traders are waiting a fresh read on inflation following a weaker than expected print to close out last year. Matt Hornback of Morgan Stanley writing, payback from holiday-related weakness comes in January, so it is reasonable to expect a firm inflation reading early this year. Matt joins us now for more. Matt, good morning and Happy New Year.
Good morning. Happy New Year.
It's good to see you, sir. Let's talk about the last year. I think the most surprising thing last year was what didn't happen. And what didn't happen was immense tariff inflation pass-through. Have we escaped unscathed into 26?
Well, I do think if you pull out a microscope and you go deep into the inflation basket, you will see effects of tariffs in the numbers. That is undoubtedly true. I think the issue with last year was that the tariff factor just overwhelmed economists on Wall Street and sort of distracted from all the other things that were going on in the basket itself, which was predominantly more disinflation than inflation. And so net, what you ended up getting was a string of inflation reports that ended up surprising to the downside. Our view is that that continues. That doesn't mean that inflation won't pick up in the first quarter of this year. But it does suggest that if inflation continues to surprise to the downside, then this group of individuals on the FOMC who have staked out ground that they're not cutting because of inflation, you could easily see them change their tune if they're consistent in their reaction function.
Can you see ongoing disinflation with Fed rate cuts? In other words, will 2 or 3 rate cuts potentially alter the course of the disinflation you expect?
Well, this is where you have to bring in that famed long and variable lag with which monetary policy works. I don't think it's reasonable to expect that a 25 basis point rate cut in December is going to really affect the economy in the next 3 months. Most economists and market participants would rather look at financial conditions. Now, if you look at financial conditions, what you will see is that they have eased. They've been easy, actually, for quite some time. That has not stopped the labor market from continuing its slow and gradual weakening, which does raise questions about the effect of financial conditions on the economy today.
What if you have a jobless recovery, which is something that we see right now, continue, where you don't see the labor market recovery, you do see certain costs associated with the build out of AI continue to increase? Look at copper, look at aluminum, look at all of the precious metals. How do you square that with something that is both positive for bonds and positive for risk assets?
Well, it's called productivity in the end. And what we saw in the third quarter GDP report, not entirely yet because we don't have some of the underlying data that we would like, but the implication of that report was that productivity growth accelerated from the second quarter to the third quarter. And it had already accelerated from the first quarter to the second quarter. So if we are seeing this long-lost productivity boom show up today, then what that hints at is a disinflationary style growth factor in the marketplace. And that's why I go back to inflation. If productivity is strong and unit labor costs continue to decelerate, which they have been, then we are going to see inflation continue to move back to the Fed's 2% goal.
That's the framework for the economy. Let's fold that into the bond market. How instructive is the spread between Fed funds and long rates? What does that tell you at the moment?
Yeah, well, it tells me that generally speaking, the curve is still pretty darn flat. Of course, there are parts of the curve that are steep, and the curve has been steepening over the course of the past year. But when you look at the level of yields further out the curve and the funds rate, arguably, it's still pretty darn flat. And so that has ultimately been one factor that has led us to believe that these rate cuts that we're forecasting for the next couple of meetings will continue to steepen out the yield curve. And that's been our big theme for the past year, is a steeper curve, much steeper than people expect.
But the bulk of the hard work's done at the front end of the curve, or do you expect some further leakage that Lisa and I were talking about earlier at the long end?
Yeah, so the bear steepening of the curve is something that occurs on any given day, but it does not occur over the course of time. We rarely see sustained bear steepenings of the yield curve. What tends to happen is on a given day it might bear steepen, but over the course of time you're actually getting a bull steepening of the curve. That's exactly what has happened since the end of 2023, is we've had a much steeper yield curve driven by two-year yields coming down alongside the Fed funds rate.
A sustained bear steepening could come about if there were some legitimate fiscal concerns that you couldn't bury with lower interest rates on a policy rate. Is that something on the radar?
Not for this year. In most years, you get investors that talk about supply. They get concerned about the deficit to GDP ratio or the debt to GDP ratio. Academics love to write about this topic, and yet they seem to always be...
Not just academics.
Wrong.
Well, Lisa's
pretty academic.
Well, no, I'm actually Google trending bond vigilante to see how far it's fallen off. Nobody cares anymore, but I care. I do care. I think that this is something that people are watching. I think it's going to be the term structure. That's what I think people will be watching.
Well, you're going to need some surprises on the supply front. You're going to need investor expectations, which are pretty set in stone at the moment, to change in a way that gets bond yields higher. We don't see that happening in 2026. Maybe in 2027, when we think the Treasury will have to increase coupon bond issuance, maybe you get concerns, but not for this year.
Matt, good to see you. As always, thank you, sir. Matt Hornbeck of Morgan Stanley. Bramo, you've got to wait another year at least, apparently.
All I can say is I Google trended it, and it said, not enough data to show.
There you go.
Which gives you quite the sense.
Might get a little surveillance spike now.
Exactly.
Might show up on the chart. Coming up on the programme, Liz Ann Sanders of Charles Schwab, Bloomberg's Ed Ludlow, Andrew Holdenhorst of Citi, plus Troy Gajewski of Future Standard. The third hour of Bloomberg Surveillance, up next.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzone.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We don't think the Fed will cut again under Chair Powell.
We think 3 cuts this year is the best guess.
If we can continue to get strong growth like this, we might not see another rate cut through 2026.
The real weakness is likely to come in the second half of the year.
The economy will continue to grow through the end of the decade.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P 500 adding to 2 days of gains. On the S&P, we're up by 0.06%. On the NASDAQ, up by 0.25%. The week gets a lot busier as it grows older. Tons of economic data through the week, building up to payrolls Friday, and during the week, a little bit later today, in fact, later this morning, about 2 hours away, the agenda-setting meeting between the president and House Republicans. That's one to watch for the year ahead.
Oh, big time, because ultimately you don't only get potential insight about Venezuela, but you also get insight about the fiscal agenda at a time when there still is a government shutdown on the table. I mean, can you imagine that comes back? It's sort of like, which bingo card do you have going at any given time? But also what they're planning to do about health care and what they're planning to do with tariffs, given the fact that affordability still is, or it was, front and focus.
Healthcare, tariffs, whether or not the Supreme Court is going to strike down IEPA, saying that's illegal. Housing, at one point there was talk about potentially having a mortgage that could be malleable and moved to open up the housing market. Affordability, according to Trump's top pollster, met with Republicans, and he said this is your #1 issue ahead of the midterm elections. Now, of course, this is falling just days after the United States had this mission and had Maduro captive. So before they get all into that, they have to talk about Venezuela, because also they don't want an aggressive foreign policy to derail their message, which was this year supposed to be focused on domestic issues.
And it starts with tax refunds. Just how big are those tax refunds going to be, and how much is that going to change the trajectory for this economy this year?
Yeah, not only with respect to growth, but also inflation, right? I mean, if you have all the retailers saying that they're going to implement the tariff-adjusted price increases, and you have people with income to spend, at what point do you start to get that inflationary impulse? Look, everyone seems to be not including recession anywhere in their timelines in any capacity, which is the reason why every single analyst out there has a higher S&P target for the end of this year. Question is, what could potentially disrupt that? Does that concern anybody? And does that come with just that blind eye toward what's going on geopolitically?
The tax refunds, the one thing I will say is some people said that already consumers were using that money because they knew it was coming down the pipeline during the holiday spending. And second, if you have higher healthcare costs, do you really have that much more in your pocket if you already, that is a non-negotiable must spend for this year. So I think it'll be interesting to see how much it actually fuels this consumer.
10 a.m.?
10 a.m.?
About 2 hours away. That
Closed
so-called
door?
closed door meeting.
I don't know, maybe they open it up.
You know how leaky that meeting. I mean, the president, has he ever had a real closed door meeting? Ever?
I think he's had closed door meetings that we then found out about more than many other
You know, he loves
presidents.
having the camera in there. Come on. All right. Coming up this hour, Liz Ann Summers of Charles Schwab with equities close to record highs. Bloomberg's Ed Ludlow joins us, breaking down comments from tech giants kicking off the CES conference in Las Vegas. And Andrew Honhorst of Citi expected a rise in unemployment as we look ahead to Friday's payrolls report. We begin this hour with stocks flat as markets search for direction. Liz Ann Summers of Charles Schwab writing the following: the broadening out trade should have legs in 26, though not necessarily in a linear fashion. I'm pleased to say that in the studio is Liz Ann Saunders now. Liz Ann, good morning.
Good morning.
Good to see you.
Nice
Thanks
to
for being
see you
here.
all too.
How was the stage set for the 493 versus the 7?
So I think it's the trajectory of earnings that matters. I think one of the mistakes that investors often make is they'll look at data, comparative data, at a snapshot in time, and they'll compare level. So if you take the Mag 7 as a cohort and you look at earnings growth rate, even by the end of this year, it'll still be higher than the other 493, but directionally it's heading down, and directionally the other 493 is heading up, and that it brings up what I've said for my 40 years doing this, which is better or worse often matters more than good or bad. And I think that's one of the fundamental underpinnings for some of this broadening out.
So let's talk about the contribution of the Mag 7.
Yeah.
You detailed this in your recent note. They're the big contributors. Is that something you've got to mitigate as you look at the S&P 500 and how it's weighted for this year?
I think that one of the things that we find that mistakes that investors make is they conflate contribution with price performance. So they think generically of cohorts like the Magnificent Seven, and they're constantly barraged with they're the primary outperformers. They're among the biggest contributors, but they're not the price outperformers. So NVIDIA, the poster child for all of this, over the past year is the #1 contributor to S&P returns by virtue of the multiplier of its cap size. But for calendar year 2025, it was ranked 75th in terms of price performance. So 74 stocks performing better than NVIDIA, #1 contributor. I think it lends this impression to investors that the only way to do well, however you define that, is to be concentrated in those names. That's an institutional problem. If you're benchmarked against the cap-weighted S&P on a quarterly basis, you are at the mercy of the construction of the indexes. But that's not an individual investor problem. And what's also interesting, the best performers, we went kind of old school last year, SanDisk and Western Digital. I just bought my daughter for Christmas an actual digital camera because she likes the photo quality better, and unwrapped it, and there was, SanDisk on, and this is not a recommendation. I don't cover individual stocks.
It's just a story.
Get that disclosure out there.
That's
It's
very
just a
good,
story. Yeah. But I just think that the opportunities are fairly ripe. And what was also interesting about last year, and we've talked about this before, is the churn and rotation under the surface. You had a very strong year for the S&P 500, but the average member had bear market level maximum drawdowns. It just happened on a rotational basis. I think that fed the opportunity for investors to look outside of that small concentration of mega cap names. And that's what I think has legs in 26.
A lot of people, when they ask, or when they're asked about the broadening out trade, start talking about U.S. versus the rest of the world. And they start saying, if you really want to diversify, go to Europe, go to Asia, go elsewhere. How much is that part of the proposition versus trying to identify the best stories?
Yeah, I think international diversification makes a lot of sense. We've been espousing that for a while. And suggesting to investors that they have international diversification for many years, you just had to constantly say, I'm sorry. And now to some degree, you get to say, you're welcome. So, clearly it worked in the last year, but you do tend to go through multi-year secular cycles. Not U.S. is the only game in town 100% of the time in a linear fashion and discard all the international. But I think that we're maybe in one of those waves where not necessarily that international is going to consistently outperform, but as a diversifier, it adds benefits.
How much is this driven by the rate cutting cycle and the idea of the dollar weakening? I mean, how much is that really the driving factor of outperformance?
I think that the dollar currency fluctuations is definitely a big part of it in terms of international. I think the interest rate side of things is a little bit more of a driver of why we saw bids down the cap spectrum. Now, all the way down into the unprofitable segment of small caps, I think that trade you want to fade. I think you want to lean into the profitable piece of small caps. So, but you're right to point both of those out as a driver of international and small caps, respectively.
We started this hour talking about this meeting the president's going to have at House GOP, how they sell the economy ahead of the midterms. You say the vipression lives on. What are the contours of that kind of economy?
Well, it's the differential between the soft economic data and the hard economic data, and that's been with us now since the COVID era. It's kind of part of the K-shaped nature that we talk about. Confidence relative to actual spending. It's hard to see what breaks that divide between sort of dour expectations versus the reality on the ground. It probably only starts to converge as a function of, I think, the labor market, either more deterioration in the labor market that then has the hard data catching down to the soft data. But I think continued strength in the labor market, I think eventually could cause some of that soft economic data to catch up to the hard economic
Well,
data.
you also say that the labor market could be a tailwind or headwind for 2026. How could it be both?
Well, it depends on what direction it goes. So there's so many facets of the labor market that have come into play, not least being the tie-in to immigration and the implications that has had for labor force growth and what that has meant for the unemployment rate and its trajectory looking quite unique in this cycle relative to past cycles. Normally, when the unemployment rate inflects and starts to move higher, it tends to consistently move higher. This flattish kind of trudging along unemployment rate is very unique in history. And I think that the labor market really holds the key, clearly holds the key to Fed policy. I think it holds the key to confidence and to spending. I think the tie-in, and maybe that sounds like I'm stating the obvious, but I think it's been more crucial in this environment. Anne-Marie, to your point about consumption patterns, and whether, in this case, what you mentioned before, front-running the expected gain from tax policy, or just confidence in the labor market that has allowed consumers to keep savings rate fairly low and continue to spend. It's because of that confidence in the labor market. So I'm not going to try to forecast what the jobs backdrop is going to look like, but I think that could move the needle very significantly on the economy.
Could it move and influence the equity market? Because what was curious last year is that we saw unemployment inflect higher and the equity market just kind of shrugged and carried on rallying. Is it important? Is it instructive for what happens with equities?
Well, last year was also a concentrated year and very much driven by the AI side of what was going on in the economy, the CapEx side. I continue to think that we've got, you mentioned earlier, no talk of recession. We've had plenty of recessions within the economy. It's just happened on a rolling basis. We're still arguably in a manufacturing recession to the extent you use, ISM manufacturing index as a proxy for that. We've just had pockets of strength that have been dominant elsewhere, that's been enough to prevent the economy from having an across-the-board kind of recession. But the rolling recession idea and rolling recoveries and rolling expansions, that's been with us since the quick aftermath of the COVID cycle. And I think that's something that will continue. So you have to peel a layer of the onion back a little bit to get a sense of truly what the economy is doing. It's not monolithic in this environment.
Liz Ann, it's good to see you. It always is. Thanks for dropping by. Looking forward to navigating the year ahead with you. Liz Ann Saunders there of Charles Schwab. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. President Donald Trump says he wants U.S. oil companies to play a key role in rebuilding Venezuela. The president saying oil majors could be up and running in the country in less than 18 months. and the U.S. government could subsidize their efforts. Sources telling us here at Bloomberg that Energy Secretary Chris Wright plans to speak with oil executives in Miami this week. Meanwhile, copper is extending its rally above $13,000 as investors bet on a tighter market. Possible U.S. import curbs, rising demand, and production constraints are fueling bullish calls on the industrial metal. U.S. inventories of copper also surging with 44 straight days of net inflows in COMEX-tracked warehouses. And Manhattan home sales jumping 5% in the final quarter of 2025 compared to the year before. Sales getting a boost from an increase in co-op deals, a sign that falling borrowing costs entice some rate-sensitive buyers back to the market. Still, buyers who could pay in all cash dominated, accounting for 65% of deals. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for the update. Up next on the programme, the Morning Calls Plus, Bloomberg's Ed Ludlow, breaking down comments from the tech giants, kicking off the CES conference over in Las Vegas. That conversation just around the corner. Live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary. We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
What we think is going to happen in 2026 is you're going to go from the inflection year, 2025 for AI adoption, to the year where it accelerates when global corporates realize that if they don't find ways to drive revenues and cut costs through using AI, they will be at a competitive disadvantage.
That was Julian Emmanuel of Evercore ISI looking ahead to the year ahead for 2026. Taking the temperature of things so far, Bramo, early days for this year, but just in look-ahead season, it's a bit odd this year, isn't it? There's not that overwhelmingly large consensus trade that people want to throw mud against. It just feels like a slow, choppy grind to nowhere, potentially.
What kind of conviction can anybody have in the macro backdrop right now? You have a lot of micro predictions, whether it comes to specific metals, specific tech companies, or specific parts of the industry. But other than that, it's not like someone's coming out saying, I see rates at zero and the small caps to the moon. It doesn't have that level of conviction.
That big, fat, directional trade.
Exactly.
A lot of skepticism out there at the moment still, even with those big price targets from certain banks. Equity futures on the S&P, positive by close to 0.1%, within 0.5% of all-time highs on the S&P 500. On the Nasdaq, up by 0.24. That's some of the price action. Let's get you some morning calls. First up, JP Morgan upgrading Mobileye to neutral, seeing a higher predictability of growth outcomes in 26. That stock is up by close to 5%. Your second call from Truist, initiating coverage of CoreWeave with a hold rating, believing it is a leader in providing AI cloud infrastructure. That stock is up by 2.7%. And finally, Evercore reiterating an outperform rating on NVIDIA with a street high price target, naming it a top pick for 26. That stock is up by 0.8%. Sticking with tech, the AI race heating up over at CES.
The amount of computation necessary for AI is skyrocketing. The demand for NVIDIA GPUs is skyrocketing. The race is on for AI. Everybody's trying to get to the next level.
With all of that user growth, we have seen a huge surge in demand in the global compute infrastructure. We don't have nearly enough compute for everything that we can possibly do.
Programming note, don't miss AMD CEO Lisa Su right here on Bloomberg TV at 11 a.m. Eastern Time, speaking with Bloomberg's Ed Ludlow. Plus, at 1 p.m., he'll be catching up with the CEOs of NVIDIA and Siemens. Ed, I'm pleased to say, joins us now for more. Ed, looking forward to this. Your day is absolutely stacked, my friend. What's on the top of the agenda for you and the team?
Yeah, I mean, it's a lot of fighting talk from both Jensen and Lisa, right? But it's the same questions. You know, what is the real quantifiable demand for this year? Do they expect the capital expenditures of the hyperscalers that are the bulk of their business to increase? And then, you know, what's kind of interesting, John, I heard what you were saying about the direction of trade. You know, I appreciate NVIDIA and AMD are both up a few tenths of a % in the pre-market. But during those keynotes last night, particularly NVIDIA, the market really struggled for direction because it didn't really understand what the main headline was for 2026. Because we came to Vegas thinking, all right, this is the first official working day of the year. You have the CEO of the world's biggest company and most important company probably going to tell us something. And in reality, he didn't, beyond the broad strokes of, you know, the AI story that he's been telling for the last couple of years is still intact.
In many ways, Ed, I think for some investors, they feel like the risk factors are elsewhere after getting punched in the face by DeepSeek around this time last year. The focus also on the likes of OpenAI, and something that's come up repeatedly in my early conversations for the year are the funding needs of OpenAI, setting the tone for the whole trade. Ed, are you hearing the same thing?
Yes, and you know, OpenAI continues to consider how it can raise more capital. Actually, during the AMD keynote last night, Greg Brockman, the president, you know, went on stage with Lisa Su and continued to talk about how OpenAI is also compute constrained. They don't have the capacity they need, and that is the story that they're using to convince the private markets. We must raise this capital because we need it to buy the chips, and or at least in some mechanism install more data center capacity. You know, to your point, particularly on the NVIDIA side, there was a news headline which was sort of a little tepid for the markets, but them confirming that Vera Rubin, which is their next generation platform, is in full production. It's a repetition of what they said in August and then again in November, but it does give the market some confidence because the main reason we care why NVIDIA or AMD can bring out a new generation of GPU or system every year is that every year it lowers the cost of running AI models, which if you are OpenAI or Microsoft, who are going to be some of the first users of it, is critically important if the market's going to believe that the economics of all of this will work out. You know, you can't go on investing for years and years without showing a return. And you know, in short, a high-performance computer system like Vera Rubin is able to generate tokens at a tenth of the cost that Blackwell can, you know, and that does change the economics behind using AI models at scale.
Ed, I love the way you connected these two stories, the worries about the financing needs of OpenAI and the push to greater efficiency and reducing the cost of using some of the compute. I wonder how much NVIDIA's push into more efficiency highlights how much it's a rival with Google and how much Google has really made inroads in a material way.
Yeah, I don't want to give it away to either Jensen or Lisa. It's a question we probably should ask. What they will say and have said is that the Google TPU story is it's a great product that's kind of a bit niche. And both NVIDIA and AMD would say the thing that's so good about our technology is it's versatile. It can be used at scale. It's easy for engineers to use in combination with software. And the market hasn't bought that either. You know, every time Bloomberg's reported a big deal with TPUs, you see NVIDIA and AMD stock fall pretty significantly. So, you know, to your point, I think that Jensen was trying to convince people on stage that, you know, NVIDIA is basically moving faster and has the scale that wards off that competition. But it still lingers that basically if companies are so compute constrained, of course they're going to look for other options, and there will come a time where they'll look and say, what is the most economically viable option for me?
You know, you talk about how we didn't hear anything new, but Emery and I were just thinking the same thing, which is we did hear about a smart car, reasoning cars, the Alpha Mayo, that could potentially create a new scenario where your car tells you that you're just wrong and stop backseat driving. I mean, at a certain point, Ed, why isn't that a bigger story here?
Yeah, you know the video that you're showing, by the way, it's a great video. It's a Mercedes CLA vehicle, and it's running on completely NVIDIA hardware and NVIDIA software. And what's so interesting about it is that on stage, Jensen claimed this was a first. It's the first automotive or autonomous driving model that does reasoning. But you've just seen it go past Chestnut Street in San Francisco, and it will proceed down and take a left on Broadway. That's the same route that I drive every single day using Tesla's full self-driving, which is exactly the same thing. And so what was interesting is when NVIDIA released that piece of information, Elon Musk ended up engaging about it on X because he made the point like, hey, we kind of already do that. And I find that very interesting because NVIDIA and Tesla, along with Elon Musk's other companies, are kind of core partners. NVIDIA is very committed to the next phase of AI, which is autonomous driving and robotics. But I thought it was interesting that their claim was, we've done something new here, which was instantly met by pushback, albeit from those that are kind of hardcore Tesla supporters.
I saw the Elon Musk tweet. He had an emoji that was laughing, and he says, we're already doing this, and it's easy to get to 99% and then super hard to solve the long tail of the distribution. Is NVIDIA basically now in competition with Tesla?
It's the question. If I get the opportunity, I hope to ask. One thing I'd say, you know, detail matters. In the press release, frankly, this is a level 2 system. It's an advanced driver assistance system, not full autonomy. And the way that NVIDIA and Mercedes packaged it was as a full autonomous system. It may well be one day, but at the end of the day, the principal technology differences are really important. And investors do understand this, right? Tesla uses only cameras. It does not use LiDAR, radar, ultrasonics, or other sensors. And its argument for that is that at scale, it is the most viable, economically speaking. You know, it's cheap, whereas all those sensors cost a lot of money. And so, you know, on stage, Jensen was talking about the idea that there's this very sophisticated compute system that NVIDIA is providing to Mercedes, goes in the car, has all these sensors. That's a lot of money when you buy a vehicle.
Just quickly, I've got 15 seconds since we're talking about it. When's the new Rivian out?
Yeah, the Rivian maybe by the first half of this year, beginning of the second half of this year. We'll see.
Pretty cool. Looks pretty cool. Mid-size SUV, you seen that?
I
The new one that's
think that
coming
the
out?
Rivians are really quite good looking.
New one coming out this year. Looks very, very cool.
I would agree with that.
You're in the market?
Might be in the market.
Okay, I thought so. The way you asked that, it was like you were planning your
Might be a
year.
personal question, all right? Give me a break. Don't miss that conversation later. AMD CEO Lisa Su right here at Bloomberg TV, 11 a.m. Eastern Time with Bloomberg's Ed Ludlow on Bloomberg Technology. Later on, the NVIDIA boss, Jensen Huang, at 1:15 Eastern Time. Ed Ludlow there, over at CES in Las Vegas. Coming up on the program, we'll catch up with Andrew Honhorst of Citi, expecting a rise in unemployment. Looking ahead to Friday's payrolls report, plus Danny has some morning movers. Microchip shares rising after strong third-quarter sales.
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We are risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
60 minutes away from the opening bell, equities just about unchanged on the S&P 500. On the Nasdaq, pushing higher in yesterday's session, snapping a 5-day slide. Up again this morning by close to 0.2%. Let's get you some morning movers. Danny Berger has more. Hey, Danny.
Hey, John. Shares of Microchip gaining in the pre-market trade, up nearly 4%. Pre-announcing their earnings yesterday, the semiconductor company seeing an upgrade to their outlook, also rhyming with what we heard from AMD's Lisa Su, that there is just off-the-charts demand for anything AI-related and chips and semiconductors. So again, Microchip gaining in the pre-market session. Elsewhere in tech, Ava, it's a micro-cap company, so just take that big move with a grain of salt. Up a quarter this morning, 25.3% after NVIDIA's announcement at CES that they will be moving into autonomous vehicles. They're going to be using Ava's LiDAR technology to power their future vehicles. So again, those shares gaining. Finally, Equifax, TransUnion, the credit reporting bureaus down sharply this morning. The Federal Housing Finance Agency Director Bill Pulte writing on X, saying that he doesn't understand the pricing of these credit unions and that they are inviting scrutiny day by day. Equifax down 2.8%, as is TransUnion, John.
Danny, thank you. Looking forward to the program. With Danny Berger and Matt Miller at about 30 minutes' time to guide you into the opening bell at 9:30 Eastern Time. Bit of an update on the president's get-together with House Republicans down in Washington, D.C., set to take place in about 90 minutes' time. Doesn't sound very closed-door-ish anymore, does it?
So the whole retreat is all day, and that's supposed to be closed door. But I guess his remarks at 10 a.m. are going to be televised because Caroline Leavitt, the press secretary, says, tune in. You don't want to miss it.
And then they'd retreat. Then it's closed doors.
Yeah, I'm guessing.
Okay, all right.
I mean, I guess that can change too. I guess maybe they could televise the whole thing.
Everything that's talked about is going to be leaked.
Yes.
Okay, look out for that later down in the nation's capital. Let's turn to the Federal Reserve. The new year means a new set of voters on the FOMC. Mike McKee's tracking that for us. Good morning, Michael. A bit of a hawkish tilt this year, right?
Bit of a hawkish tilt this year. We don't need leaks from the Fed because they pretty much tell us what they're thinking. We do have 4 new voters from the regional banks rotating onto the voting schedule. And they're pretty much all hawks, with the exception of perhaps Anna Paulson. Beth Hammack, Neil Kashkari, and Lori Logan have made it clear they don't think that we really need to cut rates in January. And we're only at a 16% chance of that, maybe because markets are looking at who is going to be voting this year. Paulson speaking a few days ago saying that she thinks it's a finely balanced situation. One person who is not a voter this year, will be next year, but is making his views known this morning, Tom Barkin from Richmond, and he's also in that finely balanced camp where he's not taking a position either way. He's somewhat optimistic, saying in a speech just now that 2025's uncertainty is bound to diminish. The fog should lift, and as firms build confidence in demand and the policy environment, that should be good for hiring and investment. Then he adds, but going forward, policy will require finely tuned judgments, balancing progress on each side of our mandate. So the question is, does the Barkin scenario come true or not? Neil Kashkari yesterday on CNBC saying he thinks they're pretty close to neutral right now, so he's not expecting a whole lot. It'll all come down to what the data tell us, the jobs report and CPI, and I note this morning that we're a little more optimistic on the jobs front. Yesterday we were talking about an estimate of 59,000 jobs created in December. Now we're up to 65,000.
Big range, Mike. 155 is the high, the low's 23. We can get into payrolls a little bit later. Let's just stick on the committee on the FOMC. Mike, you've tracked this committee, this institution, for decades. Do you sense we're breaking out into a new regime? And I'm sure you've heard some of the conversations we've had on this program. There's a sense from some people that are appearing on the show that the president's push for interest rates is leading to some unintended consequences. It's galvanizing every single voter on the committee. And maybe this more dovish core at the FOMC is going to be a less effective dovish core because of the pushback you'll get as a consequence.
Well, in the meantime, is what I would say, with the Fed and everybody else waiting for the end of Jay Powell's chairmanship, we'll have to see what develops from there. But I think the real thing that people are forgetting is we haven't had a situation where interest rates were this high and it was this questionable about whether you cut or whether you hold as a decision. And so now you're getting more different views than you normally do when either it's going to be just a hold or just a cut or just a raise. So it looks like there's more division, but I don't think it suggests a new regime at all.
Mike McKee, thank you, sir, with the latest on what's going to happen with the Federal Reserve and the data later this week, and the latest on this committee and how things change with new leadership later this year.
Well, that's, I think, the key, right? So right now, it might be that this is a divided Fed because ultimately the data is a Rorschach test in terms of how you interpret it. Later this year, it might be more divided for other reasons when we actually get a decision about the Kevins. Or Scott Bessent if he wants an exit strategy.
Yeah, Andrew Hodenhorst of Citi's got things to say on the data and on that too. In our base case, the unemployment rate rises to 4.7% in the December jobs report, continuing its trend higher and keeping the Fed reducing policy interest rates. Andrew joins us now for more. Andrew, good morning.
Good morning.
Good to see you.
Happy New Year.
Yeah, Happy New Year to you too. That's not such a happy New Year for the labour market though. The drift towards 5 continues.
We think so, and I think that we're in the business of forecasting these things on a monthly basis. There's a lot of volatility. We have some residual seasonality in the data. All of those things kind of obscure what's going on. But if you just step back and look at what this labor market has done over the last 2 years, we've been trending higher in the unemployment rate. We've just been consistently trending higher in the unemployment rate. So we think that trend continues this year. We do think that can happen in the jobs report that we're going to get this week with the participation rate coming up a little bit. Maybe that's going to push the unemployment rate higher. But what I would really emphasize is that broad trend towards loosening in the job market.
Mike talked about the hawkish tilt as the FOMC rotates and you get the regional voters, the new ones coming on board for a year. What is the credible case to stay on hold? What is their case at the moment?
So I think it's all about how comfortable are you with the labor market, and then how much discomfort do you have about inflation, and then to some extent financial conditions also, because financial conditions are easy. They've been easy for some time. And then on inflation, and this is where I think people really differ, we're above target on inflation. If you listen to Chair Powell, he'll say 2.8% or so core PCE inflation, but go ahead and subtract about 50 basis points from that due to tariffs. You're down at 2.3%. So I think there's a core of more dovish Fed officials that are looking through that tariff inflation and are not that concerned about inflation. But there's a group that are still concerned about inflation. So it's going to be the jobs data that matter in terms of, are we becoming a little bit more uncomfortable with the job market, this very low hiring job market? And then on the inflation data, and that could take a number of months, but we have a clear slowing trend in shelter prices. I do think that some of those concerns about inflation will dissipate over the course of this year, but they may rise first before they dissipate later this year.
One thing that Richmond Fed President Tom Barkin talked about was that this is going to be clean data, and that he's looking forward to getting some clean data. How much do you actually think this data will be the first clean read since the government shut down?
So I think on the jobs report and on the unemployment rate, this is really important in terms of the interpretation. A lot of people looked at that November unemployment rate and said, yeah, 4.6%, but maybe it got boosted because of the government shutdown. So even if we hold steady at 4.6% on the unemployment rate in the data for December, I think people will look at that and say, well, that was a clean 4.6%. And we've heard different Fed officials differ in terms of how clean or not they think that that number is. So yes, I do think that, especially on the inflation data, I think there are big questions about the inflation data during the shutdown period. But on the jobs data also, there are some lingering questions. This jobs report will help to resolve those.
And you think that it's going to resolve it in terms of possibly even getting a Fed rate cut by the end of this month? And I just wonder how far that will go to bolstering a labor market that's being affected by other issues outside of any kind of monetary policy.
Yeah, not very far, right? So that's you're cutting interest rates 25 basis points and doing it in this month versus doing it later this year. That's just not going to have a huge effect on the macroeconomy. But I think you're still watching the labor market because you're looking at three things. If the labor market is loosening, it's telling you maybe you're not really at neutral, maybe you need to cut a little bit further. It's telling you there's going to be less inflationary pressure because we don't have this wage pressure, we don't have a tight labor market. And it's also telling you that maybe I want to start thinking about insurance. This is not something we're really hearing from Fed officials now, but maybe I want to think about, do I need to be at least at the bottom of the range of neutral? Maybe I'm going to need to go below neutral because if you're actually getting to 5% unemployment. And I think it's a very obvious point, but one that's being missed a little bit in some of the rhetoric around this. The unemployment rate is moving higher gradually. It's good that it's a gradual move and not a sharp move, but if we just keep moving gradually higher, we will hit 5%, and you'll keep going north of 5%, and at some point we'll say, we really have an issue with unemployment in this country.
Andrew, when it comes to inflation, what about healthcare inflation, given the fact that subsidies are rising?
Yeah, so we have this really complex technical issue now with the way that these healthcare subsidies are going to change as we go into 2026. That could have some direct effect on the CPI data. We don't think it's going to have much of an effect on the PCE inflation data. But in terms of just consumer costs, right, this is a higher cost that consumers will be facing, but I don't think it will have a big effect on the report.
Inflation, what is the biggest concern then? In terms of policy, because everyone will talk about tariffs, but this year's also healthcare. Do you think any of these will have an impact?
I would be watching. And the inflation data are two things. One is, do we see this continued gradual softening of services inflation? We're seeing it most clearly in shelter, as clearly in non-shelter services. So that's one question. The other question is, I was mentioning earlier, Powell talking about this 50 basis points due to tariffs. Well, is that strength that you have in goods prices, is it really tariff related, or are there other factors that are playing into higher goods prices? Is that going to continue, or is that going to dissipate? I don't know if policy can do a lot to address those things. And when people talk about affordability, honestly, I think a lot of what they're talking about is the expense of buying a house, which has to do with mortgage rates, and that, well, the Fed cutting interest rates will bring that down.
And also, Andrew, things are just bloody expensive.
Everything's expensive.
Jim Bianco sounded so English then, didn't it? Jim Bianco did a great job of this over at Bianco Research.
Yeah.
The Fed talks about one-offs and one-time changes because they're focused on the change. The public is dealing with the price level.
That's right.
And where prices are is just ridiculous. Anyone trying to buy food or pay the energy bill, it is absolutely ridiculous. Do you think the Fed needs to reconcile the differences between how they look at inflation and how the public experiences it?
I think certainly in how they talk about that, it's very important to kind of get the rhetoric right around that, because it is true. I experienced that. You go to the store and you're just shocked at how much everything costs. And I'm an economist. I understand inflation. I understand price level. But I still have that emotional experience of going to the store and realizing how expensive everything is. So yes, the price level is higher. And I think that is something that should be communicated more clearly, is that the path forward, it's going to be difficult to bring that price level down, right? We're not trying to generate deflation. Now, what you would hope is that wages continue to grow, right? And we end up having real growth in real wage growth. And we are having some of that now, which is a healthy thing. But honestly, you need years of that for people to feel better about these prices.
Quick one to finish. The new Fed chair. Is his name Kevin?
I think there's a high probability that his name will be Kevin, and I think that's about all we can say right now.
Helpful. Andrew, thank you. Thank you very much. Good to see you. Thank you. And well done last year, by the way. I think one of the more accurate forecasters of the Federal Reserve, Andrew Holmhorst there of Citi Research. Let's give you an update on stories worldwide this morning with your Bloomberg Brief. Here's Yahara with more. Hey, Yahara.
Hi, John. European leaders and U.S. officials aiming to finalize an agreement on security guarantees that include the possibility of American boots on the ground in post-war Ukraine. The talks in Paris will focus on how to integrate capabilities recently proposed by Washington with plans drawn up by the so-called coalition of the willing that's made up of Ukraine's allies. Meanwhile, Denmark's prime minister saying NATO will collapse if the U.S. attacks Greenland. The warning coming as President Trump re-ups his desire to take over the island nation. Stephen Miller, a top aide to the president, telling CNN Greenland rightfully belonged to the U.S. and the Trump administration could seize it if it wanted. And Amazon unveiling a new line of artwork-style TVs. The Ember Art line is designed to resemble a piece of framed art and will come in 10 different colors. It will be available starting this spring in 55 and 65-inch sizes. The line starts at $899 for the smaller version. And as for your question, John, on whether it will require a separate connection box, well, current details suggest it won't, but we'll have to wait on Amazon to release full details on installation.
There you go. That's the game changer. If there's no box there. Yahara, thank you. Appreciate it.
You're looking at Rivians and you're looking at box art. Really? I mean, this is like, who is this person?
Just to like streamline the living room a little bit,
it's
you
true.
know?
I get it. I totally get it. And you need to implement it correctly. You're going to buy a licensing agreement to get different artwork?
No. I'm sure you can just upload your own photos, can't you?
That would be actually much better.
Wouldn't that make sense?
I guess.
We'll find out right here on Bloomberg. Okay. Up next, we'll set you up for day ahead. Plus, Troy Gajewski of Future Standard breaking down opportunities in private equity and markets worldwide. You're watching Bloomberg TV.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield back on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Still see technicals and momentum in the driver's seat. You almost have to remove the macro from your brain right now coming into the new year. We're still watching, some of this macro weakness. The business surveys are telling you things aren't great, but meanwhile, the markets are saying, get ready. We're going to see a massive cyclical expansion. The economy is going to accelerate meaningfully this year. So there's a major disconnect right now between macro and markets.
How does that disconnect reconcile, if at all, later this year? That was a conversation with Emily Rowland of John Hancock a little bit earlier on. You can catch that conversation when we upload the full program to YouTube or on the Bloomberg terminal for that matter. As we count you down to the opening bell, about 43 minutes away, the price action looks like this. Equity futures on the S&P just about unchanged. The Nasdaq 100 positive by 0.1%. The day ahead and the week ahead for that matter looks like this at 9:45 Eastern Time. US S&P PMIs, 10 a.m. Eastern Time. President Trump giving remarks at the House GOP retreat, setting the agenda for the year ahead, going into the midterms. Tomorrow, lots of data, ADP, JOLTS, and ISM services. Thursday, another round of jobless claims. Friday, the payrolls report just around the corner. Let's talk about this market. Troy Gajewski of Future Standard writing, in an environment where public equity valuations are stretched and it's very difficult to find growth outside of mega cap tech, middle market private equity stands out as an oasis. Troy joins us now for more. Troy, good morning and Happy New Year.
Good morning, John.
Good to see you in the studio. Thanks for coming in, buddy. Thank you. Let's talk about setting the tone for markets worldwide, and in private markets for that matter. To what extent does the fate of one company, and I'm going to say it, OpenAI, that one company set the tone for the broader market?
Well, as we were discussing before, OpenAI has been at the cutting edge of, obviously, infrastructure for the complex, right? And that has driven competitive pressure for the hyperscalers, who are historically petrified of losing market share in various areas, to spend money at prodigious rates, right? The fact that 30, 40, 50, maybe even 60 basis points of contribution to nominal GDP will come this year. So they've been critically important in waking up the giants, so to speak. On a go-forward basis, though, the hyperscalers are going to drive more and more of the outcomes, we believe.
What I'm getting at really is the fate of the public market. How tied is it to what is happening in private markets and vice versa?
Yeah, so private markets tend to have an advantage for funding early. As you know, if you look back, 15, 20 years, it was all about small-scale funding and then eventually going public, and that allowed you to grow. As private equity and private credit has grown up, they've been the preferred sources of financing. And then prior to that, of course, in growth areas, you have venture capital. So private credit infrastructure has led the way in terms of financing these projects. And then now, of course, you have a little more circular funding coming, again, from the largest 5 companies in the world.
There is this question, though, and I think that just to build on what John is saying, OpenAI and their investment has really fueled a lot of other investment in infrastructure, in data centers, has propped up the valuations of it at a time when suddenly people are looking for more efficiency. At what point does that pose a significant risk on a credit perspective to private credit and infrastructure investment this year?
Well, so I think big picture, right, if you're looking at the ROICs that at least are modeled out in data centers, and to be fair, remember the demand for compute, not just in AI, but obviously almost more importantly in old school, SAS or other applications, continues to outstrip demand, right? So you have tremendous demand for the computational power of the storage, and you don't have enough supply yet. So trying to extrapolate in the near term that some struggle at OpenAI would lead to some circular backwash is hard. We could see 27 and 28 by then, if there's not an AI ROIC, it's going to get a little bit tricky in terms of forward CapEx budgets.
Do you think that data centers are a good place to keep investing in? Or do you think that there needs to be a catch-up trade with some of the energy sector as well, from a private investment perspective?
So look, everything, all the analysis our team does, and we're a much smaller player, roughly $2 billion in assets, is that forward demand, particularly in situations that are funded by hyperscalers, where you have that recurring revenue, that free cash flow, look very attractive. The comparison I always use is, if you look at senior secured commercial real estate lending versus the senior part of the capital structure in data.
And on these players and stop them from spending loads. I think Michael Semblis of JP Morgan Asset Management talked about this recently. I've got copper through 13K. The electricity needs that Lisa talked about, the social pushback as well, that so-called gating. How much of a disciplinary effect will that have on these spenders?
Well, as of now, given the size of the budgets, it looks like the spending side is set. Again, it's more on the supply side. So I wouldn't expect until 27, 28. Remember, the key factor here is when will the ROIC for AI really show up in the real economy? Not in search, not in Gemini, et cetera, but in the real economy. Everyone, for the time being, is willing to spend.
When you say the real economy, what do you mean? Just explain that.
Well, so one of our kind of small trades in our multi-strategy fund, for instance, is trying to find players in broader industries, medicine, chemicals, energy, infrastructure, et cetera, where you can actually use these tools to meaningfully produce or boost productivity growth. That's starting to show evidence, but it's unclear if it's enough to drive the continued growth of spending, right? And so what I'm talking about here is, you think of a flatlining in spending, call it 27, 28. That will be fine for broader markets. We'll have a multiple correction, multiple compression, hyperscaler multiples will come down, but it'll be very, very challenging, if not catastrophic, for hardware. So, when you step back, whether it's public markets or private markets, I think the key in your portfolio is to have enough exposure to the AI trend that it can move the needle, but not so much that it causes significant damage if it peters out.
We can turn to the debt markets. Just seen this headline cross on a Bloomberg terminal. Broadcom, 4-part debt offering coming from that company, Lisa, just crossed on a terminal moments ago.
Yeah, and I wonder how much of it's going to be a 50-year tranche, considering what we saw from some previous ones. It is interesting to see all the debt that is coming to market and the fact that it has been received so well. It has been in the public markets, now following on to the private market financing. They do have a 30-year tranche. I don't see a 50-year tranche, but who's next, right? This isn't over.
It's a new story, isn't it? It's a new shift. There's a different character to all of this, and I think it started coming out of summer. We moved away from using cash flow, and we started to move to the debt story. I'm not talking about Broadcom. I'm talking about what's happening with the oracles of this world towards the end of last year.
Yeah, and it is a different proposition for the oracles of the world, which doesn't have profit. But when you have a Google or Amazon, it's a very different story. I think that it was Torsten Slok who said that in 2024, 7% of total investment-grade issuance came from the tech sector. It was 14% last year, and it came just in a couple of months, all at once.
Amazing. Troy, do you miss talking about Bitcoin and public equities? Do you miss any of that?
Not really.
No. Just asking.
And on that topic, if I may, to
just quickly,
back
sure.
to private equity. So,
of course, yeah. Why not?
Why not, right? So if you think of the AI, one of the nice things you can find are other sectors with tremendous growth. In healthcare, and it's not because of my engineering background, we're very excited about robotic surgery, infusion care, not maybe as juicy as AI has been the last 2 to 3 years, but very good upside and limited downside.
Well done for squeezing in that extra trade. Troy, thank you. Troy Gersky of Future Standard. Coming up tomorrow, Cameron Dawson of New Edge Wealth, George Saravelos of Deutsche Bank, Gargi Chowdhury of BlackRock, and Keith Lerner of Truist from New York City this morning. Good morning. Have a wonderful day. This was Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
what some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content and never the two shall meet, but there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. Stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
We have two crises, two essential crises, and for both it's now or never, democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. When I started to realize what was happening, it was 12 years, and we haven't done it.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
All right, we are looking at markets. Not all U.S. markets are at all-time highs, but the Dow Jones Industrial Average is 30 minutes until the start of trading. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, NVIDIA says production of its next-gen AI chip is on track, but there's competition in the wings. We are live from CES in Las Vegas.
And the bull market, it's alive and well despite mounting geopolitical risks in Venezuela, Greenland, and Taiwan.
Plus, hedge funds with stock-picking strategies had a stellar 2025. Bloomberg crunched the numbers.
I'm starting with something more unusual for us, which I think you're to blame with this.
I'm behind this.
And I will accept that.
To some extent. Yeah. Actually, Sarah Mazzulli suggested this, our producer, and I said, great idea, Sarah.
Well, the idea is to start with commodities, and it is a great idea because that has been the concentration of moves. Oil fell yesterday after the action over the weekend in Venezuela, and then it ended up gaining 1.6% because maybe there's actually disruption in Venezuela. That means you have to look for other sources of oil, especially if you're China. Copper trades at a fresh new high, up 2%. Gold, that also looks steady. Silver also high, too, as traders look beyond Venezuela, but also it's that continued trade of precious metals being the hedge.
All right, let's look at digital gold, shall we? And I'm not talking about Bitcoin here. I'm talking, of course, about these chips. NVIDIA shares rising after the CEO, Jensen Huang, said demand for its new Rubin chips is strong, as well as demand for the lower-level H200 chips that they're allowed to sell to China, which have been submitted for licenses. So we're following that story. Huang, of course, speaking, Danny, at CES.
Yeah, looking forward to some more conversations from Jensen Huang, Lisa Su, with the Bloomberg Tech team. And Huang announced a slate of new products at CES in Vegas, including one for autonomous vehicles.
The amount of computation necessary for AI is skyrocketing. Vera Rubin is in full production. We're announcing Alpamayo, the world's first thinking, reasoning autonomous vehicle AI.
It's a lot to keep track of, and doing so is Bloomberg Tech co-host Ed Ludlow, who's in Vegas for CES and joins us now. Ed, what did you make of the announcement from Jensen Huang and NVIDIA?
Yeah, I mean, the main news headline probably is that Vera Rubin is in full production. And in some ways, that's actually just them reiterating what they said in August and then in November. But it is important because, firstly, the prior generation Blackwell system encountered some production hiccups when they were ramping. So the market's, it's modestly higher, but it's a kind of an assurance that that generation to generation jump might go a little bit more smoothly. But another reason that we kind of care about it is that each year, NVIDIA commits to a new generation of compute platform. And for NVIDIA, every time they do that jump, they actually own more of the server design. They have their hands in more components. As a percentage, NVIDIA accounts for more of it. And on paper, that's positive, right, for margins in the future. And for those that use it, be it Microsoft, OpenAI, every time there's a jump each year, it basically lowers the cost of running a model significantly by a factor of 10 or something like that. And so it is important that that stays on track.
I hear you're going to sit down with Lisa Su of AMD right at the top of your program, special coverage from CES in Las Vegas. Ed, and I think a really fascinating interview because she came here from Taiwan when she was 3 years old and became one of the most vaunted leaders in the technology space. What do you want to get from her?
Yeah, like AMD is fighting. They're fighting hard to get a foothold in a market that, frankly, NVIDIA still dominates, which is accelerator cards or GPUs that go into data center. What's interesting about what AMD is doing is that it's a slightly different approach based on their focus at CES. NVIDIA still gets most of its sales with the hyperscalers, right? The big cloud computing companies. This latest generation of AI card that AMD has is targeted more at like on-prem, smaller data centers that companies control themselves, largely focused on inference, running AI models locally at the edge for the things that are needed. So I'm kind of interested, like, why? Is that you kind of conceding that the bigger market, training and higher end inference isn't for you? Or is this just something a bit incremental that they're doing? And AMD is also important in PC, and like everyone is obsessed with data centers, and as you know, I'm obsessed with data centers. It's important, but the PC market in 2026 is so interesting, and we might learn a little bit more about the health of that market through AMD rather than NVIDIA.
All right, Ed, very, very much looking forward to this coverage today. Bloomberg Tech's Ed Ludlow reporting live from CES in Las Vegas. Arguably the most important conference on tech and nowadays on cars as well. Ed is going to speak with a number of the world's top AI CEOs throughout the day. As I said, starts at 11 o'clock with AMD CEO Lisa Su. Let's turn, though, now to geopolitics as Delcy Rodriguez is sworn in as the new Venezuelan president. White House Deputy Chief of Staff Stephen Miller made it clear who is running the country.
We have an oil embargo in Venezuela. For them to do any kind of commerce, they need our permission. We have our massive fleet, our armada, still present there. This is an active and ongoing U.S. government military operation. And so, of course, we set the terms and conditions.
Joining us from Washington is Bloomberg's Washington correspondent Tyler Kendall. And President Trump has made it clear that if she doesn't do what he wants, she could face worse consequences than Maduro. How does Washington receive this news that we're running a narco-terrorist regime via coercion?
Well, Matt, there's been mixed reviews, of course, particularly on Capitol Hill, as many Republicans have broadly applauded the move by the Trump administration, but questions have been raised about how they went about executing this operation and ultimate mission. At the same time, this White House is trying to thread the needle. It depends on who you're listening to, whether it is the White House senior advisor Stephen Miller or Secretary of State Marco Rubio, about what the ultimate end goals are going to be. But it is clear that there is an emphasis here, particularly from President Trump, that the White House feels that Venezuela needs to get on more solid economic footing before there can be a transition to democracy. In fact, President Trump uses the words like fix the Venezuelan economy through oil revenues before he says that they can even talk about setting a date for potential elections, and that has raised questions, and it has also caused our own analysts at Bloomberg Economics to say that that raises the risk that there will be a delay in a democratic transition. It is very clear that that is where the emphasis prices, as Bloomberg News can now confirm that the U.S. Energy Secretary Christopher Wright is set to court and meet with U.S. oil executives later this week. People familiar with the matter telling us that he will meet with executives on the sidelines of an energy conference happening in Miami, because Matt and Danny, at this point, this White House is really banking on some big investment announcements in order to execute their plans for Venezuela going forward.
Tyler, thank you very much for your coverage on this developing story. Bloomberg's Tyler Kendall reporting from Washington. Now, staying on this theme, there will be a resurgence of interest for oil companies to go back into Venezuela if, and it's a big if, the political situation stabilizes. But Ben Lucklock, Trafigura Global Head of Oil, says don't expect oil to start flowing immediately.
Don't expect extra barrels to come quickly. You are talking a multi-year process, billions of dollars. Can they get back to their 3 million barrels a day? That will take years, 10, 15, hundreds of billions of dollars to get there. Do I think there's likely to be a resurgence in interest from the majors to go back to Venezuela and really produce, assuming that the stability remains? Absolutely.
Joining us now is Mike McGlone, Senior Commodity Strategist at Bloomberg Intelligence. Mike, one of the more interesting facets in this conversation is something that Trump added to the picture yesterday, saying that the U.S. government may reimburse oil companies for building Venezuela's infrastructure. Are we about to witness a U.S.-subsidized rebuild of Venezuela? And if so, what does that outlook appear to be?
Well, obviously, that's somewhat subjective, Danny, but it's the trend towards this whole America is becoming much more of a price maker than a price taker. Our colleague Javier Blas pointed out that now the U.S. is controlling close to 40% of total oil reserves. So I published today how, if just to include the U.S. and Canada alone, we have a net surplus of crude oil liquid fuels around 8 million barrels a day. You add into that Mexico and Argentina and Guyana and Venezuela, you see that massive shift in the global world order towards the America is becoming an excess supplier of crude oil. The key thing I want to point out is it's kind of meh. It's known. Crude oil's in a bear market. It's stuck. It's heading towards the lower end of range, maybe into the 40s. But what's really happening this year is natural gas has dropped about 10%. No one's really talking about that, but it's just the trend in energy prices going lower, and I think this is going to add to that trend. It's what Mr. Trump wants.
Mike, let me ask you about something we heard from Ed Morris yesterday, or rather, he told Tom Keene on Bloomberg Surveillance that we need to get rid of the Jones Act. And not a lot of people outside of commodities think about this, but it entails either allowing ships that weren't built in the U.S. to transport oil, or building, I guess, if we don't get rid of it, more ships in the U.S. How do you think that would affect pricing?
Yes, that's part of it, man. I think it's just more peripheral. That will be worked out, particularly when it comes to incentive of money. The U.S. has to export its natural gas, its crude oil, its corn, its soybeans, and we have an excess of, we have a superabundance of these commodities, which is wonderful. And in the dollar's weakening a little bit, but it's all the above. But the key thing is, from a standpoint, is if we don't find ways to ship more of it, the surplus builds and price pressure continues downward.
All right, Mike, thanks very much. Mike McGlone there of Bloomberg Intelligence, focused hard right now on oil, gold, and copper. Quick check on what's going on in equity index futures. We're looking at S&P futures, really unchanged here, actually across the board. I mean, with the exception of the small caps, Danny, not much of a move. President Trump tweeting out earlier that all of the U.S. markets, all of them, hit all-time highs, and I think he meant, you know, recently, like in the last quarter, which is the case.
I would say because only recently the Dow has hit a new time high because of Goldman Sachs, basically, in financial companies doing well. But yeah, we're still just under 1%.
The NASDAQ in October.
Yeah.
And
but we're almost at a new high for the S&P, just less than 1% away.
Yeah, just a couple weeks ago.
So President Trump maybe isn't wrong. He's just early. Coming up, we continue the conversation on Venezuela with Marco Papich, BCA Research macro and geopolitical strategist. That's coming up next on Bloomberg Open Interest.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Let's get to high interest now. Look at what's making headlines around the world. European leaders are backing Denmark after President Trump renewed threats to seize Greenland. France, Germany, and the UK, as well as others, warning that borders are non-negotiable and Arctic security must be handled through NATO. They stressed Greenland falls under NATO's collective defense and its future can only be decided by Denmark and Greenland itself and not the U.S. Marvell Technologies is buying XCon Technologies for about $540 million to strengthen its AI data center switching business. The deal would add technology that helps link many AI chips together, letting them work as one bigger, more powerful system. The acquisition is expected to close in early 2026. And Wall Street is entering 2026 with confidence, but strategists are warning that complacency may be dangerous. Trade tensions, sticky inflation, high rates, uncertain AI profits, and fresh geopolitical shocks are piling up. And despite muted volatility, some strategists say investors are underestimating macro risks after years, Danny, of strong gains.
Yeah, you could have said that last year, and we still gained in 2025. So
True.
I don't know what to make of that.
Why diversify?
Yeah, true. I guess international equities did better than the U.S. Let's get more on those geopolitical risks and where and how you should be thinking about them. Joining us now is Marco Papic, macro and global strategist at BCA Research, the author of Geopolitical Alpha. Marco, this is what you do day in and day out. And typically, the saying for Wall Street goes that geopolitics has little of an effect. And we've seen that in recent days. But if this is a global scramble that we're witnessing for resources, for supply chains, should they be thinking about this time differently?
I think that they should be thinking about the age of empires premium. And what I'm referring there to is a popular computer game where you send out little villagers to cut your timber and mine for gold. Because that appears to be the world that President Trump announced over the weekend. The United States needs Greenland. But why? You can just mine the commodities that are in Greenland and then sell them and buy them on the open market. That's at least what's worked for 30 years. By articulating the need for natural resources in such a stark manner, President Trump has effectively fired a starter pistol on a race for natural resources around the world. And I think that that's really the third derivative of this Venezuela attack we should be focusing on. As a result, I think that one of the strongest gains in 2026 could be the increase in prices for industrial metals. Not so much oil prices, but really industrial metals, because investors could front run this scramble where you see many countries start to hoard it in anticipation of this new way to think about the world.
Are you worried, Marco, in that case, that other great powers start grabbing leaders, even those that they deem illegitimate, and taking territory?
It's not so much about regime change. It's really about sequestering really critical supplies of minerals, of natural resources, into non-tradable spheres of influence. I mean, that's what this is really about. Venezuelan oil has to be our oil. Greenland's rare earths have to be America's rare earths. And so that's really what I'm more focused on. It's the fact that natural resources that were for the past 30 years easily tradable on the international market suddenly become sequestered in non-tradable zones of spheres of influence.
We've started to see that, for example, with copper, right? There's this huge U.S. hoard taking place with some of these critical mining materials. But Marco, a big hand that has to be played is China and their access to rare earth minerals. We've seen China play that hand when negotiations get tough with the U.S. Just how big of a factor is that going to be in 2026 as this global scramble happens?
Yeah, so China really did this way before anyone else, back in 2010 and 11, with the dispute with Japan over the Senkaku Islands. So this is really nothing new, and China has been hoarding and it's had a strategic reserve for many commodities for a very long time. This is just the application of the Chinese approach to commodity hoarding, but global. And President Trump appears to be comfortable with that kind of a world. So yes, I do think that this is something where rare earths play a critical role, but rare earths are difficult for just regular investors to invest in. I think it's much broader than that. This applies to all commodities, whether it's copper, whether it's zinc, whether it's nickel. And I think that that's what's interesting about where we are right now. 2025, you mentioned, Danny, that 2025 was an interesting year. It was. All the macroeconomic fundamentals told you should have been short copper. You should have been short industrial metals. Things did not look great in China at all. And yet, these commodities went up. So I think that the market has already been sniffing this out for some time.
I wonder, I was listening to Ricardo Hausmann on Bloomberg Surveillance this morning, he of the Harvard Kennedy School. He argues that you need to have first, a stable democracy and the people behind you before you can develop these economic assets. That's what he teaches at Harvard, economic development. Do you think that's the case? I mean, do we see that in the example that that China has laid out?
I think that's absolutely not the case, but, I'm not a Harvard professor, so maybe I could be wrong. What I would say, however, is that in the case of Venezuela, in the particular case of Venezuela and its oil reserves, I do think that some of the initial analysis about this regime change that President Trump has endeavored upon was a little bit overly optimistic. And we saw the market action yesterday. The market dismissed the notion that we're going to be swimming in Venezuelan oil anytime soon. Oil prices actually went up. So I do think that when it comes to Venezuela itself, the regime has been unable to boost production. So whether or not the U.S. can really help the regime now, extract more oil is up for a debate. I do think some American enterprises are likely to benefit. But I think from a global supply perspective, many of the initial enthusiasm front ran something that's going to take a long time.
And Trump did say yesterday that the U.S. government may reimburse oil companies who go into Venezuela to rebuild. Marco, it seems like a real willingness from this White House, whether we see that or not, but to spend in Latin America, be it with Venezuela and oil or in Argentina. The bond market didn't react to any of that. Should we start to think more about government deficits when it comes to some of this nation building and resource hoarding that the U.S. might embark on?
I'm not sure, Danny. I think that a lot of it can be done cheaply. So 50 billion here, 100 billion there is not going to really matter for the U.S. bond market. It's really, I would start selling bonds, and I would be worried about fiscal premium if the U.S. engages in the sort of nation building the U.S. did in the Middle East. We're talking trillions of dollars. But the administration and many of its allies over the weekend have clearly walked back this notion that the U.S. will be trying to turn Venezuela into Wisconsin, which is a very expensive endeavor. So that doesn't seem to be what's going on. It's more like supporting Venezuelan oil industry. It's supporting the Argentinian FX. It's not wide scale, like let's go in there and actually like perform plumbing on people's homes while we're rebuilding a country. That's not what seems to be happening.
Marco, in reading through your research, I see you have assigned a low probability that Taiwan is next, which I guess is reassuring. It may be, in your take, is it may be that Cuba falls next, but it's not really consequential for markets. Iran is really interesting. I saw betting odds that there's a 46% chance now that the Ayatollah has to flee Iran by the end of 2026, which is not insignificant. What do you think about the situation there?
That's it. That's why oil prices went up, you know, because whatever prospects of future oil supply coming out of Venezuela, and remember, Venezuela's never really more than just doubled its current production. So you're looking at maybe at best an extra 1 million barrels a day over the next 2 years. Yay, you know, that's not exciting. But what is exciting for oil prices is the potential rinse-repeat action of what we saw over the weekend in other countries. And no, not Cuba, it's really Iran. Iran is really the one that we need to watch for. There's a lot of chatter about the U.S. Getting encouraged by how absolutely extraordinarily successful this operation was in applying it to a place like Iran. President Trump did mention a couple of weeks ago, so over the Christmas and New Year break, that he would intervene if Iran continues to suppress protests, which are ongoing. So when you put that together with what happened in Caracas, you start thinking, okay, well, that would be an existential threat to the Iranian regime. Unlike the actual attacks by Israel and the U.S. last year, where President Trump was very careful to say that he was not interested in regime change. And so, yeah, I do think that...
I'm sorry to cut you off, Marco. We had to run to a commercial break, but it's been fascinating. I hope we can get you back on soon. Marco Papich there of BCA Research. This is Bloomberg.
The world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings...
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. Looking at futures that are fairly little changed. S&P futures, at least, very little changed here. NASDAQ futures climbing a little. We don't have the Dow Jones Industrial Average. I'm going to make sure to bring it up for you at some point because we did hit an all-time high on the DJIA on Indu Index yesterday. You see and hear the opening bell there on the New York Stock Exchange. Tortoise Capital ringing the bell. I guess it's an MLP that believes slow and steady wins the race. And then down on the NASDAQ, you've got Helus Pharma ringing the opening bell. Brought the whole family, which is always exciting. It's a milestone. You know, it's a bucket list. Have you ever run an opening or a closing bell?
I have not. I'm going to guess you have. I don't know. It feels right. Have you?
I have not. No. Oh. I've been on the podium and I've rung the bell, but it wasn't for the open or the close. It was just like a photo op.
Would you bring the kids?
Absolutely.
Yeah. You got to bring the whole family.
150%.
Yeah. I like that idea. Matt, I'm looking at some of the stocks that are moving here at the open. One of them is Vistra. Shares are up 3 1/3%. They're going to pay about $4 billion. With that, they're going to get 10 natural gas-fired power plants in the Northeast and Texas. The idea, help power AI data centers. So we are still in this realm that if you make an AI announcement, congratulations, your shares rallying that.
All right, NVIDIA, speaking of an AI announcement, put forth a slate of new products, including tools designed specifically for autonomous vehicles. The CEO, Jensen Huang, joins Bloomberg at 1 p.m. Eastern. Wow, the godfather of AI. I wonder if he's going to wear his black leather jacket.
Something will be wrong if he's not.
Yeah.
I like his alligator skin one. I hope he wears that.
Is it Tom Ford, I think? I'm not sure.
If it's Tom Ford, it's like $10,000, so good for him.
It is very expensive, but it costs less than one of his Blackwell chips. Now Vera Rubin, I'm sure.
Good point.
Joining us now is Principal Asset Management Chief Global Strategist Seema Shah. Seema, great to have you on. There's so much breathlessness, news around the removal of Nicolas Maduro from Venezuela, but it doesn't seem to have affected markets that much. How do you see it?
Hi, happy New Year, Matt and Danny. I think the market is getting it right. Typically, although it's obviously a very big headline, you rarely actually see that geopolitical events have a sustained impact on markets. Really, for that to happen, it needs to impact the fundamentals or maybe a narrative which is already in play. And so if you look back at previous ones where you have had a sustained market impact, it's probably because it's really hit oil prices, and then that's led to a surge in inflation, particularly if there is an elevated inflation backdrop. We don't have that right now. We've seen that the oil prices haven't really reacted as probably many people would have anticipated. And to us, this is more of a long-term story. It's something certainly to watch, but it's not going to be market moving, at least in the near term.
So in the meantime, we're trading just under all-time highs, Seema, and if you're the Dow, as Matt's been pointing out, you are trading at a new all-time high. For 2026, though, are we going to see another year where U.S. stocks trail international equity, or is it one where the catch-up trade has happened and it's unlikely to repeat this year?
So we're still in the camp that you should see the US market outperform, but by quite a small margin. We do think that there's a lot of opportunity within and across international markets, and actually across the whole asset allocation space. Specifically, I think Europe and Asia can really solve for a lot of things that investors are looking for. If you think about Asia, people want to still have exposure to technology, but they want something which is slightly cheaper valuations. And we know that parts of Asia are very much ahead in terms of tech innovation and AI adoption, of course. So that tends to be an area that we're seeing a lot of interest. The other side of it is, of course, is Europe, where you don't have as much exposure to AI within the specific tech companies in there. But of course, AI adoption is key. There are some really good players. But Europe does provide some diversification. So if you were to have some concerns about the AI narrative, that there could be maybe a weaker performance this year, then Europe tends to solve for that. So I think there's lots of opportunities. And then, of course, layer on top of all of that, that you still need to have strong fundamentals. And we're seeing that, for China, the economic story seems like it's improving. And certainly for Europe, with the advent of all this fiscal stimulus in play, we're expecting a stronger growth story. So on both sides, I think there are opportunities. It's just that when we're looking through the US growth story, and of course, the fact that it's still the leader in tech, we do think that's going to edge it forward a little bit more than the others.
Was it AI that drove these gains? If you take a look at President Trump's tweet this morning, he claims all of the U.S. markets are at an all-time high, just hit. And thank you, Mr. Tariff. Is it not, Seema, the tariffs that have driven us to these gains? And if so, why have other markets outperformed the U.S.? They don't have the same kind of tariffs on.
So I guess I wouldn't allocate the performance to tariffs. I think one of the things that you did see last year is that tariffs were not as high as many people had feared. And then that did result in this boost in confidence, and it helped the macro story be a little bit stronger. And certainly the same thing for international markets. The fact that tariffs were lower than feared also helped them move forward too. Now, to the point around it not just being a tech story, I think that is correct. I think we're expecting to see this broadening out in this very strong performance. We've already seen some parts of the market, across from financials to segments of industrials, do pretty well. We're expecting that to continue. And then also there's consumer discretionary, which in the first quarter of this year, as you start to see that fiscal stimulus flow through to households, that also has some good opportunities ahead. So it's not just about tech. We think that may still be the leader for this year, but we do think that there's a broadening out to other sectors, other parts of the market that can also do well.
We've been waiting for that.
Yeah, we've been waiting for it. Lots of people have been calling for it. There's been many false dawns, Seema. But what has changed already heading into this year is the market's willingness to bid up everything AI. That's not exactly what's happening. And in fact, the market has been punishing players who can't fund their AI investments on cash flow. If you're using debt, there's more skepticism applied to it. Seema, is it a cooling of the AI euphoria that we're starting to witness?
Yeah, that's exactly the right words I think I was going to use. It's a cooling of the AI euphoria. It's not necessarily a negativity, which is starting to weigh in, but you're seeing that investors are starting to differentiate between the ones within the tech space. To your point, which ones are going to be cash driven, which ones are having to go to the debt market. So we are expecting to see more focus on things like earnings growth, what is the cash flow, generally, how is the performance of these companies and what are their plans going forward, rather than just being a blanket, very, very strong performance across tech companies.
Hey, Seema, we're going to have to end it there. Thank you so much for joining us this morning. That's Principal's Seema Shah. All right, about 6 minutes, 7 minutes into your trading day, a check on markets this morning. And we are inching up towards new highs. We're less than 1%. I think it's something like at the close yesterday, 0.6% away from all-time highs. Will we get there this morning? Not a very strong performance, about an even amount of stocks trading up as down. NVIDIA leads the pack this morning, up 1.2% after many CES announcements from Rubin on trajectory to get out there along with autonomous vehicles. Alphabet, Micron, Amazon, Alphabet also at the top of the pile when it comes to contribution to the gains for the S&P. On the downside, Apple having another tough day. Those shares down 1.1%. Tesla shares are down 2.6%. I think there are some bad general EV sales out today, Matt. Is that right? You would know this more than me.
EV sales are slowing to the point of potentially shrinking, potentially falling. So
okay, that's not good.
I think the total car sales, Cox estimated a 2% gain 2025 over 2024, which is not huge.
So that's bad. And producer Will points out that you also have NVIDIA coming into the game with autonomous vehicles. So that's also probably bad for Tesla. Looking at some of the sectors that are moving today too. Yesterday was about oil, energy, and commodities. Energy, the worst performer. So some of that reverses down 0.5% at the top of the pile. Healthcare, materials, utilities, staples. So yeah, we are higher, but it's the safety sectors that seem to be carrying us there. Financials are also down after hitting a new record yesterday ahead of bank earnings next week, Matt.
All right, a lot going on, and I'm glad that some of it's centered around cars. Will be interesting to see that NVIDIA. It's not that they're going to make a car, right? They have a system that could rival that of Tesla. We'll continue to report on this, and Ed Ludlow is going to be focused on it in the next hour or in an hour and a half. Out of Las Vegas, out of CES. Hedge fund returns are starting to roll in for 2025. We'll take a look at that data next. How well have they done versus just buy and hold on the S&P? This is Bloomberg.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1, this is putting the between the rice air. Then make the 4 fingers curl, make sushi shape. Then touch this. 2, then turn. Now these 2 fingers, top of the bottom, make the sushi shape more beautiful. 3, then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
About 10 minutes into your trading day, going a whole lot of nowhere. S&P little change, but nearing an all-time high. NASDAQ also up just 0.1% as the Russell 2000 index dips into the red, down 0.1. Let's get you some of the top calls this morning, the analysts and what they have to say about individual stocks. First up, Baird, they're getting downgraded. They're downgrading rather Wells Fargo, KeyCorp to sell, saying that the recent bank rally has that valuation stretched with little upside left. They also see risk-reward turning unfavorable and say that there are not many catalysts on the horizon. KeyCorp down 0.4%. Next up, Evercore ISI, they downgrade Halliburton, citing heavy U.S. exposure as North American activity slows. The firm says that Halliburton may need to cut that exposure to protect margins, even at the expense of revenue. Finally, wrapping things up with Wall Street generally upbeat on AMD after its CES chip debut. JP Morgan says that management struck a confident tone on long-term demand. Morgan Stanley says that customer feedback suggests that AMD's product base is gaining traction. And just a programming note that AMD chair and CEO Lisa Su will join Bloomberg Technology at 11 a.m. New York time, sitting down with Ed Ludlow and gang in Las Vegas, Matt.
Yeah, and then Jensen Huang is going to join them as well at 1 p.m. So massive lineup out of CES for Ed, Caroline, and Bloomberg Tech. We are getting a clearer picture on hedge fund returns in 2025. Light Street Capital outperformed other stock-picking hedge funds, soaring more than 37% last year. For more, we welcome Bloomberg's hedge fund reporter, Hema Parmar. Hema, so a number of funds have done very well. We're going to kick it off with Light Street. They essentially doubled the gains on the S&P, which I know is not their benchmark, but...
Still, they're a stock-picking fund, so it's not, beyond the realm of imagination to see how they do compared to the S&P. Up 37%, this hedge fund is. Their third year of steady gains. Strong numbers, and really importantly, they've actually crossed their high watermark after a really difficult 21 and 22. They've made up those pretty bad losses from 22 and 21, made investors whole, and added to that. So any LPs that were in that, now happy. 3 years is not a bad amount of time to have made up a loss which was over 50%.
Speaking of really good gains, one of the stories this week that gained a lot of traction from the hedge fund team is Michael Platt's Bluecrest. You must feel horrible if you were one of those clients who had to get your money back from Bluecrest, because now client-free, up 73% last year. Huge returns.
Amazing. When you don't have to deal with external investors, you can take all the leverage you want. You can be riskier. You can be more concentrated. You can invest in things that are capacity constrained, where you can put a smaller amount of money to work, but really pocket all that gain. So there are great benefits to being a family office. And you see that in the returns, up 73%. Very impressive.
Yeah, and what, like 7,000% since they went
absolutely
private. So Michael Platt is killing it.
Yeah.
It's not the case for Bobby Jane. And I mentioned the S&P is not the benchmark for a lot of these funds, because Nishant always gets mad at me when I say, why wouldn't I just buy the S&P? I get that it's different, but what is he benchmarking? Because his multi-strategy hedge fund in his first full year of trading was up, but only 3.7%, which doesn't seem like very much.
Right. So when you look at the multi-strategy funds, I wouldn't quite use the S&P as a comparative benchmark, but 3.5% or 3.7%, not great for a multi-strat fund or really for any fund. Typically with the multi-strats, you expect about 1% a month. And we've seen the multi-strats, other funds, some of them do quite well, up high teens. But 3.5%.
Which is what, like Izzy Englander, Ken Griffin?
Well, Izzy, so Millennium and Citadel didn't do as well as they've done in the past. But if you look at D.E. Shaw, for example, they're up 20-something%. So that's a very strong return. The focus when you look at Bobby Jane is his first full trading year. In the first sort of year, 12 months from when they actually launched, they also were up about, I think, 5%. So the numbers since their debut haven't been that impressive. Keep in mind, though, it's expensive to launch a multi-strat firm the way he's done it. And so the costs may be impeding the return. Perhaps the gross return was more impressive, but it does show you how much of an impediment the cost of launching a very big multi-strat, a very complicated fund, can eat into return.
Is that very rare then to do a launch of that sort that's big and complicated? Do most people start with something smaller?
Historically, the multi-strats have started with one strategy, if you look back 20 years, and then they add on to a few strategies, and then adding on to it over time. Bobby's idea was, you can be a lot more thoughtful and intentional when you launch one fund that does many things all at once. The systems can work together. Investors can have a clear idea of what you're actually investing in. And so there are pros and cons, but it is a difficult way to launch a fund that is inherently very complicated. Multi-strats just are.
Hema, fantastic reporting. I'm looking forward to your continued coverage of what the hedge fund giants have been doing and did do in 2025. That's Bloomberg hedge fund reporter Hema Parmar. Coming up, Nancy Tangler of Laffer Tangler calls 2026 a time to reap as the bull market persists. She's going to join us next. You're watching Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on in the stock market on the second day in the first full week of trading for U.S. stocks. S&P 500 actually gaining on the cash trade, solid ground. 69.20 may be, Danny, correct me if I'm wrong, this could be the all-time high for the S&P 500. This morning, of course, President Trump said all U.S. stock markets have just hit an all-time high, and that was, of course, wrong for the S&P 500. They hit this level a couple of weeks ago.
You need 8 more points to be specific from where you currently are to get to an all-time high.
Okay, but it could happen. I mean, maybe his tweets are predictive. The NASDAQ 100 also hasn't hit its all-time high since, I believe, just before Halloween, but it's up now 0.6%, so it's also headed that direction at 25,542. Take a look at, so the small caps are down. The Dow Jones did hit an all-time high. Copper also hit an all-time high. The commodities have been fascinating to watch. NYMEX crude up 58.57, and Brent up as well, as we all follow what's going on in not only Venezuela, but also in Iran. NVIDIA is, I guess, the story of the day outside of geopolitics, because of Jensen Huang's statements at CES. Jensen Huang is going to join Bloomberg Television a little bit later, 1 p.m. if you want to see that interview. Lisa Su at AMD is going to join us at 11. So we have the biggest names out of CES joining Ed and Caroline on Bloomberg Tech. Ford Motor Company is doing a whole lot of nothing right now, but a number of car makers have come out with car sales numbers. GM seems to be doing the best in terms of 2025, up 5.5% over 2024. In general, the average is a gain of about 2% according to Cox. Vistra Corp up 3.5% after a purchase, I think a $4 billion purchase of some gas companies. And then Vertiv and Comfort Systems actually down 3% and 7% respectively because of, I guess, the Vera Rubin chips require less cooling, less power management, and these companies do that for data centers. So I gather, Danny.
Interesting. So some big moves there. Let's stick with tech, Matt, because Nancy Tangler, Laffer Tangler, CEO and CIO, is bullish heading into the new year, writing, if you are looking for earnings, look no further than the tech sector. Rumors of the death of technology are greatly exaggerated. Nancy joins us now. Nancy, so wonderful to see you in the new year. Happy New Year. You also write, time to plant, time to reap. 2026, year 4 of the sustainable bull market, will remain a time to reap. Okay, when I think of reap, I kind of think of selling and taking profits. I'm guessing you're saying that profits are going to keep coming, so stay in this market.
Happy New Year, Danny. Yeah, I am. I borrowed the phrase greatly exaggerated from Mark Twain, and the birds borrowed the turn, 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 time to reap, time to sow from Ecclesiastes. So all good things get repeated over time, and I think that's where we are in this market. Don't expect a straight line up, of course. We think there'll be a lot of volatility. You even saw it this morning with the NVIDIA announcement, where the stock sold off initially, and now it's on the rise. So I think you have to let investors settle in. They will accept the fact that this is a technology, AI that is in the early stages of transforming this economy. And an economy in transformation like we saw in the 90s is a powerful time to be invested in stocks.
You are invested in a specific number of stocks that you believe are going to outperform the rest of the market. Is the rest of the market, though, Nancy, going to catch up this year? Are we going to have a broadening out as so many people have been forecasting?
I think we've had a little bit of one, Matt, and we started to broaden out our exposure to some of the data center builders last year. Consumer discretionary became an overweight. Financials, but with an AI bent. That's our theme, old economy companies that are utilizing the new technologies. But I think you have to look at earnings. They are the mother's milk of stock returns. And it's still going to come from technology in a very big way. And we're seeing muted job growth. We call that productivity. It's been muted since 2020. We're 5% below the 2020 jobs numbers. But earnings have soared, and that's been led by technology, and it's going to be continue to be led by technology. Sorry.
Nancy, a little bit of a left field question, but I was just looking at a headline from New York Times Dealbook that Kalshi, the predictive market site, has hit $100 billion in annualized trading volume. There's been so much happening with prediction markets. You're a traditional active manager. Is there ever a point where you think, maybe this is something I should offer clients, a predictive market trading strategy?
That is from left field, Danny, and I like it. It's a great question. Well, so we do adapt. I mean, we're not dinosaurs. We launched a thematic portfolio last year that's focused on what we think will be the next level of transformative technology. So think space, robotics, nuclear, quantum. And then we have materials in that portfolio and particularly the materials needed to drive those technologies. So we do adapt. I think predictive products for our clients, we'd rather hire someone else to do that, which we do from time to time. So we are announcing a new partnership in our mid-cap strategy with someone you know very well, and we will do that when it makes sense for our clients.
With whom?
B Squared.
B Squared. All right, interesting stuff. Listen, Nancy, we're going to keep you with us because we're thankful that we have more time with you. Talk about not only the outperformance of your 5 for 25, but your 6 for 26, the one new pick that you're adding. Nancy Tangler of Laffer Tangler is sticking with us, and we're waiting for President Trump to deliver remarks to the House Republicans. This is Bloomberg.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. President Trump is set to address House Republicans at a retreat at the Kennedy Trump Center. Topics are expected to include the U.S. takedown of Venezuelan dictator Nicolas Maduro. Correspondent Nicole Killian from Capitol Hill.
Speaker Johnson told me that the situation in Venezuela will be discussed when he and House Republicans meet with President Trump later today. Last night on X, the State Department posted, quote, "This is our hemisphere, and the president will not allow our security to be threatened."
This is January 6th, and lawmakers who were on the job 5 years ago today will remember the attack on the U.S. Capitol. CBS's Scott MacFarlane.
House Democrats are going to have a public meeting with testimony and cameras, including testimony from witnesses and members of Congress who survived January 6th while hiding in the House chamber. Meanwhile, some of the pardoned January 6th rioters are marching the same march they did 5 years ago from the White House ellipse to the Capitol. They say it'll be peaceful.
Democratic Congressman and former Navy pilot Mark Kelly is speaking out after he was censured by the defense secretary over a video advising military members of their right to refuse illegal orders by the Trump administration. Kelly tells CBS Mornings it's an attempt to stifle free speech.
It's also hypocritical because what I said in November is the exact same thing that Pete Hegseth said years ago in 2016. Same thing, almost word for word.
Just in from California, party officials say Republican Congressman Doug LaMalfa has died. That narrows the party's advantage in the House to just 5. Everyone seems to have it. The CDC says flu cases are at their highest levels in the U.S. in 25 years.
Ada Hung, a mom from Cherry Hill, New Jersey, is among the tens of thousands across the country feeling
miserable. My nose started running. My head was killing me.
Dr. Martin Topia with Virtual Health says the rise in cases is partly blamed on fewer people getting vaccinated.
We're seeing a lot more admissions now.
And he says this year's shot fully protect against the new strains, but
it's still an effective vaccine
that he says will help lessen the severity and the duration of the flu. Stacey Lynn, CBS News.
Wegmans says it's now using facial... There's the language of love, and now the language of sleep.
Researchers at Stanford University say they've developed a new AI model called Sleep FM that can diagnose you in your sleep. It monitors brain and heart activity, respiratory signals, leg and eye movements, and more. James Zoe is the study's co-senior author.
Just from one night of sleep, we can actually predict risks for over 100 different diseases years before they're officially diagnosed.
And that includes dementia, heart and kidney disease, stroke, and other conditions. Jennifer Kuiper, CBS News.
At the Vatican, Pope Leo has just put an official end to the Catholic Jubilee year on this day of Epiphany. He symbolically closed the ornate bronze doors to St. Peter's Basilica. The Vatican says the year's celebrations drew more than 30 million pilgrims to Rome from 185 countries. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Tuesday morning from the Bloomberg Interactive Brokers studio in New York City. We're also streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. Start off today strong with get the latest on Venezuela. Jimena Zuniga, Bloomberg Latin America geoeconomics analyst, get the latest on what's happening in Venezuela. Caroline Hyde, B-Tech co-anchor on the Consumer Electronics Show. It starts off in earnest today. The rest of the week, 150,000 people out in Vegas looking at all the new gadgets. It's always a fun time. Ann Berry, founder and managing partner at Threadneedle, get her thoughts on these markets. Then Scott Levine, Bloomberg Intelligence senior energy analyst. He's saying, hey, if you're thinking about energy plays on rebuilding Venezuela, take a look at some of the oil field services stocks. Those might be of interest. He'll break it down for us there, so we'll get that angle there as well. Right now, let's kick this whole thing off with John Tucker and a Bloomberg Business Flash. John.
All right, you guys, this Bloomberg Business Flash brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost, global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. The major averages pushing higher. You'll probably see the S&P 500 hit an intraday record in just a minute or so here. Dow Jones Industrial Average, that's adding to its records. Tech shares pushing higher. You have SanDisk, Microchip Technology, Micron Technology among the best performing individual stocks. SanDisk, one of the standouts, it was down about 3%, I think, yesterday. Right now, up just about 23%. And that AI theme is going to remain in focus after we had a bunch of updates from CS in Las Vegas. Meantime, Patrick Armstrong at Plurimi Wealth remains focused on broader macro policy and keeping a risk-on stance in the markets.
But you've got a policy right now that is creating big deficits, big growth, and you're probably going to get a Fed chairman put in place who's much more accommodative than the current Fed, and then you get the sugar rush scenario in the second half of 2026.
Right now, SPX, S&P 500, up 28.6930. The Dow up another 151 points, adding to its record, 49,130. The Nasdaq 181 points higher. 1:15 Wall Street time. Bloomberg's Ed Ludlow is going to sit down with the CEO of, Jensen Huang, the CEO of NVIDIA. So,
or the godfather of AI, as Dan Ives likes to call him.
So they had a positive update on the rollout of the new processor, the Vera Rubin chip.
Nice.
And you all know who Vera Rubin is.
No.
Yes.
Do we?
Christine Aquino does. The female astronomer. And she was one of the astronomers who looked through her telescopes for a very smart individual, and discovered that the angular momentum of galaxies were not behaving the way they should be.
Really?
So you say, so what? So that led to the discovery of the stuff that makes up most of the universe. We don't know what it is. It's called dark matter. That's who Vera Rubin was.
Okay.
Thank you, John Tucker.
Yeah. So anyway, I geeked out there. We checked the markets and other stuff, right? I was a science major. Right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
All right, John Tucker, thank you so much. We appreciate it. Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Christine Aquino. Christine, what are you looking at?
All right, Paul, we're going to take a look at NVIDIA today, of course. The ticker NVDA, those shares are up 2%. And we did hear from CEO Jensen Huang at the CES trade show yesterday. He's saying that the company's highly anticipated Rubin data center processors, they're in production, they're on track for deployment. They're looking at sending them to customers in the second half of this year. So digging more into this Rubin chip, right? Again, it's named after astronomer Vera Rubin. It is NVIDIA's latest accelerator. Apparently, it's 3.5 times better at training and 5 times better at running AI software than its predecessor, the famous Blackwell chips, of course. And NVIDIA, well, Jensen Huang also saying that the company has seen strong demand from customers in China for the H200 chip. Remember, that chip is currently under consideration by the Trump administration, whether they're going to be able to sell it to China. So that's still pending, but Jensen Huang saying that there's already demand lined up for that chip. So sounds like all positive from NVIDIA yesterday.
All right, good stuff. Let's talk about the utility sector.
Absolutely, Scarlett. Let's take a look at Vista, so VST, and those shares are up nearly 4% today. So they're making a play. It's M&A Tuesday, I guess, for this company. They're going to be paying $4 billion for 10 natural gas-fired power plants in the U.S. Northeast and Texas, which were previously owned by Cogentrix Energy. So this move essentially seen as a play by Vistra to accumulate power assets because they're going to try and meet the demand for power from data center buildouts. And so the acquisition, of course, gives them access to 3 major U.S. grids in New England, Texas, and a system that spans from New Jersey to Chicago. So this move is actually the latest of a series of acquisitions that they've made over the past year. They paid $6.8 billion for a nuclear fleet in 2024 and $1.9 billion for 7 gas plants in May. So this is the latest M&A move for them to meet that AI data.
Day 2 in dealing with this Venezuelan fallout, because markets are open for a second day, and we didn't get much of a reaction yesterday. It was kind of a muted reaction.
Yep.
It continues to be kind of a muted reaction as we make sense of everything. So let's bring in Jimenez.